while the Gift Nifty is indicating a slightly higher start for the Indian market. Crude prices gained for the fourth straight week, with Brent trading at around $86 a barrel. Gold prices rise to monthly highs in hopes of the Fed cutting rates soon. The Union Budget for 2024 and the first for NDA 3.0 will be presented in the Lok Sabha on the 23rd of this month, with the budget session getting underway on the 22nd. Titan's first quarter jewelry sales get hit by weak sentiment and high gold prices. Dabur and Marico see an uptick in volume growth, while IndusInd Bank's deposits and advances grow about 15% on a year-on-year basis. The Labour Party is back in power in the United Kingdom after a landslide victory in the elections. In France, the left-wing coalition brings a surprise to thwart the far-right, with the new Popular Front set to win more seats, although likely to fall short of an absolute majority. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. A lot about markets, a lot about political landscape as well. We'll discuss all of that for you. But first up, let's take a look at the Asian markets. Now, it's quite a mixed picture for the Asian markets. Remember, in terms of the Japanese market, they are lower because wages in Japan fell 1.4% on a YY basis in May. It's the 26th straight decline that we are seeing in that particular market. So Nikkei is lower right now as we speak. The Taiwanese index up 1%, but the Hang Seng is seeing some cuts, 0.5% lower. The Chinese market continues to see a slide. The Chinese CSI 300 it has seen the fifth day of losses and is lowest level since February as well. So it's a mixed picture for Asian markets despite the handover that we got from the Wall Street as well. The Gift Nifty, that'll come up for you on the screen because that is the one which will indicate the moves for our own markets. It's absolutely flat right now. That is the rate that we are getting right now. Of course, it'll keep updating and we'll keep getting you more updates in that one. But that is Gift Nifty, a slightly lower start for the Indian markets. But in the US markets, Wall Street ended higher on Friday as the latest jobs report reignited hopes for rate cuts from the Federal Reserve. The S&P 500 added over 0.5% and the tech-heavy Nasdaq gained 0.1%. Both the indices reached all-time highs during the session and ended at records. Dow Jones also gained 67 points, and for the week, the S&P climbed nearly 2%, Nasdaq advanced 3.5%, and the Dow Jones added 0.7%. Treasury yields dropped following an unexpected rise in the unemployment rate. The US economy added slightly more jobs than expected in June. The non-farm payrolls increased by 206,000 for the month, better than the 2 lakh Dow Jones forecast. CNBC's Rick Santelli is here with the details of the jobs report.
Non-farm payrolls expands 206,000. And that, of course, is benchmarked against the rearview mirror, which right now is going to be revised. Minus 111,000 is the 2-month revision. And if we look at the unemployment rate, he nailed it. Our buddy nailed it up 0.1% from 4% to 4.1%. 4.1% is the hottest, and we have to go back a ways. Last time we were at 4.1 was November of 21. So you have to go back now to October of 21 to find a higher rate, which was 4.5. Now, let's look at the hourly earnings from a month-over-month perspective. Up 0.3%. That's 1/10 lighter than the rearview mirror. It's exactly as expectations. And just to put a face on it, last month was up 0.4, as I said. The month before that, of course, April, was only up 0.2. So you can see we're kind of running right in between. And if we look at the year-over-year perspective on hourly earnings, 3.9%. That dips below the 4.1% in the rearview mirror. And let's look at the way back machine. 3.9 equals April of 21. To find a lower number than that, you have to go back to May of 21 when it was 2.3%. Now, let's consider average hourly work week, 34.3. That's exactly as expected, exactly as last time. And if we continue to kind of look over the last 12 months, it's the highest frequency, 34.3. The labor force participation rate, always important, 62.6%. Economists and analysts had it right. That's what they were expecting. It is 1/10 better than our last look at 62.5. 62.6 is the best level going back to just April when it was 62.7. If you recall, last month, of course, was the dip to 62.5, and that was the lowest level going all the way back to January of 23. And finally, U6. Okay, U3 is the unemployment rate that moved up to 4.1. U6 is the underemployment rate, and that remains at 7.4%.
All right, let's also listen into some important opinion coming in from the market experts on June jobs report and if this report will prompt the Federal Reserve to start cutting interest rates.
I think the number is on balance, a good number, not a great number. 206,000 is not a sign of an economy that's falling out of bed. They did some adjustments looking backward, obviously. And finally, I also say that the labor force participation rate is also a sign of an economy that's sort of coming back into balance. So if I were looking at this number as a policymaker, I'd say, this is pretty good news. The economy is not falling out of bed. We don't need to rush to cut to deal with that side of the mandate. Let's measure closely on inflation. And I would argue, frankly, September, while the market thinks it's the time to go, I think it's more 50-50. It's also possible to wait for a bit more data to be certain about the inflation continuing to slow. So we've seen signs of slowing, but from a high level. So from my standpoint, good number, not great number, not sure that it's the all clear that we must cut, that the Fed must cut in September.
Overall, we think that things are setting up for 2 cuts this year, one in September, one in December. What we're seeing is the economy is cooling, but it's cooling slowly. That's very much the theme in this jobs report. I sort of echo what I was saying about it. I think it's significant they downgraded payroll job growth by 111,000 for the prior 2 months, and also that drop in temporary workers. These are signs that the economy is just gradually decelerating here. And we're also seeing signs that, despite a tight labor market, it's still tight with an unemployment rate of 4.1%. We're not seeing wage growth come out of that. So next big headline will be next week's CPI report. We think we're going to be down to a 3.2% year-over-year number. And that should push the personal consumption figure down from 2.6 to 2.5 year-over-year. So we're edging ever closer to that Fed's 2% target. And I think that's enough progress for the Fed to begin to cut in September.
The headline number for June was higher than we expected at 206,000, but if you look at the private sector number, which was meaningfully lower, and a lot of job growth accounted for by healthcare once again, with some weakness in the cyclical sectors, I think it's a soft landing kind of report. It, I think, will reassure Fed officials that the labor market has continued to rebalance. Wage growth also has come down. We're at 3.9% now for average hourly earnings. And the more important report is probably next week when we get the CPI for June in terms of what the Fed's going to do. But I think this does support the idea that they will cut relatively soon. And we continue to think September is the most likely.
Okay, with that, we'll step into a break. Up next, we'll tell you how these global cues could impact the Indian market. Stay tuned for that.
Freedom from the paradoxically unsustainable subsidies that government sometimes employs to promote sustainable technologies. How sustainable technology can be promoted by unsustainable subsidies, not only in India, the world over. Our friends from the media, I am sure they are aware of the chaos which is there across the world as far as subsidies for electric vehicles, etc. are concerned. And I say to customers who may be listening in right now, that we all assure you, we are with you through the life cycle of this product, through all the use cases of this product, through all.
Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Well, in the last segment, we spoke about the global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Very good morning to both of you guys, and happy Monday to you. Sudarshan, will it be a happy Monday for the bulls? What is the market setup looking like today?
Morning, Sonal. So we are starting the week which will see beginning of the earnings season, expectations from the upcoming budget which is scheduled for July 23, and budget session will be starting on July 22 and will be ending on August 12. Now if you talk about the market on Friday and the last week, it was a mixed close for both Sensex and Nifty, ending flat on Friday, and that's after a big move in two of its biggest contributors. Reliance Industries was the biggest contributor on the upside, while HDFC Bank dragged Nifty the most. And at the end, Nifty recovered more than 150 points from day's low to close with minor gains. For the week, it was a fifth session of consecutive gains for market, and that's the longest streak in 2024. Nifty recorded gains of more than 1%, while Nifty Bank was up 0.6%. For Nifty, major contribution came from Reliance Industries and the IT pack, while for Nifty Bank, ICICI Bank was the top contributor on the upside. Just if you talk about the HDFC Bank, in the first three sessions of last week, it was up 5%, and in the last two sessions, it fell almost 7%. On institutional front, we saw buying numbers from FIs in 3 out of 5 sessions last week. Talking about the global cues, US market closed Friday's session at day's high, IT stocks surged, and Treasury yield fell after the labor market data. Unemployment rate, though, has risen to 4.1% June from 4% that it reported in May. On domestic front today, we'll see stocks reacting to their business updates, and those are IndusInd Bank, Titan, Marico, Dabur, Nykaa, and Adani Wilmar. And watch out for shipbuilders. Last week, we saw gains up to 33% from names like Garden Ship, Cochin Shipyard, and Mazgaon Dock. This week, we'll have earnings season kicking in. TCS is reporting on July 11 and HCL Tech on July 12. Lastly, GIFT Nifty is indicating a subdued start for today.
All right. Thank you so much, Sudarshan, for all those cues. Well, let me go across to Mangalam for all the cues from the F&O space now. Hey, Mangalam, morning.
Good morning. So consolidation with a positive bias, that's what we've been looking at in the markets, right? So the Friday's range actually tells you exactly that. On the day where, we saw a big decline come in, one of its large heavyweights, the Nifty's day low was close to around 24,169 and the day's high was 24,363. Again, coinciding with the broader range that we've been talking about, 24,150 to 24,400 on the way up itself. It was a bit of a tug of war between index heavyweights. So if you look at, the intraday charts side by side, for both HDFC Bank as well as Reliance, you would see that last hour there was a big uptick that we saw in Reliance, whereas HDFC Bank closed at the lower end of trading session with a cut of almost 4.5%, near 5%. But despite that, the FIs actually bought in the cash market. So there was a purchase of close to around 1,250 crores in the cash market. The DII sold 1,650 crores. There was some profit booking by the FIs in index futures as well. So near 500 crore worth selling is what we saw. 10,000 long contracts being unwound, 2,500 short contracts being unwound as well. And as a result of which, the long exposure, which stood at closer to 4 lakh contracts, has now come down marginally to 3.84 lakh contracts, with long exposure still at 84% itself. Active Nifty options as well. Told you about the range that we're talking about. 24,200 put has a premium of what? 60 rupees. So 24,150 is an important support. On the way up, 24,400 call is equally active as well, with a premium of almost 93 rupees, telling you 24,400 to 24,500 would be the resistance zone. The one stock to watch out for will be HDFC Bank. After a big decline that we saw on Friday, the stock is very close to the 1650 mark, which also is the 20-day moving average, and the 1650 put on HDFC Bank is the most active. So do we see a bounce back from here or not is the big question. Also, keep an eye out on GNFC. We told you that GNFC is likely to enter F&O ban, and that's exactly what's happened.
Okay, all right. Thank you so much for all those F&O cues, Mangalam. Let me go back to Sudarshan. He'll list out all the stocks which will be in focus today. Sudarshan?
So we'll start with all the FMCG companies that have reported quarterly business updates. Starting with Titan, jewelry domestic operations have grown 8% year-on-year. High gold prices, lower wedding days and weak sentiment have impacted demand. Marico domestic business posted modest uptick in underlying volume growth. Consolidated revenue grew in high single digit, and operating profit is expected to grow slightly ahead of revenue. Dabur saw QOQ improvement in demand trends with rural growth picking up. Consolidated revenue growth seen in mid to high single digit, and operating profit is expected to grow marginally ahead of revenue. Nykaa cons revenue growth to be around 20 to 23% year-on-year. Fashion industry in India continues to face challenges. That's what company says. And fashion revenue growth in Q1 is seen around 20%. Adani Wilmar Q1 volume growth was at 13%. It saw strong growth in food volume and says company that growth will persist. IndusInd Bank deposits rise more than 3%. Advances were up 1.5% sequentially. Bank of Baroda, both deposits and advances fell nearly 2% sequentially. AU Small Finance Bank deposits were down 0.5%, while AUM was up 3% sequentially. Union Bank deposits and advances see minor jump sequentially. Info Edge overall billings growth is steady and similar to Q4. Standalone billings were up 11% at rupees 579 crore. Tata Motors has given JLR update. Q1 wholesales were up 5%. Retail sales were up 9% year-on-year. Tata Steel India Q1 production was up 3%. Netherlands production was up 11% year-on-year. But BBC reports new Labour government is working on a better deal for the Port Talbot Steel Works. These are the stocks that might be in focus today.
Okay, all right. Thank you so much, Sudarshan, for joining us with the list of stocks on our radar. With that, let's move on because it's that time of the year. Heavy rainfall since the early morning hours in Mumbai has resulted in severe waterlogging and the disruption of public transport services as well, bringing the early morning commute to a halt. Sandhya is joining us on the phone line to tell us more. Sandhya?
Good morning, Paul. So this is, as you rightly mentioned, that time of the year, and this is exactly the time when every Mumbaikar questions the tax they pay and the facilities they are provided with, because whether it's BMC, whether the BMC is ruled by any party, the situation every year is the same. It's waterlogging, halted trains, diverted routes, and submerged areas. Now let's talk about what has happened since yesterday. So since yesterday, last night, it started raining heavily in Mumbai and the entire Mumbai metropolitan region. Today morning at around 5:15, the central local rail services came to a halt because of waterlogging on the tracks at Bhandup station. It was only at 6:40 in the morning that the services for the fast trains, for the slow trains were restored, but not the fast trains. So that bit, the train part, remains problematic and inconvenient for the commuters. The Western Railway staff claims that the trains on Western Railway are running smoothly. Now let's talk about what's happening in terms of public transport, road public transport. So best buses on 10 routes have been diverted. There are 10 routes diversion for the best buses. Other than that, what's the traffic situation? There's a massive traffic jam on the Western Express Freeway, anyway a notorious patch. And the waterlogging situation has made it even worse. There's traffic jam in parts of eastern Mumbai as well. Now, Sonal, let's talk about the waterlogging situation. The usual low-lying areas, whether it's Govandi, whether it's Bhandup, Gandhi Circle, Sion, Kurla, Andheri subway, Malad subway, all these areas, despite all the preparations by the BMC, remain problematic. So what happens, BMC every year puts water pumps in these notorious patches so that the water logging situation can be brought under control ASAP, so that as the day will proceed, the water pump situation will become more and more clear. But for now, another important decision, so keeping the rain situation in mind, BMC has declared holiday for the first session schools. In Mumbai, schools are running two batches. One is 9 a.m. and another one is 11 a.m. So holiday for all the schools, BMC, public, private, all the schools. There's a holiday for the first session, 9 a.m. session. What about the 11 a.m. session? That decision is yet to be taken by the BMC. So as and when that announcement will happen, we at CNBC-TV18 will inform our viewers. But for now, the session for 9 a.m., that session, all the schools has been declared a holiday. For another important thing here, Sonal, unfortunately, this time also there was no prior warning from the IMD as far as the 24 hours forecast is concerned. It did not highlight any possibility of this kind of a rainfall.
That's right, Sandhya. It's a story that we talk about every year. It's the same thing that happens. But thank you so much for bringing us all those details. We'll keep coming back to you for more updates on this one. With that, we'll slip into a break. When we come back, we'll talk to you about all the updates from the financials and the FMCG companies for Q1 FY25 and a lot more. Stay tuned.
Of this product. सर शायद इसको हमारा बजाज की गारंटी ऐसा कह सकते हैं हम We want you to witness today our interpretation of the avatar of freedom. And I'm sure you will like it, sir, because it offers freedom from petrol imports, freedom from petrol emissions, freedom from petrol prices, freedom from range anxiety and charging concerns, because it's not only the world's first CNG motorcycle, it's the world's first hybrid CNG motorcycle technology.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's focus on some business updates now, and especially from the FMCG space. There are a handful of them. Mangalam is joining us now. Mangalam.
Good morning. So let's look at Titan first. If you look at Titan, you know, the jewelry business, domestic operations grew just about 8%. Even though Akshaya Tritiya witnessed a double-digit growth, high gold prices, lower wedding days and weak sentiment impacted demand. So as a result of which, the street is expecting some decline in the Titan stock price, largely because its competitor, Kalyan, reported a 29% growth. Additionally, the company said that studded growth was moderately lower in comparison, so that impacts their margins as well, which the company anyway did not see going beyond 12%. None of the other sectors as well inspired a lot of confidence. We did see some 5 to 7% sort of EPS cuts come by from brokerages. The other one that I'm looking at are Marico and Dabur. For both of them, the important part is there has been sequential improvement in demand and volume uptick as well. So the quarter for Dabur saw QOQ improvement in demand trends, especially with rural growth picking up. Consolidated revenue for them seen in about mid to high single digit, with India recording mid-single digit volume growth. 90% of their business, which is home and personal care along with healthcare, grew in high single digits. So that's a positive. And if you look at Marico as well, you know, the domestic business posted modest uptick in demand, and Parachute coconut oil posted low single-digit volume growth. But despite that, we saw improvement in Saffola oils, and the company said this improving trajectory is likely to continue with higher domestic volume growth and higher realizations as well. Amidst all of this, for both Dabur and Marico, the operating profits grew ahead of revenue, indicating some sort of margin improvement. So see positivity on both Dabur and Marico, well as a big red on Titan.
Okay, all right. That is all about the FMCG updates. Thank you so much for getting us up to speed with that, Mangalam. Let's now get you the latest updates on the France election. The country is set to face a hung parliament with no party gaining an outright majority in the second round of parliamentary election. Early projections show that France's left-wing New Popular Front coalition won the most seats in the second voting round of parliamentary elections. CNBC's Charlotte Reed is here with the latest updates.
Just 4 weeks ago, President Macron called for a snap parliamentary election after the far right made some huge gains in a European election. He said it was time for a moment of clarification for the country, and that moment has come. But it was a shock result because the far right didn't do as well as expected. If anything, they came third in the result of the second round of the parliamentary election, and none of the polls had predicted that. What came first is a left-wing bloc that's composed of the Socialists, the Greens and the far left, La France Insoumise, and they said that they want to be in charge of the next government, but they don't have an absolute majority, and that is the key here, that none of the blocs really have an absolute majority. President Macron's camp that came second is also very far from the old magic number of 289 seats, and the far right that came third are also very far from that number. So now it opens a period of uncertainty and uncharted territory, because some people are talking about potentially the need of a coalition to reach that 289 number majority. And this is not in the French tradition at all, unlike other countries like Germany. So the parties will start talking and try to reach an agreement, but some parties like La France Insoumise, the far left party, have said they do not want to negotiate with President Macron's party and other centrist parties. So we have to wait and see. We don't know who could become the next prime minister. The current prime minister, Gabriel Attal, said he will put his resignation to the president tomorrow morning, but he's ready to stay for the foreseeable future while a new government is put in place, and also because of some challenges for the country, like the Olympics starting in just a few days. So all this is really uncharted territory for France. There could be a period of instability, but hung parliament, for many market observers, said it's the least bad result of what we could have expected tonight, because a far right or a far left absolute majority would have been more dangerous for the market and for France's economy. So a hung parliament could be good news, but it certainly still opens a lot of questions.
All right, that's the update from France elections. Of course, we'll keep getting you more updates in this one. With that, it's curtains down on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant, with me my colleague Nigel. And I have to say, Nigel, the rains are finally here.
Yeah.
It's pouring, and it's been pouring since last night, almost non-stop. And if you're watching this, we'll of course try and update what's happening across the city through the course of the morning. But I think there are updates coming in from the BMC, other authorities, etc., because of waterlogging and other issues in many parts of the city. So stay safe. But I think it's also good news that rains are finally here, much awaited.
Well, that's right. And a lot of children will be happy because schools as well are shut, at least for the first half of the day. But just stay safe out there. And, my experience, I came from Bandra to Lower Parel, and it was clearing out, or it was absolutely clear. So hopefully we're bracing for a better day ahead, at least a safer day.
Looks like it. We'll see how it goes. As I said, we'll sort of update you in terms of, the authorities, lots of BMC, the IMD, railways. I mean, this is a city which is on the move as always, especially on Monday morning. So we'll tell you what you need to know. But let me just kick it off with the markets, right? Because that's, I think, the other part where there is so much which has happened from where we left off at 3:30 last Friday. The big data point which markets were awaiting was the US jobs data. And that had the potential to move markets. Well, it did. Now, the headline number was in line. I'll get to the specifics in a bit, but the details were softer. And that triggered lower yields, and it triggered a rally in US stocks. The number is 206,000 new jobs added in the month of June. This is in line with the 190-odd thousand, slightly above the 190-odd thousand, but largely in line. So it's a solid headline number. But as I said, the details were softer. The prior 2 months number for the US jobs were also revised downwards to about 111,000 jobs. And temporary workers, there's a category called temporary workers. That category saw a plunge of 49,000 jobs. That is, that plunge is being talked about quite a bit because of one reason. In terms of order of magnitude of a plunge, it is the largest we've seen since the recession of 2008 in the US, the global financial crisis. Now, unemployment rate, that has steadily risen to about 4.05. I'm saying steadily risen because the low was 3.43, not last month, but the cycle low was 3.43. And from there, we are plus 4%. So what does all of this mean? You sort of take into account Fed Chair Powell, who's consistently, actually Fed Chair Powell was, even when data in the first half, the first quarter especially, was coming in hot, he was saying, we'll wait for it. He was looking through all of it. We heard from him early last week, where he once again said that he's expecting a period of disinflation. You take those comments, you take the CPI number, you take the labor market data, and it kind of raises the odds for a rate cut. Well, maybe in September, the first cut. So we'll see. The market reaction, of course, was pronounced. The 10-year, actually not just the 10-year, but across the yield curve, there was a decline. 8 basis points for the benchmark 10-year bond yield. Dollar index is now under 105 levels. So the dollar index fell about 0.25%. And US stocks, as I said, rallied. The Nasdaq was up about 0.9% or so. That is, a pretty good outcome. Of course, tech and growth, etc., rallied harder because of the fall that we saw in yields. And this is a point that I was making on Friday as well. You need a weak data, but you don't need a dismal data, because the dismal data is bad for stocks. You need, the data just weak enough, which brings forward the prospects for Fed rate cut. And I think that is essentially what this has done. All right, oil prices, they fell about 1% or so. They're about just under $87 a barrel, which now sort of gets us to the local sort of levels here on the Nifty. Now, for the Nifty, the daily upper Bollinger Band stands at 24,457. And I think that is the first target, the immediate target, which the Nifty will aim towards. And of course, above that, the equality level is 24,900. The immediate support for the Nifty are the hourly averages. The 24,176 level, to my mind, is the first sort of the support, a trailing support, which you should keep if you're being long. For the Bank Nifty, low of 51,996 is important. That should not be broken if the up move has to be sustained. On the way up, a break of 53,357 signals fresh up move. We'll see what happens. There is, of course, a fair bit of rotation which has been underway. Markets have done very well. I just want to sort of finish with this last plate of graphics, which tells you how far we've come. We are now looking at the budget. By the way, we got the date of the budget as well, which is the 23rd of July. It's a Tuesday. And I think now we can really firmly start to focus on what expectations, etc., could be. Out of that, the market will start to preempt some of that. We'll try to pre-position some of that because it's the first time we will hear from the finance minister, the new government, in terms of the vision for the next couple of years, not just this year. But, you know, over the last 1 month, from the day of the election result, these are the changes which you must keep in mind as you trade these markets. We've had a fantastic rally by any yardstick. Nifty 11%, Bank Nifty 12%, mid cap 16, small cap 20, and the micro cap index is up 24% from the close of the 4th of June, which is the election result. Seems like a distant memory. The GIFT Nifty will come up on your screen and will give you an indication of how we are likely to start. About 6.5, 7 points. So absolutely quiet kind of a start is what we are looking at. Nigel.
Well, that's right. You know, in the CME Fed tool, the probability of getting a 25 basis points rate cut from the start of the week, it was around 64%. It ended the week at around 77%. Yeah. So we're in a better place in terms of global cues as well. And what do the FIs do? Well, they've been going on for the last few sessions that they've been adding long positions. They've been adding long positions. Now, for the first time, in the last 10 sessions, there was some unwinding of long positions. So you want this market to get some shorts into the system. There was some short covering as well. But net, the absolute number in terms of the net long positions, that's come down. They continue to remain net long in percentage terms at around 84% odd. If you look at the FI positioning as well as the client positioning, well, they're on two opposite ends of the spectrum. With the FI as well, that number was almost at around 4 lakh contracts. That's come down to around 3.84 lakh contracts. And the client net short positions is at around 2.8 lakh contracts, both of them at near record levels. Well, I'm looking at the options data as well. And one strike that was very active is a 24,200 put. And that's a good sign. All of last week, even when the markets were seeing some profit taking, that one was seeing a good amount of addition. Open interest up by close to around 18 lakh shares on, and the premium at around 70 rupees. Which brings us to the levels. You know, you're seeing writing at around these levels. And even in Friday's trading session, we bounced off that mark, the 24,169. So just as a reference point in the near term, the high that we saw on Thursday and the low that we saw on Friday. Otherwise, the markets are in a broader range. If you look at the options data, you look at the various technical levels as well. On the downside, it appears 24,100. That's important. On the upside, 24,550. But there are three big pillars of the markets. And at least as of now, there are two of them that are firing. The tech index. You have yields that have cooled off. There is optimism now in terms of a cut that comes about. And also, if you look at it, you are getting into the earnings season. And there is hope that we have bottomed out in terms of IT. The earnings cut cycle is over. And in the last 1 month or so, you'll see that the tech index actually has been a relative outperformer. You know, if you take a little longer duration, in fact, it's up more than 10% odd. So the tech index, that part of the market is doing well. So that's what those constituents in the Nifty will be supporting. The next one is Reliance Industries. It hit that 3,000 mark at the end of February. And from there, well, it moved more or less sideways. Now, in the last two sessions, from that, that 3,000 odd mark that we saw in the month of February itself, well, that appears to be breaking out a little bit. So now you have the 20 DMA that's at around 3,000. And it appears that Reliance Industries is ready for a fresh breakout. So that's going to be an important constituent because for the last 4-5 months, actually, it was moving more or less sideways. But the important one is going to be HDFC Bank because in the last two sessions, it's down by 6.5% odd. And that closed at a crucial level, which is the 20 DMA. So 2 out of the 3 triggers are firing. HDFC Bank, can it get support at around this 20 DMA? That's going to be very, very important and see a bit of a bounce from these levels. So we start off more or less flattish. You get support coming in from the tech space. Reliance Industries appears to be breaking out, yet again, while HDFC Banks, that's crucial. Can it see some kind of support after the recent correction?
I think it's going to be a critical one because of the weight that it enjoys on the Nifty and, of course, everywhere else. Let's get you some calls now. This is Lawrence Belanco of CLSA who is weighing in. He says that while technology stocks continue to dominate investors' attention regionally, he would like to flag the recent breakout in the Asia Pacific Banks Index as well as the relative setup that points to banks' leadership over the regional benchmark. He also notes early signs of large-cap Indian stocks coming back to life after months of underperformance versus the mid-cap sector. He goes on to say one potential catalyst for this relative improvement in large caps over mid-caps could be emerging market fund buying to reduce their underweight in their position.
Well, let's get you some money market views as well. B. Prasanna of ICICI Bank says the recent spate of weak data flows from the US, like poor ISM survey and higher unemployment rate, lends credence to the view of moderation in economic strength. He says the dollar corrected marginally against all currencies and incoming election results in France may create volatility in the euro. He says the rupee is stuck around 83.5 and will remain in a very narrow range. The range he's given is 83.35 to 83.65 per dollar, as an active RBI will manage the range on both sides.
All right, on bonds, Prasanna says that global bond yields had a volatile week as central bank officials continued signaling cautious and data-dependent approach despite economic prints surprising on the downside. He says domestic markets, however, remain stable almost daily, buying from foreign investors. He expects consolidation to continue with the 10-year benchmark bond yield expected to trade in a range of between 6.95 to 7.02%.
Well, we have a lot of stock-specific action to track for you. Get it out in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at Tata Motors, Dabur, Marico, AU Small Finance, and Info Edge. All of them will be reacting to positive news flow. And we're split down the middle today. We have 5 in the green and 5 likely to be in the red. Tata Steel, Titan, IndusInd Bank, Nykaa, and Bank of Baroda.
All right, well, that's a whole lot on our hands to take note of, but let me welcome in Sonia as well. Sonia, how's the rain, how are the roads, and give us an update.
It was crazy. It was really crazy. Hi, morning, Nigel. Morning, Prashant. It was flooded everywhere, especially in the suburbs, right? In Juhu, where I live. It was like someone was telling me, like, take out your boat and, go out there boating. I mean, it was crazy. People were wading through ankle deep water. And women, children going to school. I mean, of course, we're laughing about it now because we have certain privileges because of which we can reach our offices. But it was really a sorry state of affairs. And I think all the construction, the infrastructure, the green cover, losing out on the green cover, all of this has caused this havoc. But it's scary to think that just one evening of rain can cause this.
I think a few hours, I think it was 5 or 6 hours or so. But Prashant, we're lucky Sonia's made it. So let's get going.
Did you guys, by the way, last night hear the thunderstorms?
Yes.
I mean, it was something.
Yes.
I mean, really, it rained.
I think at around 1:32 a.m., it was really loud.
Very, very loud.
Because I sleep like a baby and I woke up with that.
But somebody needs to take responsibility for what's happening, right? Especially with the kind of just urbanization that we're seeing in Mumbai. I mean, with one day of rain, if this happened, just imagine if you have a month of rain. The infrastructure is really falling through.
Absolutely. And, something which we continue to discuss here. Jeffrey Dennis is joining us meanwhile. He's independent markets commentator. Jeffrey, great to have you with us here. Good morning. Thanks for joining us here. Jeffrey, we got the date for the budget here, the union budget, which is still, mind you, an important event. Although I think because of GST, taxation-related stuff is now kind of out. We don't see as much on that front. But it's still an important document, especially now because the elections are just over a month ago, and we've got the new government, and for the first time we'll hear their sort of thinking on economic policy. And this government is different because it's a coalition government now, not a majority government. Your thoughts, Jeffrey, in terms of how important this is going to be from an investor perspective?
I think it's going to be very important because if there's one flaw, I think, in the Indian story for equities, and in particular for foreign investors, they will be very concerned, I think, about the budget deficit, which is running, close to 6% per annum. And therefore, with the new government coming in, the foreign investors will want to see what the priorities of the new government will be, what they can do to obviously maintain the growth of the economy, which remains, of course, very strong and is a big positive factor for the markets, but at the same time, try to rein in the budget deficit here because it's frankly too high and it represents a risk factor. And I think that without making too tenuous a link by saying this, but the extraordinary result of the French elections today, where it was the left-wing coalition that won, not the right-wing coalition, I think increases fiscal risks in France, and therefore, by definition, there could be some fallout across Europe on the fiscal side. So it becomes very, very important, I think, for the new government to introduce a budget that is fiscally responsible and looks towards a pattern of lower deficits as we go forward.
I think this time around it could be a bit more easier, right, for the government, given that we have the large RBI dividend, the strong tax collection. So perhaps there could be this fine balance between the fisc and growth that the government can manage. So hopefully, fingers crossed. Jeff, thanks a lot for being with us on the channel. You know, this is a very interesting market we have on our hands because we've seen a stupendous performance up until now. But from here on, how is India stacked up compared to its global peers? Do you think emerging markets like India can continue to outperform its peers like the S&P 500?
Yes, I do. I do think they can. I wrote something about a week ago, just before I guess a bit more than a week ago, just before the end of the second quarter, that showed that all of the gains in the emerging market index this year on a percentage point basis, were accounted for or have been accounted for by two markets: Taiwan, which is now up around 31% in dollar terms this year, and India, which is up 18% or 18 to 19% in dollar terms. So I think that is something which a lot of foreign investors have been on the back of. I think people have wanted to be long in India. We all know what the usual caveats are, notably, of course, valuations. But I think it is still a challenging growth world where investors are looking to, increase their exposure, I think, gradually to EM. I would expect to see India continue to do well and to attract foreign money. Now, what are the risks? The budget's a risk. And I think the other thing we've got to keep our eye on again now is that oil prices, having fallen by $10 a barrel until not many days ago, have now put back about $5 on that. And therefore, that will have an impact on inflation. Of course, will have an impact on the trade balance. So there are risks out there, but I'm overweight India. I would be overweight in an EM portfolio. And it's really been, frankly, one of the standout performers in emerging markets this year.
All right. Hi, Jeffrey. Good morning and good to see you in. Nigel on this side. I recall the last time we chatted, one of the risks didn't really play out. That was with regard to the continuity at the center. And we have the Modi government that's back. So that's good news. We'll watch out for the budget risk as well as the oil risk. Since we've spoken enough about the emerging markets, I wanted to understand, how do you expect the Fed to go ahead from here on? We've got various data points in the last week or so, and they're indicating some softness. At least that's what the market believes. And that's why the probability of getting a rate cut now in September has moved up to around 77%. Are you in the camp that believes maybe we get 2 rate cuts before the end of this calendar year?
I believe we will. I believe we will get a rate cut in September, and I believe we'll get one in December as well. I had for a long time had hoped they would cut in July, but I think the case for July is quite thin now. But the data is definitely softening. Most notably, the payroll, as you said earlier in the show, the payroll revisions that came through of prior months that came through in the June data, the pickup once again in unemployment to 4.1%. The ISM data was weak. The retail sales numbers have softened up a little bit. So although I don't expect the inflation numbers this coming week to really bring the year-on-year rate down much, but I think they'll bring the shorter term 3 and 6 month annualized rates down. So I think we are really lining up now for a rate cut in September, and I think there'll be room for a rate cut in December as well. And this is why, quite honestly, why I'm still very optimistic about equities worldwide, including in the US and including, frankly, in EM. But if you're going to get broader appreciation of emerging market equities from here, you need a softer dollar, which we really haven't seen. And this is why the distortive effects of India and Taiwan have been so dramatic this year. But eventually, if the Fed does cut rates further and into 2025, the dollar will eventually come down. That will help EM. But I see 50 basis points of cuts between now and the end of the year.
Okay, 50 basis points rate cuts between now and the end of the year. Got that. Jeff, always a pleasure speaking to you. Thank you and have a great week ahead. That's the word coming in on the markets. They're overweight on India, and they believe that their emerging markets could continue to outperform developed markets going forward. Let's slip into a quick break. Plenty of stocks to talk about, so we'll take it straight to the top 10 list of stocks in just a bit. Stay with us. Welcome back to Bazaar Morning Call. Hope you're having a relatively dry morning of trade. It's not so dry out here in Mumbai. Lots of flooding across several regions, so stay safe. But for now, lots of things to watch out for. Of course, Nigel and Prashant have spoken about that. But just to put into perspective, earnings season kicks off this week. So that's going to be the big trigger to watch for our markets. You have TCS and HCL Tech on Thursday and Friday. And the big question we're asking now is, are we at the end of the IT earnings downgrade cycle? And is that the reason why you're seeing a pickup in IT stocks? So that's going to be the big trigger. Of course, the union budget date is also out. It's the 23rd of July. And now we know that, you can expect something positive, maybe some populist measures as well, because there is a larger RBI dividend this time, stronger tax collections that may make it easier for the finance ministry to balance both the fisc as well as growth. So that's the big event to watch. Flows were mixed on Friday. So you had DIs selling, but FIs bought about 1,240 odd crores. And the monsoon progress is important to track. The latest we hear is that after over a month, finally India has turned into a surplus rainfall situation. India has now received rainfall 1% above normal, and only 6 states now face a rainfall deficit compared to 10 states earlier. So that's good to hear. But of course, the situation on the ground is still very tricky for citizens and people who are commuting, but otherwise monsoon progress is good. But let's do one thing. Let's also talk about individual stocks and get our entire research team to join us now. First up, I'm looking at Tata Motors this morning, because the numbers that they came out with in terms of JLR sales, Jaguar Land Rover sales, look pretty decent. So the Q1 wholesale numbers went up about 5%, but the retail sales data was a growth of around 9%. And if you look at the China JV, remove the China JV of the situation, the retail growth was actually 15% that Tata Motors has seen. Brokerages continue to be bullish on Tata Motors. JP Morgan has an overweight. They have a target price of 1,115. Macquarie has an outperform. They have a target price of 1171. Macquarie says that the product mix has surprised positively. So that's something that they like. So all in all, I'm going with green there.
Okay, all right, going with green on Tata Motors, but I'm focusing on Tata Steel, and they came out with their provisional update for the first quarter. So just to run you through the numbers, the India business did pretty okay. Best ever Q1 sales is what they have delivered. On a year-on-year basis, there was some growth. On a sequential basis, it was a bit of a degrowth because they had a bit of a maintenance shutdown. And also there's a seasonality factor that plays out. Netherlands operations, well, they have improved because that blast furnace has restarted. So both on a sequential basis and on a year-on-year basis, we did see some improvement out there. Well, on the UK business, it's more or less flattish, but they've mentioned that the operations at the blast furnace 5 at Port Talbot, well, that's been shut down on expected lines. But the reason I'm going with red is because suddenly there is some uncertainty post the UK elections. We have the new Labour government that's come in there, and we had a couple of MPs that said now they're working on a more favourable deal. More favourable deal, all probably will be for the labourers, not for the company. And, when we had the Conservative government that was there, they had agreed to a £500 million package. So is that in a bit of a soup? Is that going to be reworked? For the time being, the management says that they're in conversation with the new government as well. But that could be a bit of a niggling worry. So that's why going with a tinge of red on Tata Steel. But let's hop across to Mangalam. He's here to tell us about Titan as well as Dabur. Morning, Mangalam. Titan's numbers looked a little bit disappointing.
That's right. So the stock was down about 2% on Friday as well, ended at the lower end of the trading range on a day when Kalyan Jewellers actually did well after their update. But Titan, the domestic jewellery operations grew just 8%, and that's something which the street will not like. Akshaya Tritiya saw a double-digit growth, but there were high gold prices, lower wedding days, and weak sentiment overall impacting demand. That's not all. The buyer growth, this is a metric that Titan tracks very closely, that was in low single digits. So telling you that most of the growth came by on account of higher gold prices and not increased buyers. Studded growth too was moderately lower in comparison, impacting their margins, and that's likely to be lower than what the street is factoring in this time around. And there was no support coming in from other verticals as well. Eye care grew just 3%, the growth businesses grew just 4%, Carrot Lane too grew 18%, with watches and wearables growing about 15% itself. So see a deep red on Titan today. Importantly, just watch out for Dabur. Out there, the stock has been an outperformer ever since the budget was, ever since the election results were announced and the last quarter numbers. This quarter's a little better than that. They said that QOQ there was improvement in sentiment. Consolidated revenue growth for the company will grow in mid to high single digit, with India recording mid single digit volume growth. The main verticals of the company did a lot better, with operating profit likely to grow faster than revenue, indicating some sort of margin expansion. So see green on Dabur.
All right, Mangalam, thanks very much for that. More business updates. IndusInd Bank should be in focus as well. Abhishek has got details here. Abhishek, morning.
Morning, Prashant. So I'll begin with IndusInd Bank. Loan growth on a YOY basis is perhaps the weakest that you are seeing in last 9 quarters, and sequential loan growth is the weakest that you are seeing in 12 quarters. So deposits are up 14.8% YOY and 3.5% sequentially, which is better than the industry average of 12% YOY and a decline of 1.5% sequentially. CASA ratio is at 31 quarter low of 36.7% versus 39.9% in the same quarter last year and about 37.9% in the previous quarter. This is in line with the industry trend that CASA for all the banks is on a declining trend. Retail deposit is up 15.75% YOY and about 2.9% sequentially. Now the loan growth has come in at 15.5% YOY and about 1.4% sequentially. So YOY it's the weakest growth that you are seeing in last 9 quarters, and sequentially it's the weakest in 12 quarters. Credit deposit ratio that shrunk sharply by almost 200 basis point on a sequential basis. Talking about Bank of Baroda, weakest deposit and advances growth that you are seeing on a sequential basis in last 12 quarters. They have lost massive market share. Deposits are up just 8.8% YOY and they have declined by 1.6% sequentially. Now the advances growth is at just 8% YOY. Remember that the last fortnight data of RBI showed a 15.5% YOY growth in advances, and they have declined by 1.7% sequentially. Domestic retail book is up 20.9% YOY and 3.5% sequentially. Now credit deposit ratio that shrunk when compared to both YOY and quarter-on-quarter number as well. AU Small Finance Bank, there is a merger that had taken place, so the YOY numbers are not comparable. Deposits declined, and for the first time in many quarters you are seeing their cost of funds improve. So deposits have declined by 0.5% sequentially. Cost of funds have declined by 7 basis points on a sequential basis. AUM growth is at 3.5% sequentially. CASA ratio has improved for them, coming in at 33% versus 32% in the previous quarter. Back to you.
Okay, thanks a lot for that. Well, let's hop across to Mangalam now to talk about Marico and Nykaa. Mangalam, over to you.
Well, for Marico, it's no different from Dabur. It's actually improvement sequentially, and that's likely to reflect in the stock price today as well, where the domestic business posted a modest uptick in underlying volume growth. Parachute did well, low single-digit volume growth. Saffola oils, volumes have recovered out there as well to mid-single-digit. Value-added hair oils continue to be a bit of a pain point, but the company believes this will improve in the next quarter. Consolidated revenue as a result of which growing in high single-digit. More importantly, the company believes that going forward, both realizations and volumes are likely to pick up. And for Marico as well, operating profit grew higher than revenue, which implies margin improvement. For Nykaa, the beauty business did well, so the overall revenues will grow around 22 to 23% led by the beauty vertical, which saw revenue growth of a similar amount, up to around 22-23%. The problem is that the fashion industry continues to face challenges. So fashion revenue growth in the first quarter was around 20% with GMV at mid-teens, and this was supposed to be the growth driver for the company. So that not growing as well may have the street a little disappointed with Nykaa's update, even though the beauty business has done well. So mild red on Nykaa and green on Marico.
All right, Mangalam, thank you very much. Lots on your plate this morning. Info Edge is the other one we want to focus on. Rima is here to tell us why. Rima, morning.
Hi, good morning. So Info Edge has also come out with their Q1 update, largely in line with expectations. So the standalone billings have gone up by 10.8%. This is a pickup compared to the 5.5% recorded in the whole of last year. Recruitment billings continues to remain modest, 8.5% on a year-on-year basis in Q1. Real estate billings, though, have slowed down. In the prior quarter in Q4, it was above 25%, but in this quarter, it's come in at 10.3%. But according to Nomura, these are largely in line. Standalone billings up 10.3%.
Okay, thanks a lot for that. Well, here's a quick recap in case you missed out on any stocks. Stocks with positive news flow, there's Tata Motors, Dabur, Marico, AU Small Finance Bank and Info Edge, while stocks with negative news flow, Tata Steel, Titan, IndusInd Bank, Nykaa and Bank of Baroda. Lots of stocks to chat about. We'll take a quick break. When we come back, Amrish Baliga will join in for some fundamental stock analysis. Stay tuned.
Dr. Saleen, you know,
welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. As promised, let's get some fundamental analysis going. Amrish Paliga, independent market expert, joins us on the show. Hi, Amrish. Good morning and good to see you win. Well, what's your view on Titan? You know, the stock was weak in Friday's trading session. It seems the street was sniffing that maybe they're going to come out with a weak operational update. And that is the case. But what do you do with the stock if it pulls back a little bit? You know, their growth is lower in comparison to a peer like Kalyan Jewellers, which has grown quite well. Even their mix is not very, very favorable. But a quality franchise, if it dips, what do you do?
I think the best is behind Titan. Because if you go back in the last possibly 2 decades, you can easily say that the first 15 years of the last 2 decades, I mean, they had the first mover advantage. They were the only ones which were the national players. But then you see in the last 5 years what's happened. I mean, there are so many regional and smaller players who have actually become national players. They come out with their IPOs. They've expanded in a major way. So clearly, there is a decent amount of competition in that space, which was not there earlier for Titan. So looking at that, I think the best is behind them, but it doesn't mean that they will start underperforming in a major way. But the sort of a move which we have seen in the past so many years, I don't think we'll see a similar sort of a move going ahead. So my suggestion would be if there's any sort of a decent bounce back in Titan, I think it's time to lighten.
Okay, time to lighten your positions in Titan. Got that. Well, you know, I also wanted your thoughts on Nykaa, because over there, the beauty business is doing very well. It continues to chug along, but the fashion business is under pressure. What do you do with the stock now?
Good morning, Sonia. I think as far as Nykaa is concerned, I think, I mean, any sort of an upside should be utilized to book out. Because even if we are saying that one part of the business is doing decently well, but I mean, where is it showing in the bottom line? Because bottom line, although it's positive, but it's still very disappointing. Because sort of a promise which they showed when they came out with an IPO as, I mean, the only or among the very few showing a positive bottom line. But then, I mean, it has to grow, and that's not really happening. So, I mean, Nykaa, again, I'll not have in my portfolio, but if it's there, I would utilize any upside to exit.
Amrish, hi, morning. Bajaj Auto, Amrish, that CNG bike launch, we got all the details, etc. with the opportunity to, of course, interact with Rajiv Bajaj. Will play out a snippet a little later. But your thoughts on the stock from here?
See, I mean, this stock, it's not just because of the CNG launch. I mean, overall, we've been seeing that the sales are doing decently well. And I think this CNG launch, which is unique in that space, I think will be some sort of a catalyst for the stock. So I think, I mean, one should continue to hold on to this because overall, I'm decently positive on two-wheelers. And I think this development is clearly positive for Bajaj Auto. So just hold on for the time being.
Okay, all right. Well, Amrish, I wanted to ask you about actually Tata Steel, you know, because they've come out with their operational update and no worries on that front. However, in the UK, there has been a change of government. And now the new government's sound bites are now sounding very, very favorable with regard to the terms that were agreed by the old government. If there is any change, that could be perceived negative. In fact, I'm looking at a note coming from Investec, and they're saying because of this entire transition from UK as well as the Netherlands operations towards green steel, it'll come at a big price, which will, you know, put a lot of pressure on the balance sheet, and it could cause the India operations to support that. That's the broad gist of the note. What do you do with the stock at around 175? Till now, the stock has ignored any kind of bad news.
No, that's true. But then a change of government and possibly change of policy, I think, will be the biggest risk for Tata Steel. And we've seen that the UK operations has been a gauntlet around its neck for a very, very long time. And that's not going to change too soon. So I think we'll have to keep a close watch. But because of this development, the political change in UK, I think that will clearly have a pressure on the stock. So I really don't see too much of an upside. I mean, earlier we had a price target of about 210. But looking at the change scenario, I mean, I would possibly utilize, I mean, any sort of an upside to levels of, say, about 185, 190 to book out.
You know, change of guard, right, in the UK. Elections out of France as well. And the second round happened yesterday. And, you'll hear if you're reading, financial media or otherwise, you'll hear a lot about it because it's a stunning reversal of fortunes which has happened. So, round one happened a few days back.
Absolutely.
We'll have some visuals coming up. But basically, in round one, you had the far right in France, which looked like it was the single largest and most dominant party. And it was, everybody else, the centrist parties, the leftish parties, they all kind of got together to try and block the far right. But what has happened in round two, because these are exit polls, and of course, I think the final results will come out later during the day. What has happened is that it's the far left which has essentially won round two and is set to emerge not within a majority, but with less than the majority. So I think the outcome is not different. Even with the earlier outcome after round one, it was looking like a deadlocked parliament with little clarity for the next year and a half or so, because next elections in France can't be held before at least middle of 2025, according to rules. So it kind of raises, elections are going to be a constant theme. We've had ours. This is the UK one, there's the French one, and of course, the big one in November, which is, of course, the US elections, where we're wondering if the current president will run for another term. He's, of course, trying to appease to his constituency, but I think elections world over, all the way to the end of the year, remain a very, very important theme to really track.
Okay, well, let's get the spotlight now on the banking space, the Q1 business updates that have come through for several banks, right? We have Vishal Goel, who is the head of India Research and Banks Analyst at UBS Securities, joining us now. Vishal, always great speaking to you. Thanks a lot for joining in. There were a whole host of banks that came out with numbers. So let me ask you, what was the pick of the pack for you? Where have you seen the strongest growth? And, what do you see as the way forward?
Hi, Sana. Yeah, thanks. See, I think this quarter is seasonally weak quarter, right? As we have seen in past as well. Typically, you see a decline in loan growth, especially even gross absolute advances typically decline in this quarter because you see a lot of March effect in the balance sheets of banks as well. Therefore, I think we are not surprised by the decline in the data in the June quarter. Yes, if you look at the trends among players, it is still very mixed. Most of the players are showing decline in the numbers on a QoQ basis. For example, even PSU banks actually have mixed kind of trends. Some banks are still seeing growth, but most other banks are showing even YOY trends are now slowing. Like for some of them, it's going to mid to high single digits on growth. And I think the whole loan to deposit ratio issue, which is pressing banks to maybe slow down a bit. Plus, if you all remember last year, RBI tightened the unsecured lending as well. So I think all that is now slowly reflecting, but a lot of it is seasonal in my view.
A lot of it is seasonal. Okay. Just one follow-up there then. Some of these banks, larger banks like IndusInd Bank, right? The loan growth has been the weakest in the 9 quarters if you look at it. Quarter-on-quarter deposit growth barely about 4% odd. For investors who perhaps have these stocks, what is the view now? Are you cautious on the stocks, or do you think this is just, a temporary slowdown that we're looking at and one shouldn't be too concerned?
Yeah, so I think, I'll avoid stock-specific comments, but I get what you're trying to ask. If you look at in the light of valuations and underperformance, which banks actually have been, doing, there is reasonable valuation in this space, but it's like we're going through a very benign period, right, in terms of asset quality. As you recall, maybe in 2003 to 2008, that kind of period we are right now enjoying as banking system. Credit costs are below all historical averages, or even closer to bottom actually. So to that extent, I think there would be some deterioration in the metrics, which is what we've been also highlighting, that credit cost would start inching up for the entire system. Banks which are exposed to certain segments like microfinance, which is currently showing slightly early stress compared to other segments, would have credit cost coming to them before others. Second, I think net interest margins also have seen a decent rally in the last 2-3 years. A lot of it is because of external benchmark lending rate, floating rate book which got repriced, while the CASA ratio has only gone down. So we would see some moderation in NIM and continue to see that. When the rate cut really happen, that's where we will see more NIM contraction for the system as a whole. To that extent, I think if you look at ROA trajectory, we are estimating it to go down for almost everyone. But that does not make the system uninvestable. I think so. They will have to be more selective about what we are buying, especially in the light of underperformance and reasonable valuation. There are opportunities.
Okay, all right. Hi, Vishal. Good morning and good to see you in. Nigel on this side. I'm looking at the PSU banking names. Bob is almost at your target price, while SBI, I think you have a sell rating out there. But besides the fundamentals, the street is speculating that maybe that stake sale that SBI has in Yes Bank could be coming to the market. If that happens, how does this change things? At current reckoning, at current price, it's around 20,000 crores odd. So how does it change things for SBI?
Yeah, it doesn't. Again, I think maybe I'll give you a more segmental, view of us. Now, I think all this near-term stake sales or monetization of profits, they all help capital ratios, right? Market is, I think, already very, very encouraging in terms of raising capital. So we are not in a period where banks can't get, capital from the external investors. So it just, I think, helps in the near term to delay any potential capital raise for any bank, actually, whoever is doing monetization. Beyond that, I think, as I was explaining, that we have to realize that we are in a very benign asset quality environment overall, but things can't get any better from here in terms of credit cost. And
Correct.
that's the risk we would want to keep highlighting, that we have to start looking at players who are very good at underwriting, and therefore they can outperform on credit cost, as we enter into at least increasing delinquency, I can say, system.
Okay. All right. And you're leaning more towards, I think, the private banks in comparison to the PSU, just going by the target price and the ratings that you have out there. HDFC Bank, that's the big one, because of the technical factor. The stock has seen a fair bit of a rub up. Now, in fact, that news is mostly in the price, and in August, we'll see that reject that takes place, a few $1 billion will come in. But what's your view on HDFC Bank? Post this update that they gave out, the street is a little bit concerned about the CD ratio still remaining at elevated levels. And if they go to, get that in line, it could have an impact on credit growth. What kind of growth numbers are you factoring in? And do you believe that's at risk?
Anitila, sorry, I'll not be able to comment stock specific. As I was explaining, we are not allowed to do that. I think the way to think about the entire banking system and private space, one, look at the underperformance of Bank Nifty. And if you look at what is in the price also. So that is, I think, one thing to look at. Second, sustainability of returns in Indian context, which is, still room to penetrate, and we have a healthy nominal GDP trajectory. So I think if I put all these three together, I feel that private banking space is, very interesting from a long-term investing point of view. In the near term, in 3 months, 6 months, you would see, technical factors also taking over. You would see the quarterlies clearly impacting, the valuations. But I think I would look at more medium term, trends and potential to generate ROE and compounding.
Vishal, we'll chat more, but great to speak with you. We'll speak once again once we have the sort of, all the results, etc. in the bag, and then we can get a full comprehensive picture and take from you. Thank you for joining us this morning. We've got, 30 minutes to go for the pre-open session to kick off, and there's a lot at hand. Anuj is now standing by with what he's seeing and what he's making of things. Anuj, good morning.
Morning, Prashant, and good morning to everyone, especially those in Mumbai who have braved the rains and made it to office. Friday's market just tells you the kind of trend that we are in. Sensex chart, there was Sensex weekly expiry, and just look at that 3 p.m. move. It just took off, and most of it was because of Reliance. There was a speculative news on Reliance, and that led to that surge intraday, especially towards the end, and that really helped the bulls. But that's what the market is doing. Something or the other is bailing you out almost every day. The other point to talk about is HDFC Bank. On Friday, it collapsed. It was down about 4.5%. Keep in mind, the US market resumed trading, and the HDFC Bank ADR was down almost 7.5%. So I think there's still a bit of a differential which HDFC Bank might have to capture, about 2.5%. So I think that will be something which would be a bit of a negative for the market. The Nifty finally made a lower low after making higher low for 8 days in a row. I've been presenting the table. Friday's low was 24,168, which is lower than Thursday's low of 24,281. Now, Nifty needs to cross 24,401 to resume the trend. The other highlight, of course, was the announcement of the budget date. 11 trading days left, and the big question is whether we'll have a pre-budget rally or a pre-budget sell-off. Anyway, let's come to the levels now. On the Nifty, we have the first resistance at 24,401, the all-time high, and then 24,500 based on the monthly options. Support comes in at 24,150 to 24,200, which is Friday's low and the option zone. And the bigger support is somewhere on the 10-day exponential moving average, 24,100 to 24,150. The Bank Nifty has been absolutely untradeable, and I think that still remains the case, especially given how HDFC Bank has spoiled sentiment once again. The PSU banks are looking relatively stronger. There's a range on the Bank Nifty, 52,350 to 53,000. And if you want to extend it a bit, then 52,000 to 53,500 is the range. I don't know if the quote of the day is ready or not. If it is, it will come up for you. Yesterday was MS Dhoni's birthday, and so I chose a line from him. The process is more important than the result. And if the process is right, more often than not, the result will be good as well.
Okay, great learning from a legend there. Thanks a lot for that, Anuj. Thanks for telling us about the markets as well. Let's take a quick commercial break on that note. On the other side, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness, or do you think it's also a cultural issue where, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there, and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem?
Okay, welcome back. So we've got the market, which is going to kick off. I mean, the pre-open at least will kick off in a bit from now. And we'll kind of pick up on some of this stuff. Amrish, over the last couple of weeks, we've chatted. You've liked things like Bayer Crop. You've liked things like PG Electroplast, Bata, Action Construction. Stocks are flying, I mean, right? I mean, one is, from the time that you think you start to work on it, and till the time that you get to actually doing something about it, usually prices are much higher. What are you liking from this list, or any new ideas that you have on your mind and you've already bought?
No, frankly, Prashant, nowadays, whatever you recommend, it flies. So you really can't take the full benefit of that because the markets are such. But among the stocks which you just mentioned, Bata is still on my major buy list. Again, I mean, that's not really moved too much from the levels I recommended. I mean, I had a price target of about 1,900. And looking at the way consumption is going to improve from here on, I mean, we are already seeing FMCG pack showing better numbers than expected. So I think overall consumption is going to move up. Looking again at, the sort of monsoons which we are witnessing, I think that's going to improve even the rural consumption. So among the stocks which I had suggested earlier, I think Bata is still a buy with a price target of 1,900.
Okay, Bata is a buy. But just to reiterate, right, today you have a lot of numbers that have come out. There's Titan, there's Marico, there's Dabur. Between all of them, you wouldn't pick any stocks to buy for the longer term?
Yeah, I mean, like I said, FMCG is one segment where I see extremely good performance coming, or at least over the next couple of quarters. Clearly, Marico and Dabur are clearly on my buy list.
Okay, Marico and Dabur on the buy list. Got that. Mitesh Thakkar and Sudarshan Sukhani join us now this morning. Mitesh, Sudarshan, good morning. Sudarshan, let me start with you actually. It's been very strong for the market so far, but we have two big triggers to watch. There's, of course, the union budget at the end of the month, and this week you have the, tech heavies, the big tech companies that will be coming out with their numbers. How are you approaching the markets this week?
Yeah, good morning. See, the numbers are not very relevant to me. I don't think this market is going to react adversely to any kind of numbers. So the only reaction would be either positive or neutral. So that part is separate. And of course, we all understand the union budget can affect the market in so many different ways, which I cannot explain or even understand. So that news event is significant. But till then, I would expect this market, which is in a strong uptrend, to continue that strong uptrend. These dips are essentially buying opportunities. On Friday, we saw that 150-point dip in the Nifty was a buy. So that's what you have to wait for. You can't run and buy gaps on the upside. Wait patiently for these 100, 150-point declines, and they come 2-3 times a week. Go long in the Nifty, avoid the Bank Nifty, and keep your good quality stocks, even for trading, on the long side only.
Got that. Gentlemen, good morning. Good to have both of you here. Mitesh, what about you? How would you approach things?
So, morning, Prashant. Last week I was talking about the fact that we could see some cool off given the fact that we're extremely overbought on the intraday charts. And Anuj was highlighting how the market was continuously making higher lows. And finally on Friday, I think, we got that profit booking dip, which is what I was expecting. Having said that, my idea is that the markets, basically are now most likely going to enter some kind of a consolidative phase. I would look at 24, 100, 120 zones very closely. If we don't break below that, it will be a sideways consolidation. In case we start dipping below that, then we maybe will decline to about 24,000, 23,950, and it will be slightly mildly, pullback kind of a consolidation. So, but I think the uptrend might take a breather here, and we might see 3 to 4 days of sideways activity.
Okay, what about individual stocks? What are we looking at this morning? Mitesh, let me begin with you.
Yeah. On the individual stock side, I have all buy calls, Sonia, given the fact that, there's some kind of sectoral churn going on. And I think FMCG was showing some spark after pharma, in the last few days. FMCG on Friday came back very strongly. So I have a buy on HUL with a stop at 25.20 for targets of 2605. ITC is a buy with a stop at 428 for targets of 445. Apollo Hospital, after some correction, is now showing signs of an bounce back again. So buy here with a stop at 62.85 for targets of 64.50. And Bajaj Auto is a buy call. Keep a stop below 9,500. Look for targets close to about 99.
And Sudarshan, what about you?
Yeah, even I have a buy on HUL. And the stop is 24.80. It's a positional trade also, not just intraday. Apollo Hospital is a buying opportunity. The stock is already in an uptrend, but even then you can enter at this point with a stop under 6,100. My only intraday short is JK Cement, where you can consider going short with a stop above 42.80. And finally, L&T is a buying opportunity. Again, a positional trade also. Buy with a stop under 3,500.
Okay, all right, gentlemen. Good getting those trades and getting that view as well as far as the market indices go and specific stocks. We'll come back to you for more later. We'll take a quick commercial break. We are back. We get you the pre-open rates. We'll also have Aditya Khemka, fund manager at Intred Healthcare Portfolio PMS, to discuss the trends in the pharmaceutical space. I mean, stocks there are doing well and lots happening. Stay tuned.
as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to
Welcome back. You're watching Open Exchange live from the CNBC-TV18 Motilal Oswal studio. We just have about 10-15 minutes before, oh no, actually it's 9 a.m. So just the pre-opening rates are going to kick in right now. Let's get some F&O cues going. Chandan Taparia joins in. He's a derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. How are you feeling about the market today? Do you think this momentum can continue? And what are the levels to watch?
Good morning, Sonia. Thanks for having me. So we have noticed that index has been forming high rise from last 7 weeks and supports are gradually shifting higher as bulls are dominating well and every small decline is being bought. Technically speaking, index has formed a bullish candle on the weekly and the daily chart and every small decline is being bought, which clearly indicates that base of the market is shifting higher. If I look at the couple of database, the put call ratio is holding well, volatility is hovering below 13 marks. We have seen a sharp decline in the India VIX from all the way of 32 to 13 levels in last 1 month. So lower volatility with rising put call ratio and higher market base indicate that overall bullish stance could continue. However, we need to keep in mind 2-3 factors. First, the mechanical indicator like RSI has gone to 70, which might indicate overbought, but till Nifty doesn't break the immediate support, no need to worry about the same. If I look at the FI's long short ratio, that recently made high of 88. But again, the liquidity from SIP, DIs and positive global sentiments are supporting that as well. So if I combine all, till Nifty holds about 24,000, any small decline could be bought for an upside move towards 24,752, new high of 25,000 marks. Now looking at the Bank Nifty index, we have seen some consolidative move in the last few trading sessions, but supports are intact. And we believe that till it holds above 52,000, overall bullish bias could continue for an upside move towards 53,350 to 53,500 level in this rate sensitive index. Now looking at the stock wise, first trend is buy on TVS Motor. A major trend of the counter is positive. Nifty Auto Index itself is doing well, but TVS Motor has witnessed some corrective move in last 12-13 days. It has negated its lower highs, lower lows on the daily chart and formed a bullish candle with put writing activity. So expecting a sharp recovery towards 225.50, one can buy with support of 2380 level. Second trading idea, that is buy on SBI. We have positive on the selective PSU name and positive on the entire Nifty CPSE, whether you talk about PSU, railway, defense, shipping, power, energy. So here we like to go with SBI. Major trend is positive. It has given a consolidation breakout of last 4 weeks. We have seen a decisive close of 860. So one can buy with support of 844, and stock has potential to extend the move till 900-905 level. Last trading idea, there is buy on ONGC. We have seen some built up of long position, consolidation breakout on the daily and the weekly chart. It has given the highest weekly close. So breakout of pole and flag is also visible on the weekly scale. So one can buy with support of 283. It can extend the move to 305 to 310 on the higher side.
Okay, thanks a lot for that, Chandan. So those are a whole host of ideas coming through for the day and how you should approach it. But let's do one thing. Let's get some momentumizer stocks going. Ekta is here with us to give us the stock of the day. Ekta, over to you.
Thanks for that. Well, I'm watching Shilpa Medicare. It has a market cap of around 6,400 odd crores. It's a part of the BSE small cap index. The stock was up 14% on Friday. It's close to its 52-week high of around 677 rupees. It's rallied all the way from levels of around 283 odd rupees, which was its 52-week low. Now, for today, it's going to continue to be in focus because they're going to be holding an analyst call at 11 a.m. today. This is going to be discussing a business update with respect to their CDMO arrangement, which they announced on 4th of July. The CDMO arrangement is for a new chemical entity by a company called oxylathium carbonate, or OLC. So the opportunity might be huge for Shilpa Medicare, and that's the reason why the street is so excited, and we'll probably know more later on in the day. So I expect the stock to see momentum in today's trade.
All right, thanks very much for that. So that's Shilpa Medicare, big volumes and a big mover on Friday. Well, let's talk about this and other pharma stocks a little bit more. Incred is bullish on especially the diagnostic space over the next 12 months, but it's bearish on unbranded generics. They also add that they're positive on hospitals where valuations according to them are a bit more reasonable. Aditya Khemka is fund manager at Incred Healthcare Portfolio PMS. Aditya, good morning. Good to have you with us here. Thanks for your time. Prashant this side. Just to kind of sort of take off from what Ekta mentioned, do you track, own, cover Shilpa Medicare?
No, we don't own it, but we do own a number of CDMO businesses, and we have said in the past that we are fairly bullish on the CDMO space, especially where companies deal with innovators. This is a high margin, low volume, high ROE business, which we are very bullish on. And because of China Plus One, the order book of all these companies are swelling. So because we can't own everything in this space, we have our own picks. We own Heikel, we own Newland, we own some other names, Jubilant Pharma, etc. in the space.
Okay, Heikel, Newland and Jubilant Pharmova is what you said, right, in the CDMO business. Got that. You're also bullish on the hospital space where you feel that valuations are now reasonable. Take us through that and which are the stocks you like there? What is the kind of growth you're looking at over the next 12 to 18 months?
Yeah, so many hospital stocks actually are trading at 20 times, 22 times EV to OCF. I think the mistake that people generally make is they focus too much on price to earnings ratio. Now in real estate or capital intensive businesses like hospitals, earnings tend to be very low given the high depreciation and amortization that these companies have. So we don't really look at price to earnings, we look at EV to operating cash flow. And if you look at some of the hospital names that we own, which is Healthcare Global, Aster DM Healthcare, these hospitals trade at 20 times, 22 times EV to OCF, which is essentially the same as PE ratio, but it is cash earnings and not really just accounting profit. So that, to my mind, is a fairly reasonable, multiple for a business which has negative working capital, longevity of earnings, high margins, and sticky business above all. So yeah, we like the hospital space, but not everything. Not every stock can be painted with the same brush. So some of the hospitals are trading prohibitively expensive, and we don't own them.
All right. Hi, Aditya. Good morning and good to see you. When I want to ask you about the diagnostic space, one of the rank underperformers in the last 3 years or so is Thyrocare. In spurts, though, you're seeing a fair bit of delivery-based buying. The question is, how much of the bad news is in the price at around the 650 levels? The last quarter's numbers actually was quite good, and the guidance given as well by the management was quite optimistic. Your take?
So in the diagnostic space, we own Thyrocare, we own Krishna Diagnostics. We have been extremely bullish on this space, again, because of the reasonable EV to OCF that these companies trade at. Just to give you a sense, Thyrocare, even at today's valuations, would be trading at close to 20-21 times EV to OCF. which is basically, enterprise value divided by cash earnings. And that's, I think, one of the lowest, in terms of multiples that it has traded in its own history. So, going forward, be it Thyrocare or Krishna Diagnostics, we expect significant ramp up in earnings. These companies made some operating expenses just as investments to fuel growth. And these expenses are going to pay off in the next 2 to 3 years. And, then the top line growth will be higher and operating expenses growth will be lower, which would result in margin expansion and better cash flow even from this point onwards. And which is what keeps us really bullish on the diagnostic space, specifically the 2 names that we own.
Aditya, got that. So just to look at the broader swath of pharma names here, and I'm just looking at the first half performance. Last 1 year, there are many doublers in the pharma space. Last 6 months, Zydus Life is up some 60%, Glenmark is up 50%, Natco is up 45%, Biocon is up some 32%, Lupin is up 30%. At the bottom quartile are names like, there is Mankind, JB, maybe a Loris Laboratories, even a Dr. Reddy's. How's the sort of pecking order for you out of some of these names that I mentioned?
So out of the names that you mentioned, we own JB Chemicals. I think just the one name that we own out of the names that you mentioned. And again, because you might be looking at the last 6 months price movement. If you look at, let's say, a 10-year movement, a stock like JB Chemicals has probably gone up 17x. When something like a Sun Pharma has gone up 20% or 25%, and something like a Dr. Reddy's has done 30%. This is over a 10-year period, not CAGR, point-to-point returns. So, you're comparing a 1700% return stock to a 20-30% return stock when you compare a JB Chemicals to a Sun Pharma or Dr. Reddy's. And that's purely because, of the fundamentals. These are unbranded generics, Sun Pharma, Dr. Reddy's, etc. They have a large unbranded generic business, which dictates how their stocks move. And hence we don't own them because we can't really be sure of when the cycle turns. And there is not enough data to indicate that the cycle has turned. Whereas, branded generic companies like JB Chemicals, like Torrent Pharma, like RPG Life that we own, these companies just grow every year. There is no cyclicality in their earnings. There is no cyclicality in their margins or cash flows, which is what we like.
Any thoughts on Mankind? Point taken and well explained, Aditya. Any thoughts on Mankind?
So we don't own it, but I think a post-listing of Mankind, there was a significant rally in the name. So you can't be judging the stock on a 6-month basis.
Okay, well, thanks a lot for that. Appreciate your time here. That's Incred Healthcare with their views on the entire pharmaceutical space. But let's get some 9-10 calls going. By the way, lots of stocks in pre-opening to focus on. So let's get a couple of them going. Titan, actually, it was a decent growth of 8% that we've seen for Titan's domestic jewelry business. So that stock is actually holding, okay, it's actually down about 2%. Let's see which way it goes. Tata Motors, by the way, good 1% up move is what you're seeing after Jaguar Land Rover retail sales growth came in at 9%. And Marico and Dabur also will be reacting to their numbers that came through. Marico consolidated revenues see high single-digit growth, so the street likes that, up almost about 3% over there. But Sudarshan, what's the big call at 9-10?
Consider buying L&T with a stop under 3,500.
And Mitesh, what about you?
I'll go with the buy on ITC for targets of 445.
Okay, Mangalam is joining in to tell us how Titan's numbers have looked this time. Mangalam, over to you.
Well, it's weakness for Titan. The jewelry revenue growth for the first quarter grew by about 8%. And for perspective, Kalyan actually on a much smaller base grew 29%. Titan has said it's the high gold prices, lower wedding days and weak sentiment that has impacted their demand, and buyer growth, which is a metric that the company tracks, has been in low single digits as well, even as Akshay Tritiya saw double-digit revenue growth. Studded growth was moderately lower in comparison to gold, and as a result of which the margins could be impacted as well. Brokerages don't like that. In fact, this morning we have a couple of downgrades coming in as well. JP Morgan, for instance, has downgraded the stock to neutral. They've lowered their EPS estimates by 5 to 6%. They have a target price around 34.50. ICICI Securities as well. They've cut their earnings estimates by 5 to 7% over the next couple of years. They've cut their target price from 3,400 to 3,200 as well, even as they retain hold. Goldman Sachs says that the jewelry slowdown has been much sharper than expected, and Titan's key competitor in the first quarter did much better, which is a cause for concern. And Morgan Stanley says that the first quarter margins are likely to be lower than what they estimated to be at around 11% as well. So with all of these things, the stock which was lower on Friday may continue to be lower today.
All right, Mangalam, thanks very much. Let's go across to Sonal, who's standing by to tell us about city gas distribution companies. Sonal, over to you.
Good morning, Prashant. Well, we've been highlighting how MGL will be in focus on the back of Bajaj Auto's new CNG bike launch. And Nuvama has written on how this particular launch could open up new opportunities for city gas distribution companies overall. They say that they expect CNG's total cost of ownership to continue to remain lower than petrol by around 29 to 32%, for EVs by 28 to 30%, and it will add around 5 to 13% in terms of CNG volumes by 2030. While the initial focus in terms of sales is Maharashtra and Gujarat, Bajaj also plans to market this particular product to the rest of India by October 2024. Management expects total market at around 6 lakh units with CNG availability at 60%. So that's a big market for all these city gas distribution companies. They say CNG volumes could see further medium-term upside on the back of two reasons. Bajaj Auto planning to launch models in 110 and 100cc segment as well. And other two-wheeler OEMs also might open up into this market. They could also launch CNG vehicles provided the Freedom model gets a lot of traction as well. They've raised the target price for IGL, Gujarat Gas and MGL by 9 to 17% as they are incorporating higher volumes from FY26 onwards. They have a buy rating on all the three names, and this target prices will come up for you on the screen. So they are quite bullish on this new launch.
Actually, thanks Sonal for bringing that out, because this whole CNG theme, right, is something that's even elevating a lot of the passenger vehicle names. Maruti, for example, in their recent interaction with us, told us that they expect over a 30% jump in their CNG vehicle sales at 6 lakh units for FY25. And if you look at the first half of 2024, right, up until June, the CNG vehicles overall in the industry have gone up by 33%. So CNG as a theme is really picking up. Of course, Bajaj has launched it in the two-wheeler space, but even in passenger vehicles, it's been an ongoing theme for the last 1 year or so, and hence you've seen that big move in many of these names. But otherwise, for the market, looks like it's going to be a decent opening. We're just about getting ready to kickstart at the 24,300 mark. Maybe some consolidation over there, Prashant.
Looks like it. So we'll see. We'll track what the open and the first rates and stocks, etc. look like in just a bit from now. The first rates are going to come up. It's a flattish start, absolutely flattish start. Nifty is at about 24,322. And you've got the Sensex, which is starting about 40 points, 50 points lower. So it's flat to slightly lower start for both the indices at this point in time. Let's just look at the Nifty Bank as well. Bank Nifty is down about 0.4%. We're at about 52,400 on the Nifty Bank. And as indices, maybe just look at mid-cap index. It's got a 1/3% gain. The mid-caps and small caps outperformed large caps on Friday. And I think at least, this morning, that is the case once again. So small cap index actually is up even more, about 0.75% higher on the small cap index. 30 points so far on the Nifty is what we have, but I think it's a lot of PSU names once again. A lot of PSU names. The biggest volume-led gains this morning are all mostly from the PSU space.
Okay, well, also a lot of stocks in focus, right? So let's get straight to some of the top movers this morning. Tata Motors, Jaguar Land Rover retail sales growth of 9%. So Tata Motors is up about 2% looking pretty good there. Titan, it was a decent growth actually, 8% in their domestic jewelry business, but the stock is down 3.5%, so perhaps the street not happy with that. Marico, actually the street has liked. Both Marico and Dabur are in the green right now. So Marico consolidated revenue has seen high single-digit growth. Dabur is also up almost 1.5% right now at 615 rupees on the back of its update that has come through. Bajaj Auto, by the way, on the launch of the CNG bike, just flat terrain right now for Bajaj Auto, but still hanging on to the green line over there. BEML is another stock. Big moves coming in this morning, 4% higher on BEML. Rail Vikas Nigam, RVNL as well, up in the green. Ircon is up in the green, 5% higher over there. So that entire PSU bunch. G Shipping is doing very well, up almost about 7%. So keep an eye out on that. And then you have something like a Nykaa. The beauty business continues to do well, but the fashion business is facing a challenge. But the company says the consolidated revenue growth will be 22 to 23%. So keep an eye out on that as well. So Nykaa up almost about 2.5% right now. Plenty of stocks, even in the broader markets, continue to be in focus, but the headline index is just about flat with a bit of a negative bias to it. Also, watch out for the Nifty IT index. Remember, big earnings coming through this week in the form of TCS and HCL Tech. So, those stocks are going to be in focus as well.
Well, the rail-related stocks are flying away. RVNL is up 8.5%. Big move is what we're seeing out there. IRFC up close to 5%. IRCON up close to around 4%. RailTel up close to around 3.5%. Texmaco Rail, you just name some of those stocks. They're up anything between 3 to around 8% in today's trading session. On the flip side, we have some disappointing news that came over the weekend on Patel Engineering with their promoter, their CMD, that's the chairman as well as the MD of Patel Engineering, Mr. Rupen Patel, who was aged around 57 years. He passed away all of a sudden. So that's having an impact on the stock. Stock is down close to around 8%. A stock that's doing very well though today is PC Jewellers on very high volumes. That stock I think is up close to around 8 to around 9%. So that's one of the big movers on volumes. On lower volumes, you have Metro Brands. That stock is higher though. Volumes picking up on that one, opened up with a gain of around 4.5%. Man Industries, they have bagged the largest order of around 1,850 crore rupees. It takes the total order book to around 4,000 crores. So explains why that stock is up close to around 7%. Metro Brands, by the way, the last time I checked, I think let's pull that back up. It's up close to around 10% odd. Swan Energy, well, there was a large trade that took place, and I think an initial trade, and that stock as well is up close to around 5%. And Nava Limited, they have received 2 large-scale exploration licenses for lithium and other minerals by Mamba Collieries. That, in fact, is one of their subsidiaries. So on the back of that news, that stock as well up close to around 5%.
Right. It's lots of names, right? As you said, from the railway space, RVNL, IRFC, IRCON. So that's the other theme. PSUs, which are doing very well. BEML, by the way, is up about 5.5%. MOIL is up about 5%. And I could go on with many of these PSU names, which are rallying hard at this point in time. We've got, 30-point cut on the Nifty right now. We're at about 24,291. And it's looking pretty sort of solid all across. One name I want to sort of look at on, a smaller name, but volumes are very large, is HBL Power. It's gone from 500 to 600 in 4 days. So a ferocious move, really. It had a bit of a sideways move, sideways consolidation kind of a move for a while, but it's corrected all of that. I mean, actually, for the last, I think, almost 5-6 months, it didn't do very much, but, 20% very, very quickly coming through on HBL Power in a pretty short time span. What else? You've got Metro Brands. I think we did sort of mention that. Metro Brands is up 12%. 12.5%, 13% now actually. So that is a sharp shoot up and sharp surge on Metro Brands coming through from the last close, Friday's close. And it's sort of developing as we speak. So stocks at about, 1363 right now at this point. Stanley, which is the recent listing, that's up about 4.5%. So we'll sort of have that up for you as well. Anantraj Industries, I think there was an initiation note by, I think it was Nuvama, 5.5 on Anantraj. Stocks at about 542 at this point in time. And Man Industries is up, Nava is up, Suvain is up, Suraj Estates, another one of those names that we highlighted last week as well. Suraj Estates is up another 5%. But, you go down that sort of path in terms of tracking, big gainers. Down the list, volumes start to thin out. So you've got to keep that in mind.
I just want to mention one thing on the PSU banks, in case you missed it, right? Bank of Baroda is the one that's really taking a knock right now. I think it's down 3.5% right now. And as Abhishek was telling us earlier, right, the bank has lost market share. Their deposits have been very weak, the weakest in the last 12 quarters. So the street doesn't like that at all. So it's now, more premium perhaps paid to the private sector banks versus PSUs because of the performance that we're seeing.
Absolutely. So on a couple of more names on the downside, BSE is coming up with a bit of a cut. There's Bombay Stock Exchange, 1.5% lower. There is something called Zentech, which is down about 3.5% as the sort of defense, sort of anti-drone systems maker. JSW Infra is down about 2%. It's got volumes, about 2% cut, stocks at about 350. Exicom has had a one-way rally, 2% lower. These are just pullbacks after what we've already seen. TARC, that's Ambit had initiated coverage and highlighted that as one of their top small cap real estate picks. I think it's an entity which came out of Anantraj. Stocks down about 3.5%, 224. Kaya, which had a bit of a move, is down about 1.3, 1.7, 1.8%. So lots happening with the individual names. The Nifty is kind of flatlining now. It's got about 10, 12 odd point cut, 24,313 at this stage. Ashish Gupta is with us. He's a market master today, Chief Investment Officer at Axis Mutual Fund. Ashish, good morning. Good to have you with us here. Thanks for your time. Prashant this side. Just sort of, Ashish, explain to us how you're thinking about investing and just sort of your approach to markets because of the run that we've had, Ashish. It's not a, money is coming in and I'm assuming you're getting flows as well. What to do with it, yes, I think is the hard bit at this point. So just the broader approach before we dive in.
Yeah, morning, Prashant, and thanks for having me here. So I think one thing that we have seen consistently play out over the last 2 years has been a big re-rating in the market across the board. I think from here on, our focus is primarily on earnings. We believe stock performance will actually track more closely the earnings and the earnings delivery that come through because the valuation gaps in the market have narrowed down. As you guys have also spoken on the channel multiple times, the market is no longer as cheap as it used to be. And therefore, we believe companies that miss earnings can have significant risk to them. So it is kind of very important to be in companies, in sectors where one can be confident about earnings, both in the short term as well as medium terms. Because really the market multiples today are more elevated than most times in history.
Okay, but the market, although the multiples are elevated, there are a few things that this market has going for itself, right? I mean, the government has come back into power for the third time. The expectation is that the budget will have some sort of, you want to call it populist measures, measures favorable to the common man, because they do have that leeway now with a higher amount of tax collections and dividend from the RBI. So in a sense, do you think that these could be some triggers which could help the market build on to its gains despite the valuations being uncomfortable?
Sure. So absolutely. I think that is the good news, that we have got policy continuity. We have the fact that we are going into a budget where, if anything, there's a problem of plenty. In fact, I think one of the challenges we have been seeing is that government spending has not been as quick as economy would have desired. The government is still sitting on a large cash balance. And I think post-budget, as this cash balance depletes, the liquidity in the economy will also improve. So I think that is certainly positive. I think we are seeing now some signs on the consumption sector, at least pockets of it starting to improve, particularly discretionary consumption last quarter has been relatively better. Broader consumption still has not picked up. And expectation is as government spending picks up, you will see a broader revival in the economy. Having said that, I think we have to be careful, particularly in the shorter term, that the direction of the economy and the direction of the market may not be perfectly correlated. I think over the medium to long term, that correlation holds much stronger than in short term. And I think particularly with the kind of move in the market over the last couple of months that we have seen, we would expect the market to consolidate rather than repeat the kind of price action we have seen in the last 2 months.
All right. Hi, Ashish. Good morning and good to see you. When the problem is, I'm looking at some of the portfolio and a lot of big winners were there. CG Power, you've got Sona BLW. Now, that's a very tricky scenario, right? Because some of these stocks, say 15% lower as well, they looked almost fully priced, but they just continue to move up. How are you placed on this broader markets, the mid and the small caps? Because that's where the big money has been made. Do you think it's time to just hold back, sit back a little bit, or would you continue to build on to various positions?
So I think the key is where is earnings coming from, and I think while there's a lot of debate on the valuation differential between large, mid, and small, the way we see it, that the valuation differential is actually more coming out of what is the earnings expectation across various companies. In fact, we cut the entire universe into three buckets: companies that are expected to grow earnings over 20%, companies that are expected to grow earnings between 10 to 20, and earnings expectation in stocks which is less than 10%. And companies that are expected to grow earnings over 20%, irrespective of the market cap, large, mid, or small, are trading at an average multiple of nearly 35 times. So I think market is paying up for growth, irrespective of which bucket it sits in. And I think it's really important that this growth gets delivered. As I mentioned earlier, therefore, our focus now is looking at companies building on positions where we believe there is unlikely to be a disappointment, and if potentially any surprises that come through.
Okay, let's talk about, Ashish, where you find value. If you can talk a little bit, without naming names, but high growth certainty, which I think is what you said, must be there, and some not out of whack valuations as well. Where is value, according to you?
So I think actually only very few pockets of value that is left in the market. I think the financial sector is one of them. It is one of the few sectors that is trading at multiples lower than historic trading multiples. Most other sectors today are trading 1 to 2 standard deviations higher than historic trading multiples. So I think financial is one sector. I think what has been weighing on the sector, and particularly banks, is that earnings growth is expected to slow down this year, and deposit growth in particular has been soft. We are actually hopeful that in the coming months, deposit growth in the system starts to improve as liquidity improves, both because the monetary policy becomes more favorable, as well as government spending kicks in.
You know, just since you brought up financials, right, and you've been sort of one of the most prominent financials analysts in your previous previous role, Ashish. What do you make of the moves we've seen in so power? Let's take as an example. There's lots of capacity addition which is needed. A lot of the financing will be done here by local institutions. There are specialized power lenders, REC, PFC. There is IREDA. I'm sure you've looked at these names, you know, with in terms of what's happening and prospects and valuations. What is your sense here on these three names specifically? Because this is these are also pockets where retail interest is very, very high.
I think, as you summarized well, that today the growth that we are seeing in this segment of the market is one of the fastest. You would have seen some of the loan growth numbers that they have reported. In addition to that, the balance sheet of these companies is remarkably different from what it was 3-4 years ago. And I think in terms of earnings multiple, these companies are still not very expensive. So I think this is an interesting pocket of the market. I still think there is good growth ahead in these names. But some of these names, the valuations are now at a premium even to private banks, particularly on a price to book basis. So we are really not overweight these names in a material way, but we do have some holdings.
Okay, just one final question, because we're heading into this discussion on the auto sector, and particularly on, you know, two-wheelers like Bajaj Auto have launched the first ever CNG bike, right? This whole CNG theme is picking up in a big way, purely because of the price differential between owning a CNG vehicle and a petrol vehicle. So demand has gone up quite a bit. Is this a space that you like in general autos, and within that, any preferences between passenger and two-wheelers?
So actually, we are quite overweight the auto sector across multiple pockets. We are overweight both on the OEMs as well as component manufacturers. We believe there is really new legs coming into this industry, given all the shift, as you mentioned, towards CNG, EVs, and this is really providing new growth impetus to the entire supply chain. We are seeing many component manufacturers getting into new programs, both with domestic OEMs as well as global OEMs. So I think there is a lot of opportunity in this sector because there is a shift in market share that is happening, and that provides some companies with stronger growth prospects than the overall industry as well. Secondly, I think we are also, as I mentioned, positive on discretionary consumption, and I think this sector plays that theme very well.
Ashish, before we let you go, just one last sort of question. And again, there's a lot of interest around this. This is F&O trading volumes and speculation about whether the sort of regulator will do something about it, right? Everybody has talked about it. The finance minister here in Mumbai sort of mentioned it, and others have as well. You put out a note, I remember, many months ago, just sort of looking at F&O volumes as opposed to cash volumes and how out of whack it is as compared to major markets around the world. And I believe you're sort of providing industry feedback, etc. as well. Do you think we will see something to sort of rein this in a little bit? What's your sense?
So I think, as you mentioned, both the government as well as the regulators, both RBI and SEBI, have spoken about this. I think there is certainly a growing level of discomfort in terms of the activity here, and particularly around the expiry date. So I would expect the regulators to really look at it. We have already seen several announcements come through over the past couple of weeks. And I think if these do not really address the full problem here, I'm sure regulators will continue to act.
Okay, well, thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. Well, let's move on. For the market, it is quiet. It's a quiet opening, actually. Just pull up the Nifty ones before we move on to the next discussion. Very, very flat. So just hanging on to the 24,300 mark. But Bajaj Auto looks all set to disrupt the two-wheeler market by launching the world's first CNG bike. The bike, named Freedom 125, will have both a fuel and a CNG tank. The important bit is the demand for CNG vehicles across sectors, whether it's passenger vehicles or two-wheelers, has picked up quite a bit. My colleague Parikshit Lustra caught up with Rajiv Bajaj, the MD of the company, began by asking him about the launch and more. Listen into the excerpts.
The fundamental strategy behind our business is that of differentiation. I'd like to believe we've been a company that's done things differently from time to time. And when I say differently, I mean it has to be relevant to the consumer and yet differentiated from the competition. I would say Pulsar was perhaps the first flag bearer of that. If you see what we've done with Pulsar after that, with KTM, with the Triumph, with the Chetak now in the electric avatar, with our three-wheelers. So I think, differentiation is the DNA of this company. And in keeping with that DNA, I think what we are about to do here is, this market, the Indian motorcycle market, is the biggest in the world. About 900,000 motorcycles every month, of which close to 700,000 motorcycles fall in the category of what we can broadly call as commuter motorcycles. These are not people who are touring or going off-road or, racing or something like this, but simply using it for their daily activities and to be more productive on a daily basis. Obviously, what pinches them hardest is the cost of fuel currently. We saw one inflection point like this in 1993 when fuel prices suddenly spiked. And that is what actually spurred the shift from two-stroke technology to four-stroke technology at that time. And India went from being a 70% scooter market to becoming a 70% motorcycle market. I have a feeling, I can feel it in my bones that perhaps lightning is going to strike twice in this respect. Fuel at 110, 120 rupees a litre is really very expensive. And with our experience with the CNG three-wheelers, this technology is very well known to us. So we thought, why not a CNG motorcycle at a reasonable price that can address almost 700,000 motorcycles every month and give these people the option to buy something that can halve their cost of running the motorcycle.
Right. So by maybe the next 3 to 4 years, how much of the 700,000 segment do you want to capture? When you were speaking at the press meet earlier, you said you are a strong number 2 in the 125cc segment, but you're of course not satisfied with that. Where do you see yourself growing in the 125cc segment and the 700,000 commuter motorcycle segment, so you call, in this? What kind of share would you be targeting?
Well, it's difficult to hazard a guess, as in speculate a specific number. But our strategy, first and foremost, has been to focus on the 125cc plus space, within which, of course, 125 is the biggest space. In this space, we are a very close number 2. We have about 26-27% market share. And I think our goal has to be twofold. One, to keep growing the 125cc plus space at the expense of the 100cc space, which has been happening very rapidly in recent years. And then within that space, to acquire as much share as we can for ourselves, meaningfully in a profitable manner. So this is where this motorcycle is targeted, because it is a 125cc. And just to give you two numbers, today in cities that have adequate supply and availability of CNG, I'm told that 30% of cars are now, that are registered now, are CNG. And I know for a fact that 70% of our three-wheeler portfolio has become CNG. What used to be petrol and diesel has become CNG. 60% of this country's three-wheelers are now CNG. So, if you put those metrics to it, somewhere between 30% and 70% of 700,000, we are talking between 2 and 5 lakh motorcycles a month could become CNG over a period of time. And I'm not saying the Bajaj Freedom is going to sell all of that, but that's what the industry could be.
Now, of course, you are moving into this segment again, creating a market for CNG motorcycles. What I would like to ask you is, when do you expect to break even? In what time period? Profit and revenue-wise and volume-wise?
I don't know exactly. I can say this, that with the electric vehicle, for example, just to contrast, it's a very long road. We've come a long way since when we started 5 years back. And now we have some line of sight to profitability. I would still say it may be a year or two away till we have reasonable, acceptable profitability with electric vehicles. As opposed to that, where we are still bleeding, and I mean the scooter. The three-wheeler is very, very profitable, the electric three-wheeler. The scooter is not yet. With the Freedom, there is no bleed at all. So we start off on a very good wicket. With the electric Chetak, with every vehicle, we are putting some money on the vehicle and giving it away. Here it is not the case. So every Freedom contributes to the corporate profitability. But certainly it is not at the level of the 20% EBITDA, which is the corporate EBITDA. So definitely it erodes that a little bit. But I would say that if CNG catches on the way we are hoping it will, it would be not beyond this financial year that we would be able to hit our capacity, which by that time could well be 40,000 motorcycles a month. And I would certainly expect that at that level, it should be as profitable as any other motorcycle we make.
Okay. Now, in terms of the investments that you made in, this was a completely ground-up motorcycle. It required engineering, re-engineering of motorcycles. You had to fit in an entire 2 kg cylinder inside the motorcycle. So be it the rear fender, the grip, the seat, the position of the engine, the fuel tank, everything had to change. Give us a sense of how much investment you had to make in designing, developing this vehicle, testing it, and now deploying it. So how much investment altogether?
Yeah, so it's a ground-up motorcycle, undoubtedly. But at the same time, what we do is, in our platform approach, the platform approach is not only something we apply to the product, it's something we apply to the process as well, which means that we have not gone and set up a new factory for the Freedom. There is no, it's made on the same assembly line, it goes through the same paint line, it employs the same welding robots, it employs the same machining centers as do the other ICE motorcycles we make. So a lot of the investment in that sense, the capex heavy kind of investment is generic. The specific investment that goes into welding fixtures or machining jigs, etc., these are new, and of course some tools and molds are new. So I can't give you an answer offhand, and frankly from a competitive point I wouldn't want to, but I can say that for this capacity it would certainly be a figure that is more likely to be in double digits in terms of hundreds of crores. So in double digits rather than in triple digits.
Okay, that's Rajiv Bajaj, the top boss at Bajaj Auto, talking about the scope and the potential for the new CNG bike that they've launched. Let's slip into a short break. When we come back, more on the markets, lots of stock-specific action as well lined up for you. We'll be back.
Welcome back. Well, talking about two-wheelers, when Bajaj Auto had launched that CNG vehicle, we saw a sharp downtick on Hero MotoCorp. It appears some of the shots now are covering out because the stock actually is one of the biggest gainers from the time the markets have started. Hero MotoCorp is currently at the high point of the day. But there are stocks that have come in for selling. Divi's Laboratory is down close to around 2% from the high of the day. Asian Paints as well has taken a cut of close to around 1.5%. So some kind of selling is what we're seeing out there. Coal India last couple of days was strong, but that's moved a little bit lower. And a larger weight like L&T as well has seen a bit of a downtick. So when that one moves lower, we do see some kind of pressure on the Nifty. Explains why the Nifty is now down close to around 50 points. But let's talk about a couple of big movers in the broader markets. Manglam joins us to tell us more on Marico. Manglam?
Well, Marico reported its first quarter update, and these are good numbers that have come in, and as a result of which the stock is higher. Remember, if you look at the last 1 month when all the other FMCG stocks rallied, Marico wasn't a participant in that itself. Marico has rallied, actually declined about 2% in the last 1 month or so, is up 4% now. The domestic business, as per the company, posted a modest uptick in underlying volume growth. That is something that the street likes. Parachute Coconut Oil, which is the mainstay of the company, posted a low single-digit volume growth. Saffola Oils, which was under pressure all of last year, is now back to positive volume terrain, and it's reported mid-single-digit volume growth as well. Value-added hair oils, that's where the problem is, where the company said it's got a soft start to the year, but they believe that going forward in the next couple of quarters, it will turn positive in terms of volumes as well. And as a result of which, the consolidated revenue of the company, which grew in high single digit, will only improve going forward on account of improving volumes as well as higher realizations. Add to all of this, the operating profit this time around is likely to grow marginally higher than the revenue, which implies margin improvement as well. So the stock was underperforming. The business update is positive, but what's even better is the fact that going forward, the company believes that, things which are soft right now, which will only get better. So maybe the street is betting on that, and the stock is among the top F&O gainers today.
Okay, the stock is among the top F&O gainers today. But let's get back to the other story we were tracking about Bajaj Auto launching the first ever CNG powered bike. And the overarching theme, of course, that we have is demand for CNG vehicles has gone up substantially, especially in the passenger vehicle space, where we've seen, companies like Maruti talk about a 30% growth that they see in CNG vehicle demand in FY25. But that's the absolutely stunning new Freedom bike by Bajaj, which is the first ever CNG bike. But Sirish Chandran, the editor at Evo India magazine, joins in. Sirish, always great speaking with you, and thank you for joining us. I know you must have covered this end to end on, how the bike looks, the pricing and all of that. But first, before I get down to the specifics, overall, do you see this whole CNG demand picking up? I mean, there is a huge price differential if you look at it, right, between CNG vehicles and petrol vehicles, for example, in the passenger vehicle space. Do you think that's enough for demand to pick up substantially going forward?
Definitely. I see demand definitely picking up because look at the saving that you have in terms of your running cost, and also in terms of the driving. We've experienced a lot of CNG powered cars. And in terms of driving, there isn't much difference anymore. It's not like you're losing much in terms of power or torque. So to drive, it drives as well as your regular petrol cars. In fact, right now, the team and we are actually testing the Freedom, the CNG motorcycle. And to be honest, you can't make out the difference whether it's running on CNG or on petrol. And so considering the offering, I think it is a masterstroke. It hasn't been done before. So we'll have to reserve our final opinions and verdict. But I think what Bajaj have done in terms of making a bike that is very good in terms of running costs and not compromising on the other features that people want from motorcycles, I think it's a masterstroke.
Absolutely. I mean, and Rajiv Bajaj has sort of hit the sweet spot, right? Good fuel efficiency and low cost running. I think that's what the Indian commuter wants. But is it enough to penetrate and to grow in the commuter two-wheeler segment, you think?
Yeah, so what buyers are looking for is something different. And this is a unique offering. You have a lot of 100cc, 110, 125, all that segments are saturated. So buyers now are going for the tried and tested. They're not experimenting with anything new. But here, this is a path-breaking motorcycle. Something of this kind hasn't been done before, but the Bajaj brand has the equity for people to take the jump, because look at this, in this segment, people don't want to take a risk. They don't want to go wrong, because if this bike does not perform, that will really hit their wallets. But the Bajaj brand is strong enough for people to make that jump, to jump the fence and take that chance, considering how much they're going to save eventually in terms of running costs. And here, every rupee counts. Every penny that is saved makes a difference. And that's why if you look at this, it's got only a 2-liter petrol tank. And when during the launch, we asked that why only a 2-liter tank. But if you notice in the villages, in the smaller towns, people only fill 100 rupees worth of petrol. They fill 1 liter and that is it. And that 1 liter is supposed to last them 3, 4, 5 days.
Okay. So, this is on the Bajaj bike, right? But overall, I wanted to understand for the industry, what are you penciling in, when you speak to people around? Because I was looking at the data. In the first half of 2024, CNG vehicles overall saw a 33% growth. I mean, there was over 550,000 units sold. Do you think that this is a growth that can sustain? And, which are the companies that are sort of up front and center in the CNG race now?
So see, Maruti, obviously, they were one of the first movers. Tata Motors is betting very strongly on CNG. And today, if you travel anywhere, you will find CNG stations. The big challenge for CNG adoptions is the infrastructure. In our cities, I don't think we are still enough. The number of pumps is not adequate to meet the demand. So you see these long lines outside pumps. And of course, all the Ubers, Olas, all the cabs run on CNG, more or less. So you do find that, filling it up is not as simple as filling up a liter of petrol in your car, but that is moving. And if you see the government's efforts also in terms of expanding the CNG infrastructure, if that really takes place in the way that the government has been talking, that should be great for more CNG adoption. Today, everybody wants to save money. And like with what Tata Motors is doing with their iCNG, where you don't lose too much of boot space. Otherwise, you have that big fat tank in the boot and then you don't have a boot at all. Whereas all the Tata CNG cars, they have two smaller tanks which are in the floor of the boot. So you do have a boot space left over. So people now don't need to compromise when they buy a CNG car. In fact, the only thing that you are now compromising on a CNG car is that there is no automatic CNG as of now. That is the final frontier. Otherwise, with the Tata cars, you have all of the equipment, everything is there on the car. So you get a fully loaded car which runs on CNG, which saves you a fair bit in terms of running cost.
Absolutely, and in a price-sensitive market like India, it's no surprises that the CNG vehicles have picked up in a big way, right? I mean, just to put it into perspective, CNG costs what, about 78 rupees per kg, while petrol is at 96 rupees a litre, diesel is at 92 rupees a litre. So huge price differential currently. And of course, as you said, a lot of issues like safety, etc. are being ironed out completely. So thanks a lot, Shirish. Yeah, go ahead.
Just one thing, Shirish, do you think... Yeah,
Sorry,
safely sorted. Do you think this will be the lone offering for a while, or should we expect models from other CNG bikes from other auto companies?
See, market intelligence, everybody knows what Bajaj has been doing for quite some time. So I'm sure all other manufacturers have already worked out platforms in terms of their R&D. So all the bikes are ready. They are going to be waiting to watch what the initial response is to motorcycle. And also, nobody wants to look like they've just jumped in immediately after Bajaj. So they will all take a breather. They will let that initial enthusiasm peter off, and then they will jump into the fray. And you're looking at 6 months, once the market stabilizes, once people know what sort of actual reaction is, because at the start, everything sells well. There is always good demand at the start. It's after 3 months, 6 months that then the demand starts to flatten. Then you know what the true sense of the market is in terms of adoption of a CNG motorcycle. And that's when others will press the button. But I'm sure everybody has already done their R&D. They already have their bikes ready. And it's just a matter of going with it.
All right. And we'll have you back, Shirish, to talk about some of those launches as when they happen. Appreciate you joining in. And thank you very much for being here on CNBC-TV18. It's time for our special segment, Quarter Se Quarter Tak. We bring you earnings expectations from various sectors as we hit the earnings season. First off the block, of course, will be IT services. So, Rima, over to you.
Thank you very much for that. I think the big question that we're asking at the beginning and at the end of the Q1 earnings season is, are we at the end of the earnings downgrade cycle? Now, Indian IT companies have seen significant negative revision in their earnings estimates over the last 2 quarters. This table by UBS, which will come up, is very telling. Estimates were brought down in Q3 also, but in Q4 in particular, estimates were lowered by as much as 15% for Infosys and for Wipro. So, some people on the street believe that EPS estimates have been downgraded enough, and therefore there is little room for further downgrades. Now moving on to what we're expecting from this quarter, an improvement in the quarterly growth rates. Now this will be led by 1, seasonal strength. Q1, Q2 are typically stronger quarters. 2, ramp up of the large deals which the companies had won in the prior year. And 3, reducing intensity of cuts in discretionary program. Now here is the CNBC-TV18 poll. Infy is likely to see the highest growth at 2.35%, followed by TCS at 1.5%. Wipro is likely to see flat growth, but for HCL Tech, we could see a decline of about 2% on a quarter-on-quarter basis in terms of their revenues. Now, the reason why Infy is likely to lead in terms of a growth rate at about 2.4, 2.5% is because of the ramp-up of previously won deals and a low base. For TCS, it will be the ramp-up of that BSNL contract, which still continues to contribute. Now, Wipro is where the street has turned incrementally most bullish in the last 2 quarters. Remember, there is a new CEO on board. There's hope of a buyback too. Now, for Wipro, after 5 quarters of a revenue decline, this time the street is hopeful that at least the decline in revenues has been arrested. In Q1, we could see a flat growth. And remember, I told you for HCL Tech, revenues are likely to fall by approximately 2%, while the company had guided last quarter that offshoring of a large project is going to hurt them. Now moving on to the full year annual guidance. Expect the companies to hold on to their guidance. So for Infi, it stands at 1 to 3%, margins to be maintained at 22%. HCL Tech 2 likely to retain its revenue and margin guidance. CLSA says a stable guidance is a positive. Now, Wipro gives you a quarterly guidance. So for next quarter, many believe that it should be 0 to 2%, though some believe they could still give a guidance of minus 0.5 to 1.5%. Now, brokerages have been mixed. Very recently, Nomura, if you remember, turned positive on the sector. There was a double upgrade by CLSA on Wipro, which lifted the stock. That said, there are still many notes of caution. CLSA is cautiously optimistic on the sector. They say we still remain largely in an earnings downgrade cycle, but we are getting into a more stable or positive narrative. Jeffrey, UBS selective on the sector on the back of rich valuations. Now moving on to the risks. One, the run-up in the stocks. Stocks have seen a run-up of close to about 15% in the last 1 month itself. Two, there is no immediate demand recovery. Sectors like BFSI, retail, telecom continue to remain stressed. Growth expectations have been pushed forward. And finally, valuations. Valuations are at a premium. CLSA says the Nifty IT is trading at a 30% premium versus an average of 20% to the Nifty, implying limited room for multiples to re-rate sharply from here on.
Okay, all right, Rima, thank you very much for that. Let's take this forward with Abhishek Bhandari, who is Executive Director, Technology and Internet Equity Research at Nomura, India. Abhishek, good to have you with us here. Good morning. Thanks for your time. Prashant this side. For viewers who are watching, Abhishek, going into this earnings season, which are the stocks which will make them money? I mean, simple question. Or do you think, as Rima pointed out, with the 10-15% run-up that we've seen over the last fortnight, last 1 month, this earnings season reaction is largely in the price already? What's your sense?
Hi, Prashant. Good morning. Good to be on your show. So on the first point, I think we are at the bottom of earnings downgrade cycle. And we might be looking at an improvement in discretionary demand sometime in early next year, once the rate cut cycle starts and the US election gets over, fueling optimism with the US corporates. Do note, we have a G2000 proprietary database, which indicates incremental stress on the revenue growth for enterprises is slowing down, which means the bad news on discretionary is going to be low. So in that backdrop, I think the investors should, start looking at this sector more constructively. I think specifically on your question, going into the results, we think among the large caps, Infosys and Wipro are the ones where we are most bullish on. Because we think in Infosys case, the first half is going to be very strong given by their ramp up of deals. And next year, once the discretionary picks up, we think it will benefit disproportionately. On Wipro, again, I think, as Rima pointed out in the prepared comment what you guys shared, we are staring at a end of revenue decline from a quarter-on-quarter perspective. And do note, we are quite optimistic on the new CEO, who we think is the insider experiment with in the company after 2 so-called semi-successful experiments with the external CEOs in the last 2 stints. And we think the early signs in terms of deals and in terms of them growing, getting their revenue decline arrested is there. So among the large caps, Infosys and Wipro. In the mid caps, we like Coforge and Birlasoft, and we recently also upgraded First Source, which is a BPO company.
All right. Hi, Abhishek. Good morning and good to see you win. The argument is that, in fact, if we are at end of the earnings season, that's great news. But some of these stocks have run up considerably just in the last 45 days or so. And if you look at the Nifty IT index, well, it's trading at a premium in comparison to what it trades at, say, in a 5-year average, or even in comparison to the Nifty. Do you think it's warranted? And is the possibility that we see actually margin surprises from here on, which in that case will not make the premium look that much?
Yeah. So, on the first point, I think, the sector is at an inflection point in our view. And we have seen in the past, whenever that inflection point comes, first the multiples increase and then the earnings upgrade cycle follow. Do remember, we might also have the narrative on Gen AI start building up in next 18 to 24 months, once there's some stability in macroeconomic cycle. And any new technology is generally considered to be positive from an Indian IT point of view. So the premium expansion can be justified if one looks at a medium term growth on revenue. From the near term, I think the stocks have gone up quite well. That's on back of possibly an expected stable quarter. If there is no disappointment on earnings, I don't think there's any reason why the stock should fall. There could be some stray incidents, where the run up on the stocks is probably slightly more. If you look at likes of Persistent, which is trading at a very healthy premium compared to the broader IT index and also its peer set, the expectations of a strong growth continuing into future is very high. So I think there will be select stocks, where one needs to be a little careful. But broadly speaking, we are not that negative on the run up into the result.
Okay. Abhishek, thank you for joining us. I think you said Infosys and Wipro is what you're most bullish on, right? I wanted your thoughts also on TCS, because it is a big beneficiary of this rise that we're seeing in digital transformation deals. I mean, even in the quarter gone by, if you hark back to what they did in Q4, right? It was what? The highest ever deal signings that TCS did. Do you expect them to build on to their gains here? And I mean, you recently upgraded it as well. So take us through your rationale there.
Sure. So, on TCS, I think this year, which is FY25, their growth rate will be definitely, higher than the peer set, partly aided by the BSNL project, which alone will contribute almost 2 percentage points for the full year growth. Having said that, if our thesis is on a potential improvement in discretionary, maybe, few quarters down the lane, I think there are other stocks which will benefit more given their portfolio compared to TCS. TCS actually has the, the stability of a very big portfolio on cost optimization. It plays to its strength over there. On the deal side, I think, we are looking at a deal run rate anywhere between $8 to $10 billion, barring any mega deal what might come into the way. This $8 to $10 billion has been the run rate for past few quarters. But do remember, despite such large deals, the translation into revenue is slow because of the longer duration of these projects. So I think, on the upgrade part, I think while we have upgraded the stock to a neutral, I think, we are still preferring Infosys and Wipro among the larger ones over TCS.
Abhishek, this basic thesis that we will see a turn in demand maybe early next year, wouldn't that depend on the underlying economy in the US, if that is the big market which matters? And we've been waiting for a slowdown there for a while, and finally cracks are emerging. It's been an incredibly, exceptionally strong US economy. Expectations are that it'll be very nice. It'll be a nice slowdown, not a out of control one, but who knows? So I'm just saying, is that a big if in that sense?
See, the biggest risk to our thesis is, any black swan event. If there's any credit crisis or any similar event in US, I think then, all the estimates fall off the cliff. Having said that, again, taking you back to the, core of our thesis is the proprietary G2000 database, what we maintain, which tracks the revenue growth rate of largest 2000 companies in the world. And to us, that's the lead indicator of technology demand, because the the tech spending is a function of revenue spending. And do note, this was the backdrop of us downgrading the sector in May 2022, when we saw early signs of decline in those revenues. Now, what we're seeing is from a near term, a stability in that revenue from a calendar 24 perspective, and in calendar 25, we are seeing an improvement from almost -1% in 2024 to around +3.5% in 2025. So I think if things remain as they are, which is a gradual slowdown in terms of gradual fall in the interest rate, US election ending, and the optimism building thereafter, I don't think there's too much of risk. Black swan is anybody's guess. We don't take a call on that.
All right. We leave it there, Abhishek. Thank you very much for your time. Appreciate it very much here on CNBC TV18. We'll speak again once we have the earnings in hand. We'll take a quick commercial break here. We'll come back. The market's down about, 18 points or so at 24,300. We're back and we'll put the focus on commodities. Manisha is going to be here to do that. Stay tuned.
Consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India. Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
Welcome back to Corporate Radar. Well, if you're wondering how the market is doing, it's not doing too much. I mean, everything from the headline index to the mid caps are absolutely quiet. But that gives us some time to talk about individual stocks. So Mitesh Thakkar is joining in. Mitesh, how are you feeling about the headline index now? And what are the individual stocks to look at for the rest of the day?
So I think the view on the index remains the same, Sonia, that we'll possibly have a consolidation for the next few days, and previous sideways activity, the market might not do much. And having said that, I think, trading opportunities, as you've been rightly highlighting, will be in the individual stock basis. So that's where, we are focusing upon. Right now, I have a buy on Britannia, and the FMCG sector is doing very well. So Britannia is a buy with a stop below 55.30. Look for targets of 5,700 plus here, and a buy on BEL with a stop at 326 for targets of 350.
One of the names which is rallying sharply is Paytm. Look at Paytm come up. It's up 7%. There's a sharp up move coming through at about 465. On your screen now, and large volumes as well, by the way, for this point in the day. Mitesh, we'll come back to you for more. Thank you very much for joining us with that. But commodities and what's happening there, Manisha is here with what's top of mind. Manisha, morning.
Thank you for that, Prashant. Well, weather is one, but the other clearly is about silver prices, where we are looking at multi-year highs coming back for this one. It is trading back above $31 an ounce. And if you look at the previous 1 week, the silver prices have gained up by 5.5%. So the start to July has been on a stronger note. If you look at across metal as a sector, we've done quite well. Gold is trading at a 6-week highs. Silver prices have been jumping up as well. The silver prices hit an 11-year highs at 32 on 28th of May. And the markets do believe that these are the kind of levels on charts that the silver is perhaps looking to breach. We've been talking about on how the international markets are in deficit, and the silver demand in sense of industrial sector could be hitting record highs for a 4th straight year in 2024. So that is what is leading to many people buying silver in ETF, on funds and in physical as well. The support also comes in because the dollar index is now below 105. We've seen 1% of decline for dollar index in the previous week, and the US Fed rate cut expectations for the month of September are now inching up to 76% last I checked that one. So that is supportive as well. And when you look at all of US data, well, that has come in on the weaker side. On Friday, the unemployment was at a 2.5-year highs. The ISM manufacturing data, the job numbers, all of that has come in on the weaker side, pushing dollar index down and, of course, making that possibility of a rate hike much on the higher side. That has been supportive. The gold prices and silver also seem to be taking support from the French elections, where the results indicate a hung parliament. So all this uncertainty, the geopolitics as well, is adding premium to gold and silver, both those prices there. Well, going forward within this week itself, it's a very strong data-heavy week. You have the US and China inflation data coming in for this week. And when it comes to the monetary policy meetings, well, various countries are going to be addressing that, from New Zealand to South Korea to Malaysia as well. So a lot of things to watch out for, and that could mean more buying continuing in case of safe havens, that is gold and silver.
Okay, thanks a lot for that. Well, let's move on and talk about, the heavy rains that have lashed Mumbai across multiple areas. We have Dr. K.S. Hosalikar, who is the Deputy General of the Indian Met Department, who joins in. Mr. Hosalikar, thanks a lot for joining in. There are two things here. Of course, one is that the rainfall deficit has narrowed, right, across most states. And now I understand that there are only 6 states in deficit versus about 10 earlier. So first, if you can tell us about that situation, and then we will come to Mumbai, which has, almost come to a standstill because of the torrential rains overnight. But first, the overall situation, how is it so far?
When the rain started in the month of June, probably a lot of eyebrows were raised the way the rain started initially, and then it slowed down in the month of June. And June ended with some deficit, of course, but the rainfall picked up around 28 June, and the forecast was in the first week of July. There is possibility of very good rainfall, and that's what is happening across the country. And also, monsoon was covered little earlier than its normal date over the entire country. And last couple of days, we see a lot of rainfall in the northern part of the country, the eastern part, and of course the central India, including Maharashtra and parts of Gujarat and the southern peninsula also. And there are a lot of videos I'm coming across that you are also currently showing with knee-high or above knee-high water level accumulated. The rivers are flooding, and there are a lot of things happening. And the monsoon is I should say, active to vigorous especially over the west coast of the India and many parts of the other parts of the country. Thank you.
Right. Sir, June 1st to now, could you tell us what is the picture? Are we now in slight surplus? What's it looking like?
Yeah, when the June started, the monsoon came a little early than they expected, and but then it slowed down, as I said. And the June ended with almost around 17 to 18% lesser than the expected value at all India level. And definitely the forecast continued that the July rainfall would be above normal rainfall. And by the time June, I think most of the northern part of the country, the monsoon was not covered. But within a couple of days, last 4 or 5 days, the monsoon is covered. And I think now we are in a quite comfortable situation as far as the rainfall is concerned across the country.
Mr. Nosalikar, also, as you said, June was a deficient month, but July has started on a very strong note. July is also the most important and the wettest month that we see in the 4-month monsoon season. How do you see July ending? And there are some concerns about the second half of monsoon as well. So is there any sight on August, September yet? We've been talking about La Nina setting in as well. So how is IMD looking at the rest of monsoon season?
Yeah, so we have said that July would be above normal rainfall. As a country as a whole, we have said that the forecast is the rainfall would be above normal. The distribution is also quite good. It's really very good distribution. It indicates that it's widespread, well-spread rainfall across the country, except barring 1 or 2 places in the northeastern part of the country, or maybe east central and like that. Otherwise, the distribution is quite good. You mentioned about La Nina. Yes, IMD mentioned about that also. We are saying that the probability of the development of La Nina in the second half of the monsoon is percentage-wise, if you see, it is quite good. And the next month, August, September, also it is telling, the climate forecast is indicating that the occurrence of the La Nina is very high. And this type of forecast nowadays, the confidence level is very high, so we are sure about it. La Nina brings in a lot of rainfall, in this part of the region, and that's what we are expecting, that probably as July, probably the August, September also could be a lot of rainfall to be expected. Yeah.
Okay. Mr. Nosalikar, how is Mumbai looking? And that's my final question, really, because it's been on a standstill. Schools are shut for the first half. Many people haven't been able to come to office. Will that continue?
Yeah, last couple of days people were asking, "Bahut dhoop hai, barsat kab hogi?" Then probably now they will say when it is going back. But I think Mumbai rainfall is like this only. Probably we all know that it rains almost 200 millimeter in just couple of hours, and especially this happens during night time. Yesterday also same thing happened. The rainfall occurred. Most of the rainfall occurred in late night till early morning, and Santa Cruz recorded 267 millimeter rainfall, and many other stations in the suburbans recorded more than 200 millimeter rainfall in 24 hours. The good part is, the bad part is there are a lot of waterlogging as we see everywhere. But at the same time, the forecast and the nowcast is indicating that the intensity of the rainfall is likely to decrease in next few hours. But the yellow alert is already there, and on the west coast, including Raigad, Sindhudurg, Ratnagiri, the numbers are very high. More than 300 millimeter rainfall indicated in last 24 hours. The color for the 24 hours is orange for all those places. Mumbai, yellow alert. We are expecting some heavy rainfall shower in next 24 hours also.
All right. So thank you very much. Very sort of clear communication there. Appreciate you joining in with that perspective, and hope to sort of be in touch with you and speak to you over the next many weeks as well. So good sort of tidings as far as monsoon rains are concerned, according to the IMD from here on. We'll take a quick commercial break here. We are back and we're going to come back with our special segment. It's the economy. My colleague Lata will get chatting with Aditi Nair, Chief Economist ICRA, and Anubhuti Sahai, Head India Economic Research at Standard Chartered. We'll, of course, decode what to expect from the budget, which is, of course, now scheduled for the 23rd of this month. Stay tuned.
Join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube.
Welcome to It's the Economy. The big economy news came on the weekend. The final budget for 24-25 is going to be presented on July 23rd. Today, we're going to just check out the big revenue and expenditure numbers that we can expect. We already have 2 economists who have given us their early forecast, and they are our guests. ICRA's Aditi Nair and Anubhuti Sahai of Standard Chartered Bank. Both say tax revenues and a higher than expected Reserve Bank of India dividend can add over 1.5 trillion to the government's revenues compared to what was assumed in the interim budget. But there are many views on whether the government will spend more and where it will spend. Also multiple views on whether the government will retain the interim budget fiscal deficit target of 5.1 or whether it will lower it because of the higher than expected revenues. With this preface, let me invite the guests to speak for themselves. Aditi Nair, Chief Economist ICRA, and Anubhuti Sahai, Head India Economic Research, Standard Chartered Bank. Ladies, thank you very much for giving me early reports, actually. Aditi, can you first take me through how much may a government's revenues increase and why? Your numbers.
Thanks, Lata. So the RBI dividend, that number, we've all dissected quite a lot over the last few weeks. We know that that's about 1 trillion higher than what was put into the interim budget. And on the tax side, broadly, what we're looking at is that the gross tax revenues could be around 50,000 crore higher than what was budgeted. Last year's provisional number also ended up being higher than the RE, so the embedded target now is at or below what we expect nominal GDP growth to be. So there is a little bit of scope over there to increase the gross tax revenue number. And of course, a part of that will go to the state government. So we are conservatively estimating that 20,000 crore extra would be left over to Government of India after setting aside the devolution. So 1.2 trillion is the number that we are working with as the revenue upside.
Okay, actually your expectations are running. Gross tax revenues are up almost a 1.2 trillion, isn't it? Compared to, I think it was assumed as 36 trillion, 38.3 trillion, and now you're expecting it could go up to 38.7 trillion. So 40,000 crores more. And part of it comes from direct taxes and part of it comes from indirect taxes. Okay, Anubhuti, what are you assuming? How much more revenues than what was forecast in the interim budget?
Sure, Lata. So I think Aditi has covered it really well. So we do have an estimate of 1.2 trillion of excess dividend flow coming from the RBI. On top of it, we are a little conservative when it comes to excess tax collection at this point in time. So we are just looking at around 10 to 15K of excess tax collection. We have to take into account some of the shortfalls from other non-tax sources and especially from the divestment proceeds. So in our view, while there is an excess of around 1.4 lakh crores taking tax plus the dividend inflow, we will have to take into account a shortfall of at least 20,000 crores from divestment proceeds. Plus, there is also a possibility of, like a 30,000 crores of shortfall coming from the telecom proceeds. The number has been pegged pretty high. So net, if we look at it, I think 1 lakh crores of excess on the revenue side is something which we can work around comfortably going forward.
Oh, okay. Aditi, would you want to differ? Because April-May tax collections have been very good. Income tax up by 41.6, as you point out. Of course, corporate tax is taking away the thunder. It's minus 20%. But then you also have some good numbers coming in from CGST. It's, I think, a good 12.2% higher. So what can you reasonably expect? Can the government assume a much higher GTR, gross tax revenue?
There isn't a huge amount of difference between what Anubhuti is saying and what I'm saying. If we really look at the absolute numbers, one of the things that we do need to keep in mind is that in many sectors, the activity did have a temporary slowdown in the month of May in particular while the elections were on. So there would be some impact on the tax collections in a transient manner in the next couple of months as well. So I think looking at a gross tax surplus of about 40,000 crore over what was included in the interim budget, that's kind of a reasonable number. If activity picks up very well in the second half of the year, if the monsoon is great and rural consumption really, kind of comes back with a bang, then there would be a scope for this number to be overshot at the end of the year. Okay. But I think at this point in time, may not be very prudent to assume that taxes will overshoot the interim budget estimate by a higher margin.
Okay, no, you're saying about 40,000 crores more than interim budget is, it's not a great deal. And I think that's what Anubhuti is also saying.
As well.
Yeah. And you're also, I mean, if you add the RBI dividend to it, then you're looking at almost 1.5 trillion or a little more than that. Will you also deduct what Anubhuti is saying, like telecom and divestment may have been overestimated?
So, firstly, the tax number that I'm seeing is gross of devolution. So what will be left over to the government will be a little lower than that. And divestment, the number that they penciled in isn't huge. There is, of course, scope that it would be undershot, but I don't suppose that that number will be changed at this point in time. So we'll have to wait and see how the year unfolds. Where we expect the budget numbers to differ from the interim budget are mainly these two sources, tax and the RBI dividend, both of which will be to the upside.
Okay, I think the bigger one that people are worried or wondering what the government will do is on the expenditure side. So, Anubhuti, main expectations.
So on a net basis, our sense is, Lata, that we might see expenditure increases. And here I would also include the possibility of tax cut. It's, I mean, you're collecting lesser income tax. So if we put it all together, then our sense is the expenses can go up by around 0.5 to 0.6% of GDP. Here I'm including higher food subsidy bill, which we already know about after the MSP increase announcement came through. The second part would be if the government decides, and these are all big ifs, decides to give some support or increased installment for the farmer loan scheme, plus some tax relief for the middle income segment, and special assistance for state governments, like of Andhra Pradesh and Bihar. So we all put it together, we can see an additional spend of around 0.5 to 0.6% of GDP. Having said that, as we already discussed, there will be extra revenue generation, plus the government has left a decent amount, I think around 0.25% of GDP worth of capex unallocated to schemes. So maybe all these buffers can be used to offset any increase in expenditure, and to that extent our sense is that the government will stick to the 5.1% target, at least as of now, and maybe throw in a positive surprise at a later date.
Okay, I spoke to some of the tax experts earlier in one of these run up to the budget interviews, and they said, Mr. Dinesh Kanabar, that if you reduce the income tax, if you increase the income tax limit by 1 lakh rupees, then the total loss for the government is only about 13,800 crores. Doesn't seem like a great deal if even that kind of a giveaway is assumed. And the MSP is not unusually high. It's high only for, I think, sugar and maybe paddy, if I'm not mistaken. But for a large part, it doesn't seem to be unusually high. Your estimate of likely higher expenses, Aditi?
So, Lata, we are working with firstly the assumption that the 70,000 crore that was included in capex but left unallocated will basically get allocated, and the capex number will stay at the interim budget estimate level of 11.1 trillion. Then after that, the revenue upside that I was talking about earlier, broadly we feel that it can be split equally into higher revenue expenditure and or some amount of tax relief. And the other half should be basically used to lower the fiscal deficit number. So if we, let's say, spend 50 to 60,000 crore extra on revenue expenditure, either on new or existing schemes, because, new schemes take a long time to operationalize. So if you really want to very quickly move towards supporting the rural economy, it would be easier to do that through the existing schemes where the structure is already in place. And then the balance we use to reduce the fiscal deficit to about 4.9 to 5.1 to 5% of GDP. Yeah. And with that, there is some scope then to reduce the borrowings in the second half of the year.
Okay, so your bet is 5% fiscal deficit, right?
That's right.
Okay, Anubhuti, out of time, what's your best guess of fiscal deficit?
5.1%, Lata. I think we still need to know the special assistance package size, and that on its own can limit the reduction in the budget itself.
Okay. Ladies, out of time, but thank you very much for giving us the broad numbers. About 1.5 trillion more is what the government may get in terms of overall revenues. Tax revenues itself will have to be shared, and therefore they may be able to incur revenue expenses, welfare expenses, maybe even a small tax cut, and yet retain the budget deficit at 5 or 5.1%. That's the best guess from the economists. First cut, we will of course get more numbers as we get closer to the budget. Wrap up on Bazaar Chartbusters.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the
Titan is the top Nifty loser after an underwhelming first quarter business update where jewelry sales were hit by weak sentiment. High gold prices grew just about 8% as against Kalyan, which grew at 29%.
Tata Motors top Nifty gain after Jaguar Land Rover shows strong growth in the first quarter. Brokerages JP Morgan and Macquarie both issue bullish calls.
FMCG is the top sectoral gainer led by Marico and Dabur as first quarter business update implies a pickup in demand and volume growth. And the Met says that monsoons this year will be normal after the rains in Mumbai.
Bank of Baroda corrects nearly 3% after registering its weakest deposit and loan growth in 12 quarters. The bank has lost market share in the first quarter. Hello and welcome to Chartbusters. I'm Raj D'Souza. Joining me as always is Mangala Malu. And as we speak, well, the markets are more or less flattish with a mild negative bias. But let's get straight to the first management that we have on the show. Man Industries, the stock is surging. They won an 1,850 crore order, which it says is the largest in its history. The order is expected to be completed between 12 to around 18 months. To help us out with further details, we're joined by Mr. R.C. Mansukani, the chairman at Man Industries India, who joins us. Hi, Mr. Mansukani. Good morning, and thanks a lot for joining in. First of all, congratulations. You know, in the last 2 years or so, you've seen a sharp rebound in business. So that's good news. But now the stock price has moved up. So the street would like to know, where do you go from here? Now, this 1,850 crore order, we've got the timeline by which it has to get executed, which is 12 to around 18 months. So most of it is provided. Could you tell us what is the margins on this particular order itself, 1,850 crores? And what does it do to your guidance? You know, for the year earlier, I think you were guiding for around a 20-25% growth on the top line with margins in the vicinity of around 10%. Now, will you want to upstage that?
Yeah, good morning. This order we got from international bidding and the well-reputed oil and gas company. And this is an offshore project. The offshore is a very high-end usage of the hydrocarbon sector. And this is a specialty coating where the high margins are always there because of a specialized field. We are expecting margin should come up because we announced earlier 10% guidelines. I am likely to improve it because this order is high value added and higher EBITDA.
Okay.
So overall average should come much higher, whatever we expected and announced. And
how much higher, sir?
Yeah, sorry.
How much higher will the margins be on this order versus your 10% guidance?
Yeah, this would be around 14 to 15% EBITDA. But we have to see the overall, whatever the year gone and what is the lead time and this material and the part of the project will be completed the current year. It will be a little bit carry forward to next year. So overall, but apart from that, we have some other good order also on hand, and overall, whatever we announce, it will be much higher.
Okay, last year.
Yeah.
Yes. So, Mr. Mansukani, congratulations. It's a really good order. If you're going to be making 14-15%, it's much better than what you're currently doing. So, given that now this order has come as a booster shot, what kind of a revenue growth can you do? I think last year you did around 3,100 crores of revenues. Now, given the kind of order book you have and with this booster shot coming in, what should the revenue number look like by the end of this year, that is FY25? And the blended margins moves up to what? Around 10.5 to 11% or even better than that?
Better than that. And first of all, the revenue, we have changed from last year 3,200, and it should be roughly 20 to 30% growth expected current year. And the next year, because of our other companies also going to start some projects, we are coming up in Jammu and some in abroad. So all will come in the 25, 26, which we are expecting 100% growth. Approximately, we are trying to achieve 100% growth in next 2 years.
All right. No, sir. I want to clear the air over here. 20 to 30% top line growth for FY25. Is that correct?
Yes.
Okay. And in FY26, I think earlier you were talking about around 6,000 crores of revenues in FY26. You're maintaining that, so it will be double of what you did in the last financial year, correct?
Yes, sir. Yes, sir. You are right.
And margins, earlier you were talking about around 10%. Now you said that the margins will be better. So give us a blended margin number. For FY25, what will it be? FY26, what will it be?
Yes, so it's very fair. Will be blended number will be 25, 11 to 12%. And 25, 26, we will try to maintain more than 12, average out should be 12% plus.
All right, so 26 will be 12% plus. You spoke about a couple of, projects coming on stream and that growing your business. So I just wanted your thoughts on two things. One is the stainless steel facility. When does that get commissioned? Is there a delay on that? And secondly is the emerging hydrogen transportation market. When does that start flowing into your revenue? How big is the opportunity here?
Yeah, regarding this Jammu project, stainless steel, we are expecting to start the production 25. Maybe the financial year 25, 26. The early 25, we are expecting the work is going on. The equipment's order, some developments also there. As well as you are talking about the hydrogen. The hydrogen, the most important, we are compatible to manufacture, all tested, we got the accreditation, everything. The hydrogen pipelines in worldwide little started because it's a new energy, a future energy. And we kept ourselves ready to come the more boost. Their boost will be next 1, 2 years, 3 year continuous. Depend on country to country, which country adopting first, which later on.
So for hydrogen, you are ready right now. There is nothing which is come in terms of revenue. You are looking at that as an opportunity over the next 2 to 3 years. But on stainless steel itself, you said?
No, sir. No. We participated some tender in the world market already for hydrogen. But which will come in slowly will come, and then it will be, pace will be much more higher next year onward because a lot of countries, they are doing
What is the size, sir? What is the size? How many tenders have you participated in? What is the order that you've won?
Yeah, right now our bid book is 1.5 billion US dollar in international market. You can say 12,000 crore approximately.
Okay. And how much of that is from green hydrogen? This hydrogen pipe that you're talking about?
Maybe 4 or 5 projects around 2,000 crore in beginning, is a beginning.
Okay, all right. And the stainless steel business that gets commissioned, the stainless steel division gets commissioned in the early part of FY26. Is that correct?
Yes, sir. And their EBITDA will be higher because we have to consolidate it. That's why the overall EBITDA will be improved.
Got it. All right. And what could you tell us? How is the debt looking in books? The finance cost, if I look at it for the last year itself, that had moved up a little bit. But you have other income as well, that corresponds to it. Finance cost for the last year was around 90 crores. You had some equity infusion as well. So you maintain that you're virtually debt free. So explain this to us. Is this the working capital or what is it? Short-term
it is
loans?
working capital, mostly working capital, because we are bidding in the higher amounts and higher volumes. That's why our bank guarantee charges, LC charges, ABG charges, PBG charges are high, which we are trying to control now. But because of the volume is increasing, that's why justifying. There is not a very big loan on the company, although we are a cash surplus company. Still, we have the cash surplus and the net surplus in the 2024 balance sheet, and the debt is very minimal.
Right. And what about CapEx? Since you're speaking about higher orders coming in, higher capacities coming in, what is the CapEx that has been lined up for this year, and what's the plan for next year?
Yeah, the total CapEx, not by through our subsidies companies, is around 1,400 crore, which will be completed, which is ongoing 23 also, 24 also, and 25 will be completed, all the projects. And then yield is going to start. That's why we are announcing should be guidance is around double the revenue of 24. That's why we are announcing next 2 years.
So what is the capex for this year then? 1,400 was for 3 years together. How much is pending? Do you?
No, exposure we have taken some LCs, etc. The equipments, LCs, etc. open. And this year again will be 300, 400 crore. And our cash generation is good enough. We are not taking the new loan. But the subsidies company, they are taking loan on their own strength. And it's all the tiger.
And the stainless steel plant you said, which starts early next year, how much will that add to your revenue? What is the asset turn here?
In the first year we are trying. In the first year we are announcing 800 to 1,000 crore, the additional revenue, and as well as to some other our exposures will be around 1,000 crore, and this company will continue growth. That's why we are trying to reach 6,000 crore in next 2 years.
Got it. All right, Mr. Mansukani, congratulations. You have come back, from difficult times in the last 8 quarters or so. We wish you all the best, and we're going to hold you to these numbers. 6,000 crores in FY26. In FY25, you're guiding for a 20 to 30% growth with margins upscaling from current levels. Thanks a lot for joining in.
Thanks.
Well, for the time being, we slip into a short break. On the other side, we have another management waiting for us. The MD and CEO of Dhanlaxmi Bank will be joining us to tell us about their Q1 business update. Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Think I'm sitting on any normal motorcycle, don't you? Well, this is actually the world's first CNG motorcycle by Bajaj Auto. You don't believe me, do you? Wait a second. Take a look. Here you have a CNG cylinder, and that proves my point that this is the world's first CNG motorcycle. Here you actually have a 1.8 kg cylinder fitted inside a motorcycle. This configuration took a long time. It's taken 2.5 years of hard work by the company and its R&D team to put it together. It's an absolutely new ground-up motorcycle developed from scratch. And with the CNG cylinder, you also get a fuel tank right here. So you've got a 2-liter fuel tank and a 1.8 kg CNG cylinder right here.
Welcome back. You're watching us here on Chartbusters. One of the stocks that busted the charts on Friday was Dhanlaxmi Bank. The stock was higher even as the company, registered weak loan growth in the first quarter, we had a big uptick in their gold loan book itself. We have with us Ajit Kumar KK, the MD and CEO of the company, joining us. Thanks a lot, Mr. Ajit Kumar, for joining in. You recently were appointed as the MD CEO of the company. So the first quarter so far, the 10 days that you were at the helm, they've been good, especially on the gold loan front. So let's talk about your target for the bank for this year and the medium to long term later. But for this year, what's the kind of loan growth that you are targeting, along with the loan growth in your gold portfolio?
Good morning and thanks. Current year, in Q1, the numbers were quite good. Sequentially, we have grown in all major areas like advances, deposits, and with gold Y-on-Y growth recording almost 29% growth. The current year, we are forecasting a growth of around 15% for the loan book. Last year, we had grown just around 6%. So currently, the growth of around 15% in loan book and a total business growth of around 14-15%. Liabilities around 13%. That's what we look at. Gold, definitely, we are looking for more than 20% growth during the current year. And that is one area that focus is always there. It had been there and we continue to look forward for that kind of growth. Also, the NPA book is coming down steadily with the industry at 12-year low of 2.8%. I'm sure that our bank has also been showing a very positive decrease as far as the NPA book is concerned, which is going to continue in the near future as well.
All right. Hi, Mr. Kumar. First of all, welcome to the show and congratulations on taking over the bank. We wish you well in the years to come. We've got the number out in terms of loan growth, mid-teens growth, with gold outpacing that, and liability growth, I think I heard, was around 13%. Now, since you touched upon the asset quality, could you tell us the net NPAs as well as the gross NPAs? Where do you see it move? The last recorded number we have on gross NPAs is 4.05%, which is an improvement from close to around 5%. So by the end of this year, FY25, where do both these two numbers go?
Our expectation is that it is definitely going to be somewhere around 3. It will be less than 3% for the current year. And the net NPA also will be less than 1%. That's what we look at for the current year. Since the last 2 years, every year we had seen a 1% decrease in GNPA. This year also we expect a more than 1% decrease in GNPA, as well as the net NPA coming down to less than 1% maybe after a very, very long time.
All right. So net NPA sub 1%, GNPA sub 3%. This number was closer to 4% at the end of the previous financial year with 15% loan growth. What does all of this mean for the margins at which the margins you make on loans? The NIMS target going forward, since gold is going to grow faster than your overall book, 15% loan growth at a time when interest rates are higher, cost of funds are higher as well. So what is your NIM target for this year?
The expectation is that from the current level of around 3.2, I think we expect it to go up by another 20 basis points, maybe somewhere around close to 3.4. That's what we look at.
All right. The problem is, Mr. Kumar, I think there were some bonds that saw a downgrade by CARE in the last week or so. Could you comment on that? And in turn, when you see a downgrade, sometimes the cost of funds goes up, which in turn could have an adverse impact on NIMS. Your comment on this?
Yeah, definitely. If any downgrade will have some impact, that's for sure. But as far as we are concerned, we are looking at certain Tier 2 bonds are getting matured in the next financial year. And we are sure and confident that those can be got replenished with almost at the same cost, we'll be able to replenish it.
So in light of that, how will NIMS increase? Are you looking at your yields on certain assets increasing? Because even deposits are difficult to come by currently.
Yeah, I think the indication that we have during the Q1 growth is that because we have got the benefit of a small base, and if we have got a network, the bank is quite well known in the regions where they are significantly present. And with these in place, I'm quite confident that our focus, because we have got our book, corporate book is not significantly high, it is somewhere around 20 to 25%. So we are not planning to increase the corporate share. Our focus will be on MSME, gold loans, to an extent, small segment in micro. And if we focus on these areas where we are traditionally strong, and if we are able to encash on this by improving the processes and coming out with new products. And because our book size for MSME is just around 2,000 crores, so if we are able to significantly improve, that's where we get higher margins. And if we can deliver credit at a faster pace, I think I'm sure that we'll be able to meet the NIM that we are budgeting.
You briefly mentioned cashing in. Given the kind of rise that we've seen in the stock price, which has more than doubled in the last 1 year, any fundraising plans?
Yeah, we have got an approval for capital raising through rights issue for 300 crores. And in the next couple of months, we plan to go ahead with this and everything is in place to take it forward.
All right, so 300 crore via rights issue. Just wanted to know, if you get that 300 crores, what does that do to your ratios, your CRAR and the Tier 1 capital?
I think Tier 1 capital will definitely be somewhere around 14%. And with a mix of Tier 2, we'll be crossing more than 15%. And that's what we are looking at. Currently, we are at 12.71%, well above the regulator benchmark, but capital is something that is required for our growth as well as for meet other requirements while we are aiming for a steady growth in the next 2 years, much more than what I've been growing during the last couple of years.
And finally, just before we let you go, we got most of the numbers out of the way. The two numbers that we didn't, one was the slippage that you're targeting or looking at this year, and what's the kind of credit cost guidance that you have?
And slippage, I mentioned the gross NPA will be around 3%. So we'll be looking at numbers, absolute numbers. Currently, the number is at around March. It was 421 crores. We are looking at a number of around 350 crores gross NPA figure. That's what, including the strengthening our collections through our existing book as well as through the technically written off book. I think we'll be able to meet a gross NPA number of around 350 crores. Which will be take us to a NPA GNPA percentage of 3% on an asset book of approximately 15,000 crores.
Okay, Mr. Kumar, we look forward to you joining on the channel far more often as well. You've been, you've patiently taken all our questions and given us some answers. We'll hold you to these guidance. But until next time, we wish you well and we look forward to having a chat with you as the quarter progresses. For the time being, slip into a short break, come back, continue our focus on markets and stocks that are moving around.
Now let's show you how this motorcycle moves between the CNG mode and the petrol mode. You can actually start it in either mode. And let's start the ignition here. So it's currently on CNG. As you can see, there is a CNG symbol right here. And it also has a meter gauge showing you how much CNG you have in the vehicle. So while riding, if you want to switch to the petrol mode, all you need to do is press this toggle switch. And now you are in the petrol mode. You're riding the motorcycle on the petrol mode. So you don't have to make any major changes. All you need to do is press this toggle switch to change the riding mode. Now let's come back to this digital instrument cluster that we have here. What you get is a fully digital instrument speedometer. You've got smart call alerts, you've got message alerts, you've got Bluetooth connectivity as well, and you've got a button here for receiving calls. Now let's show you some of the specifications of this vehicle. Starting from the tires, I'd like to start from the front. You've got a 17-inch wheel here with disc brakes and drum brakes on the rear end. This is
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, it's a good time to get you some ideas for profit from Money Control Pro. Anubhav Sahu of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anubhav, take it away.
So we are looking at chemicals as one potential sector which can benefit from policy push towards import substitution in the upcoming budget. Now it is in this regard we prefer Balaji Amines, which is a leading play on aliphatic amines. Stock has been range bound for last 18 months but warrants attention given a big Q4 performance, given pickup in volume growth and EBITDA margin of 25%. Now, company sees better demand environment along with the easing of destocking headwind and pricing pressure from China. On the back of that, management expects minimum 10% volume growth and EBITDA margin range of 21 to 24% in fiscal year 25. In addition, a series of projects are getting commissioned in coming year. This includes methylamine capacity, which would nearly double by December 24 and would be captively utilized for derivative products. Secondly, upcoming electronic grade DMC and dimethyl ether plants would cater to lithium-ion batteries and as a blend with LPG respectively. Further, 750 CR capex announcement for the ethylene diamine derivatives is another growth lever to watch for, wherein lean balance sheet provides a scope for fundraising. Now, while this adds to earnings prospects, stock trading at an EV by EBITDA of 14 times fiscal year 26 estimate is not demanding in our view.
All right, that's an idea of a profit coming in from our colleagues at Money Control Pro. But as you can see at the top of your screen, all the frontline indices are now moved into the red, slightly deeper than what we were at the start of the show. But the FMCG index doing extremely well. With that, we'll wrap up on this edition of Chartbusters. Thank you for watching. Trading Hour comes up next.
Premium variant, the base variant has drum brakes both on the front wheel and the rear wheel. In terms of the front forks, you've got these bulky, muscular looking front fork covers with Freedom written here with the tricolor. So this could be catchy and attractive for many consumers. This engine that you see here is a 125cc engine. Here again, there has been some amount of engineering to make sure it's lower compared to your regular 125cc motorcycle, and it's lower because you have to accommodate both a fuel tank and also a CNG tank as well. The company has given this a muscular look to make sure that the rider feels he's riding a rugged vehicle. You've got these luggage hooks here as well if you want to carry bags on both sides of the vehicle. A lot of work has gone into the rear end of the vehicle, starting with the fender and the grip. All of this has been engineered to make sure that a CNG cylinder can be fitted and removed very easily. A word or two about the rear end of the vehicle, including the suspension. You've got a 16-inch wheel here, but it is wider, a kind of wheel that you find in sports vehicles. You've got a monoshock suspension, and the addition that the company has made is a link suspension that you can find here. What does this do? This actually makes riding for the pillion riders more comfortable as well. And a bit of trivia here, you actually have a map of this entire Akudi facility with the R&D center and with the managing director's office. So this whole map is there on the motorcycle as well. It comes with 5 color themes. You're seeing this bright blue scheme. You also get it in black, red, grey and white. The total weight of this motorcycle would be around 149 kgs. And the company claims that along with the capacity of the 2-liter fuel tank and the 1.8 kg CNG cylinder, you can actually drive this motorcycle for about 300 kilometers. So that is the total range of this motorcycle. So that was a preview into Freedom NG04, the latest offering by Bajaj Auto. They hope this will be a big disruptor in the Indian.
Good morning. Welcome to Trading Hour. It's a brand new week of Trading Hour. I'm Reema Tendulkar. With me is Hormuz Fatakia. And all the attention appears to be diverted on the weather updates, the monsoon situation, and whether your area is waterlogged or no, because the markets per se are very, very quiet. Thanda, as you call it, after last week's, gains. Even Friday was actually a fairly quiet session, a nothing sort of a session, but there's so much happening on individual stocks. So pull up a Titan Industries. That's a stock which was under pressure on Thursday, Friday, and even today. It's down close to about 4%. Disappointing Q1 update. The stock is down nearly 9% in the last 5 trading sessions, 5 days of losses. But that's being offset by strength in FMCG. The FMCG index is up 1.3%. In fact, if you pull up the Nifty, the top 4 gainers are all the FMCG names. So it starts with Tata Consumer, 2.3% up. Then you've got a Nestle, HUL, ITC, and that doesn't even cover Dabur and Marico, where there are news updates, a pickup in growth, rural, and plus with the monsoon situation now improving, that further bodes well for rural consumption. PSU banks, though, are under pressure. The Nifty PSU banking index is down close to about 0.7%. Disappointing business updates coming in from Bank of Baroda, Union Bank. And, since the focus is going to be on so many stocks, I thought we'll quickly pull up the, cues for this week. In terms of results, on Thursday, you've got TCS. On Friday, you've got HCL Tech. And then on Saturday, you've got Avenue Supermarts. There will also be one eye on the India macro updates. So inflation, IIP and RBI's forex reserves. And globally, there are two key events to watch. One is the US inflation data. And second, Fed Chief Jerome Powell will be speaking both on 9th and on 10th. On 10th, he's actually expected to deliver a fairly long speech. So we'll watch for that too.
All of last week, we were dominated by 2 stocks and 1 theme. Reliance was one, HDFC Bank was the other, and IT was the theme that dominated. But today, it possibly felt as though this is going to continue with the IT earnings and all of that. But the FMCG stocks have certainly sprung up a surprise, especially Marico and Dabur, considering the positive commentary that has come in with regards to the rural growth and in rural consumption as well. And pull up the PSU stocks, and these are the ones that have done extremely well this morning. An IRFC and an RVNL, the railway related stocks are doing extremely well today. IRFC hit a new record high in today's trading session. 204 was the high there that it made. It's now another 7% higher there. RVNL also, there was a block deal as well that took place in RVNL, almost around 800 crores. And 550 there on RVNL as well. Ircon doing well for itself, 5.5% higher. And pull up a HUDCO. That is the stock that I wanted to speak about, because there is an initiation of coverage by Nirmal Bang on the stock, projecting a price target of 375, and in the last 12 months, HUDCO is up almost 500%. So it's the kind of frenzied moves that we have seen in all of these PSUs. The PSE index, though, is still not managing to cross the high that it made on the 3rd of June, which was 11,353. Even today's high is somewhere close to around 11,150. I say 11,160 is around 11,200 is the high of the day, but it's still not managing to get there.
The high is 11,230.
That was today's high is 11,200, but yesterday's high, the June 3rd high, is 11,353. So it's yet to get to that level.
200 points away.
200 points away, yes. It's still to recover from the losses that it made on the 4th of June. But there are plenty of other stocks in focus as well, most of them being power utilities. And they are in focus on the back of positive notes coming in from brokerage firm Investec. And Vivek is joining in with these details. Vivek, what is Investec saying on all of these power utility stocks?
Well, that's right. So, very interesting note coming in from Investec today. So, what they've done is they've initiated coverage on the entire power space. So, both utilities as well as companies that provide EPC services, focus towards power companies. So, what they've done is, number one, they're talking about the power sector itself and what kind of demand trends they see. They're expecting demand to remain strong, especially from FY24 to FY32. See demand growth rate at a CAGR of 6.2%. What are the key drivers? Rising urbanization, increased usage of AC amongst rising temperatures, and also enhanced manufacturing as well as economic activity that the country is seeing overall. So now what they're saying is that by FY30, in addition to what is already existing, India is trying to add close to 286 gigawatts of new capacity. We're talking about power capacity, and Ministry of Power plans to add almost 50 to 55 gigawatt of new thermal capacity by FY32. Remember, this is in addition to the 20 gigawatts which is already under construction. So significant addition seen, both thermal as well as renewables. So what are the stocks that they like? They like stocks especially from the renewable space. So NHPC is one that they like. They have a target price of 124 rupees on the share. They're seeing capacity of the company to increase to 14.2 gigawatt by FY27, and they're seeing the regulated equity of the company rise to 32,810 crore in FY27 versus just around 15,000 crore at the end of FY24. The second stock on the radar, Inox Wind, similar to what other brokerages are saying, they have a buy rating there. They are saying that India plans to go ahead and increase wind capacity additions quite significantly. They are saying that they are expecting the company to register 76% and 74% CAGR respectively in revenue as well as EBITDA till FY27. The third stock on the radar now coming to the EPC side. Kalpataru Power, they have a target price of 1473. They are saying it's a prominent EPC player with strong presence in both domestic as well as international market. They expect EBITDA and PAT to grow at 23 and 33% CAGR respectively between FY24 to FY27. A similar mode of business, KEC International is the other stock that they like. They're saying prominent player as far as the T&D is concerned in the power space. They're saying recovery in T&D space and promising bid pipeline should actually drive revenue growth for the company at 13% CAGR till FY27. So they have a target price of almost 1,002. This is giving the company a 22 times price to earnings ratio for the FY27 consolidated EPS. Lastly, JSW Energy, while they like the stock and the company, they have a hold rating. They believe valuation at current levels limits most of the upside and most of the positives are priced in at the current price.
Thank you very much for that. DOMS, the stationery maker, is up 4.5% after Axis Security initiates coverage with a buy rating. Why do they like it? Upasana joins in with the details. Upasana.
Axis Securities has initiated coverage on DOMS Industries. It says that Indian stationery and art material market has seen continued growth over the years, and it is expected to grow at a 13% CAGR over FY23 to FY28. DOMS Industries has emerged as a leading player in the Indian stationery market, holding an overall market share of 12% in FY23. It expects company's EBITDA margin to be in the range of 17 to 18% for FY25 to FY27, driven by various factors such as increased capacity utilization, improved product mix, stable raw material prices, and improving on-ground execution. In terms of ROC, the brokerage says that it is likely to improve from 22% in FY24 to 25% in FY27. It also expects a robust revenue CAGR of 25%, EBITDA CAGR of 26% and PAT CAGR of 28% over FY24 to FY27. It also says that with improved visibility in earnings growth and a strong return profile, the stock appears attractive in the mid-cap space. Hence, the brokerage initiates coverage on this stock with a target price of 2,670 per share.
Upasana, thanks a lot for that. What a mover DOMS has been as well this year. The stock is slightly off the highs of the day today, but still 3% higher. 23.15 is DOMS Industries. But if you pull up a year-to-date chart, the stock is up 85%. That's the kind of moves that you're seeing in this stationery manufacturer as well. So good going for DOMS Industries, and Axis Securities there has initiated coverage on the stock. But time for a short break here on Trading Hour. Up next to discuss what's buzzing in the commodity space with Manisha Gupta. Also get you a rain update as well. Stay tuned. Back on the other side.
And abroad, let's see how the customers receive this vehicle. From Bajaj Auto's R&D and manufacturing facility here in Akudi, Pune, with video journalist Balbir, this is Parikshit Luthra.
In the last 1 month or so, well, clearly the IT space, has outperformed. And that's the reason why, in fact, the street believes that maybe Q2 is going to be quite good. From Q1 onwards, we'll see a recovery. So let's run you through a few data points. First up, in the last quarter, at the end of last quarter, various brokerages went ahead and they skimmed down their estimates. And UBS, the chart should come up for you on the screen. FY25, FY26, well, they went ahead and they cut some kind of, guidance in terms of what they were estimating. But the question is, was that the end of the downgrade cycle, and will things look up from here on? The street is basically focusing on 3 parameters, and that's why there is optimism that's building in. And these are inputs coming in from Kotak. They're seeing that seasonal strength coming back in, large deals ramp up, that's possible, and also there could be a reduction in intensity of the cuts that we saw, particularly in discretionary programs, which in fact will bode well for it. So that's important as well. Brokerages, well, various came out with notes this week, and we had the big double upgrade coming in for CLSA. On Wipro, they increased their target price. They said operationally things will improve. They also hinted that there could possibly be a buyback as well. So that was on CLSA. Nomura, they turned positive on the sector on the whole. while Jefferies as well as UBS, they're being very, very selective. And one of the reasons for Jefferies to be selective is they are highlighting that valuations, well, they're at a premium in comparison to its 5-year average, as well as if you compare it to what the Nifty is trading at. So, Jefferies puts out that the Nifty IT index is trading at a 28% premium in comparison to what it normally trades at.
Welcome back. And rains have been the buzzword this morning, especially in Mumbai, and as heavy rains have lashed across several parts of the city, and most of them are now reeling under several severe waterlogging situations. Now, the BMC has declared a holiday for all the government and private schools in the city. My colleague Santya joins in with the details.
Heavy rain started lashing Mumbai and nearby region last night. At present, we are in Mumbai's western suburb area. This is Santa Cruz area, and the flyover above us, that is Wakola flyover. And let me show you around. So this particular patch, this area below Wakola flyover, you can see how badly it is waterlogged. You can see that auto rickshaw, and you can imagine the intensity of waterlogging. The traffic movement on this particular patch has just resumed. It was halted, it was suspended for over 2 hours. Heavy rainfall started last night. Keeping that in mind, BMC has declared a holiday for all the schools, BMC schools, private schools, all the other government schools. The heavy rainfall that started yesterday has led to waterlogging in multiple areas. This is Wakola area, Santa Cruz area of Mumbai, western suburb, and many more areas of the city are looking exactly like this. Andheri subway, Gandhi circle, Science circle, Govandi, Bhandup, all these areas are reporting heavy waterlogging. As far as the train services are concerned, Central line fast trains are suspended because the water level is above the track level. In areas like Bhandup and Nahor, slow trains on the Central line are running, but they are running 30 to 40 minutes behind schedule. Western Railway has claimed that the trains are running only 10 minutes late in the Dadar Mahim patch, Dadar Bandra patch. But as of now, train services are also impacted in Mumbai. As far as the traffic situation is concerned, the entire Western Express freeway is badly jammed, and there are terrible traffic jam patches in eastern suburbs as well. IMD has issued a nowcast warning under orange category for the next couple of hours. Next update will come soon. But as of now, IMD's 24-hour forecast was also quite off the mark. It did not indicate that Mumbai was likely to witness this level of heavy rainfall.
Santya, thank you very much for that. And I think she had also updated us that high tide is at almost 2 o'clock, 1:57 p.m. So, if the rain intensity picks up post-noon, then perhaps it could exacerbate the waterlogging situation right now. But let's move on to the commodity space. Manisha is joining in, and she's got her eye on crude. Manisha, the whole of last week we were talking about rising crude prices. What's happening today?
Well, we have seen some profit taking finally come in for this segment. For the last 4 weeks, actually, the crude oil prices have posted positive gains. But this week it started slightly on a weaker note. There has been some profit taking after that huge run up that we saw in crude oil prices. And the markets will want to watch for further positive data before you can see another leg of gains come in here. But at this point in time, it's trading 0.5% on the lower side there. Well, the prices did gain 4.5% in the previous week and 5% for the month of June as well. The US non-farm payroll data came in better than street expectation, but as far as the US unemployment data comes, that's at a 2.5-year highs. You also have seen the ISM manufacturing data slightly on the weaker side. So markets are reading this mixed numbers. Other thing is that the 9-month-old Israel and Gaza war is still on, but there are some ceasefire conversations that really seem to be picking up right now. And there is Iran, Iraq, Nigeria now mediating as well, including Egypt also. So the markets do believe that since the Middle East totally seems to be working on this, that premium seems to be getting off the markets right now. Having said that, remember the hurricane season in the Atlantic has just about begun, and the first named hurricane, which is Beryl, is making a landfall tonight, and many terminals and ports in Texas are shut because of that. So oil facilities also seem to be looking at some supply disruptions. That is something that will keep the prices supported in days to come.
Indeed, Manisha, thanks a lot for that update. And Cyclone Beryl is the one that you'll have to watch out for when it comes to oil prices, as well as it strikes the coast of Texas later in the day. But time for a short break here on Trading Hour. Up next, we discuss market technicals. Vishal Malkan of Malkan's View joins us on the other side along with his top trading bets as well.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome back. The big news of Friday was Bajaj Auto launching the world's first CNG bike called Freedom 125. The starting price will be very competitive, 95,000 rupees. Now, Rajiv Bajaj said they're looking to break even with the motorcycles within this fiscal year itself. Listen in.
If CNG catches on the way we are hoping it would be not beyond this financial year that we would be able to hit our capacity, which by that time could well be 40,000 motorcycles a month. And I would certainly expect that at that level, it should be as profitable as any other motorcycle we make. We are starting, as Rakesh mentioned, with 10,000, very quickly hopefully move to 20, eventually to 40, by which time we would hopefully be in some of our overseas markets as well. I can say that for this capacity, it would certainly be a figure that is more likely to be in double digits in terms of hundreds of crores. So in double digits rather than in triple digits. With the electric vehicle, for example, just to contrast, it's a very long road. You know, we've come a long way since when we started 5 years back, and now we have some line of sight to profitability. I would still say it may be a year or two away till we have reasonable, acceptable profitability with electric vehicles. As opposed to that, where we are still bleeding, and I mean the scooter. You know, the three-wheeler is very, very profitable, the electric three-wheeler. The scooter is not yet. With the Freedom, there is no bleed at all. So we start off on a very good wicket. With the electric Chetak, with every vehicle, we are putting some money on the vehicle and giving it away. Here it is not the case.
Well, the brokerage verdict on this is fairly mixed. So you've got a Nuvama, which has raised the target price on Bajaj Auto all the way to 12,000. You also have Jefferies, which has raised the target price to 11,640. So significant upside from current levels. But on the downside, you've got UBS, and their target price is down to 6,250. And the key reason why UBS is so bearish on Bajaj Auto, more than a 30% downside, is because they believe the future is EV and not CNG. So that's on Bajaj Auto. Did well on Friday, the stock, but today it's a modest downtake of about 0.5%. But moving on, Nuvama has written a note on what on this CNG bike from Bajaj Auto, what they could mean for the city gas distribution companies. And I think Sonal joins in for more on that. Sonal, on this, they've also raised the target price on an IGL, MGL?
Well, yes, they have. We were highlighting it on Friday that MGL could be in focus on because of this Bajaj Auto CNG bike launch that has come by, because it opens up a new area or a new segment for CNG companies, because it's starting at the start, it'll be in Maharashtra itself. But now Nuvama says that they expect CNG total cost of ownership to be 29 to 32% less than petrol, 28 to 30% less than EVs, and will add around 5 to 13% in terms of CNG volumes by 2030 as well. While the initial sales focus will be in Maharashtra and Gujarat, the company is planning to make it pan-India as well by October 2024. That means the other players will get a chance as well. Management expects total market at around 6 lakh units with CNG availability at 60%. CNG volumes could see a spike in volumes because of two reasons. First, Bajaj Auto will also launch it in new variants, the 100cc and 110cc variants, and the other two-wheeler OEMs will also look at the CNG segment, so there could be launches by other brands as well. They've raised the target price for all the three stocks from 9 to 17%. They are incorporating higher CNG volumes for FY26. They have a buy rating on the three stocks, and the target price will come up for you on the screen. So quite bullish on the volume growth perspectives going forward because of this CNG bike launch.
Stepping on the gas is Nuvama. Sonal, thanks a lot for that update. But staying with auto, but moving on to Tata Motors then, which is in focus on the back of the JLR business update. Sonia is here with more details. Sonia, how does the update look like?
It was a decent update coming in from Jaguar Land Rover in the first quarter. So if you look at the overall numbers, right, it's a growth of around 5% that JLR wholesale sales have seen. But if you look at the retail data, retail sales are up about 9% on a year-on-year basis, coming in at 111,000 units. Now, if you look at it apart from the China JV, of the China JV, the retail growth was actually pretty healthy for Jaguar Land Rover at about 15%. And some of their new launches have done very well. They have upped their production targets as well. So if you look at what brokerages are saying, JP Morgan has an overweight on Tata Motors. They have a target price of 1,115 rupees. Macquarie has an outperform with a target price of 1,171. Macquarie says that the product mix is something that continues to surprise positively, and most geographies are picking up now into double-digit growth, so that's something that they like as well. Addition to this is the fact that the balance sheet of Tata Motors, the group, is improving substantially, and they are all set to meet their EBIT margin targets for FY25 and 26. Back to you.
Thank you very much for that. Shilpa, Medicare, remember the conference call was today at 11 o'clock to give you an update regarding the CDMO arrangement which the company announced on, I think, Friday, when the stock had rallied close to about 14-15%. And I'm just reading Ekta's note. It's for oxylanthanum carbonate, OLC, which is a new chemical entity molecule, and some updates related to that. Vishal Malkan is also now with us for a quick technical check on the markets. Vishal, quietish sort of a day, but in the red now, down about 20 points, 50 points on the Nifty. Your thoughts on the day so far and your stock calls?
Hi, I think Nifty and Bank Nifty, after a stupendous rally post-election, we are taking just like a halt and consolidating between that range of 24,100 and 24,300, 400. So it's nothing much to worry, but just like a kind of a consolidation on Nifty, Bank Nifty. And I think the stock specific move which we are looking at right now is, of course, the pharma stocks and the auto stocks, which are the current buzz. So I'll go with the Glenmark Pharma with a buy with a stop of 1320 for a target of 1420 and 1450 in the next few trading session. And another stock on the auto sector would be Atul Auto, which has given a good breakout above that 790 levels. So I'll go with a buy on that with a stop of 785 for targets of 820 and 830 in the next few trading sessions.
I think on the PSUs, Vishal, a lot of them have been hitting newer highs. IRFC, IRCON, HUDCO, all of them. Anything that looks attractive to you on the charts?
I think IRFC is one thing which I'm looking at as a potential buy, and that could go another 15 to like another 10 to 15% on the upside. So that's my best bet in that sector.
All right, Vishal, thanks a lot for joining in, sharing with us your views on the index and on specific stocks as well. Time for a short break. Up next, we get you more stocks that are buzzing: Titan, Marico, Bank of Baroda, EU Small Finance Bank. We'll tell you why all of these are in focus in today's session. Stay tuned. Back on the other side.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness.
Back with us here on Trading Hour, and plenty of business updates were reported on Friday and across the weekend, and let's focus on some of them. First up, Dabur and Titan. Mangalam is joining in with details from this FMCG space. Mangalam, how has the commentary been like?
Well, commentary has been weak for Titan, and for Dabur it's been good. So that's why Titan is the top Nifty loser. So let's start with Titan itself. You know, the overall revenue growth for the company this time around, the jewelry business, which is the mainstay in India, grew at around 8%, which is much lower than what someone like a Kalyan did, which was close to around 29% in the India business itself, around 28% on the overall business. Akshay Tritiya for Titan, even though it saw double-digit sales growth, remember the buyer growth this time around was in low single digits, and that's because of higher gold prices, lower number of wedding days, and weak sentiment that impacted demand. Add to that, the demand for plain gold jewelry was much higher than studded growth, so studded was moderately lower in comparison, and that would have a bearing on the company's margins itself. What did not do too well for them was the other sectors as well, which were expected to lead growth this time around. Case in point, something like an eye care or emerging businesses, which have the sari business, the Nehra, that is, and Carrot Lane as well, grew at just around 18% versus its last 4 or 5 year CAGR of upwards of 40% itself. So all these factors, with competition doing higher and the company trading at higher valuations than competition, saw a decline in the stock price today, and a lot of brokerage EPS cuts as well. The management had told us that they don't see margins in the jewelry business growing in the medium term beyond 12% as well, putting an upside cap to that as well. Let's talk about Dabur now. Dabur was good update. Why is that? Because remember, the stock did well, ever since the company reported their fourth quarter numbers, and the management here on CNBC-TV18 indicated they're gunning for double-digit revenue growth this year, led by high single-digit volume growth. And that time as well, we had seen that sequentially there would be improvement in rural demand, and that's exactly what the company has said. In this quarter, the revenue growth could be seen in the mid to high single-digit mark, in which in India there would be mid-single-digit volume growth. Remember, volume growth typically picks up in the second half of this year, so the start has been good. Home and personal care as well as healthcare segments have done well, high single digits, whereas the segments that did not do too well were the ones which were outdoor facing, and as a result of the high heat that was there during the summer quarter, we saw some weakness there. Badshah Masala for the company continued to do well, volume growth in high teens, so that's a positive factor as well. To add to all of this, the operating profit for the company has been higher than revenues. That means there is margin improvement. So good revenue growth, good margin improvement, and prospects of better second half is something that is keeping that stock afloat up today, 4%.
A quick word on Marico. Even for Marico, we should expect some margin expansion, right?
That's correct. So Marico and Dabur not too different from each other. Both of them have seen sequential uptick in demand. The only reason why Marico as a stock is moving higher than Dabur today is because over the last 1 month or so, Marico has been an underperformer, was down about 2% in the last 1 month, adjusted for today's gains as well. But Dabur had seen a big up move already. Marico posted modest uptick in underlying volume growth. It was led by coconut, parachute coconut oil, which showed about 1% sort of volume growth, 1-2% low single digits. That is, Saffola did well. That has recovered from negative volume to about positive volume. The part of the business that hasn't done well is value-added hair oils, which the company believes will get into positive volume terrain over the next couple of quarters or so. So that should be taken positively. Add to all of this, they believe that going forward, realizations and volumes will only pick up. So that would boost their performance in the remainder of this year, along with improvement in margins, which this company also saw the same as Dabur.
Indeed. Mangalam, thanks a lot for all of these updates there. Marico also doing well in today's session, up over 5%. Moving on to the banking sector now, Bank of Baroda and AU Small Finance Bank also posted their first quarter business updates. Abhishek is here to give us the details. Abhishek.
Well, to begin with Bank of Baroda, on a sequential basis, if you take a look, deposit and advances growth are the weakest in last 12 quarters. And they have lost market share as well because their YOY numbers are below the industry level growth. So take a look at the deposit momentum. It's up 8.8% YOY and a decline of 1.6% sequentially. Industry-wide, deposit growth in June was around 12% level. Domestic deposit is further weak. It's grown by only 5.3% YOY and down by 2% sequentially. The advances growth are about 8% YOY when compared to industry growth of 15-16% on a YOY basis as of Q1 that the banking sector has seen, and it's declined by 1.7% sequentially. In this, the domestic growth is about 8.5% YOY and down by 1.8% sequentially. In the domestic loan book, the retail portfolio grew really strong at 20.9% YOY and about 3.5% sequentially. So overall, the CD ratio has declined both YOY and quarter-on-quarter, and the domestic CD ratio, however, has improved YOY and quarter-on-quarter due to the decline in deposits. AU Small Finance Bank now, deposit growth is weak over here. Deposits have declined on a sequential basis. However, cost of funds have improved for them for the first time in many quarters. So deposits are down 0.5% quarter-on-quarter. We cannot compare the YOY numbers because there is a merger that's based into effect with respect to AU Small Finance Bank in this quarter. Cost of funds have declined by 7 basis points sequentially to 7.03% when compared to 7.1% in the previous quarter. Overall, AUM growth is at 3.5% while the advances growth is a strong 5% growth. So if you take a look, calculate the CD ratio, that's on the higher side at 93% plus. So which leaves analysts with the worry that there will be further hike or growth for deposits, which can put pressure on the net interest margin. CASA is up 2.7% quarter-on-quarter, and CASA ratio has improved to 33% versus 32% in the previous quarter. Back to you.
Thank you very much for that. By the way, Reliance Industries has started its up move. Remember, it was the big mover on Friday towards the end in the last 1 hour. It added on nearly 2.5%, and Reliance Industries is now up 0.7%, and that's helping the Nifty recover. The Nifty had gone down to levels of 24,250, and now it's trying to climb back towards 24,300. That up move is coinciding with Reliance, but because other than that, most of the large caps are largely unchanged. Get into a break. On the other side, we'll discuss market fundamentals, the macro setup with Manish Dangi of Mosaic Asset Management. Stay tuned.
Has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
Welcome back. For macros and markets, we have with us Manish Dangi from Mosaic Asset Management joining us on the show now. Manish, morning. This is Rima here. Wanted to first get your assessment on the US economy. The latest jobs report seems to suggest an increase in the unemployment rate, a decline in job creation. So it does appear the US economy is finally showing signs of, cooling off after being red hot for so long, much longer than what, people were anticipating. So your assessment of the US economy right now, and what does this latest jobs data suggest in terms of what the Fed might do?
Hey, Rima. So you're right, of course. The employment sort of weakness come in somewhat late, in a sense. You starting to see some slack there. The old numbers are getting revised downward. In general, most of the nowcast in terms of growth is sort of hinting at a possibility of slowdown. I still think that markets are too perky and sort of too confident of good second half. So it's very, very likely that US slows, what Citi put out yesterday, that there could be over next 8 meetings, 25 basis point each rate cuts. And I've been of this view for sort of fairly long that, you will have US rates in threes, actually, a 3 handle, 3 3/4, 3 half in 2025. I think, markets are sort of underappreciating the undercurrent of slowdown in the US. So, I agree that you would have significant slowdown in US over the next 6 to 12 months, and you'll have significantly lower interest rates in US than what markets are baking in right now.
Manish, good morning. Thank you for joining in. It's more of a catch-22, right, for the Fed, because this data is coming right on the back of Jerome Powell saying last week that they would still want some more data because they're still not confident enough to cut rates. Is it so that the Fed is starting to fall behind the curve, because there are central banks that have started to cut interest rates already? And assume the fact that there is a macro data that comes in next month, which is contrary to what the street is anticipating. Does that put all of these estimates out of the window again?
So it's been sort of hot and cold. You saw 3 months of inflation, actually, data surprising on the higher side. And we had this conversation many times that, would that suggest that near 70s like perk up in inflation on cards? And I argued against it. I think in US, more than what Fed Powell spoke last time, one is, of course, politics there. If both House and the presidential seat were to go to Republicans, it's likely, and markets are worried of the fact that, you could very well have sort of more perky fiscal, already sort of bloaty fiscal or public debt that US has, it could get worse. You also have, other hints coming in from the fact that copper is perky, the crude has actually risen again. All of this is actually unnerving bond markets, So even while you see clearer signs of disinflation and more importantly, growth slowing, copper, crude, politics, all are actually confusing bond markets, and which is why, bonds haven't really rallied. So it's this whole macro cycle, Chief, over last couple of years has actually played very, very uniquely and distinct from what we all are sort of are used to seeing. But big picture, slower growth, lower inflation, and Fed cutting rates, that seems to be sort of the game in town, at least for next 1.5 years.
Since you spoke about bond markets, last week was that watershed event for the Indian bond markets. We've been discussing this. India finally got added in the JPM bond index. What have been the inflows so far? We've discussed the potential inflows over the next 10 months, but so far, any anecdotal evidence of what we've seen already? And now for the FPIs, there's really an attractive option, Indian equities versus the Indian debt market. What has been the feedback from FIIs, the foreign investors, on the attractiveness of Indian equity versus Indian debt now?
So sort of we've discussed this many times. Indian bonds actually are better currency play.
Yeah.
There are sort of great amount of tailwinds. It's very likely over a longer period, rates would head significantly lower. Inflation differential between India and Western world has actually collapsed. As we speak, core inflation is in India is could very well be lower than US's. So in some sense, what played out in China over the last 10-12 years could play out, and I think smart money would bet on this trade. I've argued on your show that how in the next cyclical downturn that you will have over the next 2-3 years, Indian bonds would get to a 5 handle. Not maybe exactly 5.5%. So there is a significant, space for bonds to rally in India. How much money? A lot of money, of course, has come in. First time on a 12-month run rate basis, you have sort of significantly more money coming in bonds. Equities have been investors have deserted, and you haven't seen much money coming in there. So I still think that the game has just begun. I think, from a broad asset allocation point of view, for the given currency and where bonds are valued in India, you still have a tailwind for next many years. I wouldn't be surprised if this number of total money flow in India would run into, $50-100 billion over next 5-6 years.
Interesting. Manish, let us assume that the Fed does bite the bullet eventually and starts cutting rates in September. Now, the probability of that, if I'm correct, is now around 72% for a rate cut in September. What does that do to sentiment across the market? Because the US market itself has been a significant outperformer already this year, particularly the S&P and the NASDAQ. Does that also now cause a shift in flows back to the US once the Fed starts cutting rates? Or do you see that the EMs would continue to get flows, considering the fact that barring India, most of the other EMs have not done too well?
So in US, basically what has done well, of course, since October is mostly IT and communication. And that part of the market, of course, had a cyclical downturn in 2022 and 23. So it's a sort of a recovery. As we said, this macro setup has been messy. Different sectors have been slowing and then re-accelerating. So the tech and communication piece, if you were to see in US, is actually seeing a recovery of sort. Very, very slowish one. Still no employment growth there. Yet, productivity has risen, and overall earnings have been sort of pretty decent. So because these are high duration assets, tech and communication, you also tend to have lower rates actually helping them. So the internals of US markets are very different than that of US, that of India. India, small and mid caps have done remarkably well, are more expensive, whereas in US, they're actually much cheaper than, even from a historical standpoint, much cheaper than large caps there. There, the industrials, discretionaries haven't done well. In India, just the reverse, real estate, discretionary, and all sorts of hyper-local assets and economic assets have actually, or shares have done well. So from a market standpoint, I guess the current momentum suggests that it's baking in some bit of a recovery in IT and communication in US, along with, of course, lower rates, and which basically would continue to play out. The hardcore economic sectors there, the materials, metals, industrials, and all of them, are not doing well, and I don't think they will do any well over the next 6-12 months.
Manish, thank you very much for joining in. Need to get into that break, but on the other side, we'll discuss the Indian technology space with Rakesh Kumar from BNP Paribas.
Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour, live on YouTube at CNBC-TV18, weeknights at 7 p.m.
It's QSQT time, and Rima is here to tell us how the IT sector is likely to perform this quarter. Rima.
Thanks so much for that. I think the big question we're asking right now is, are we at the end of the earnings downgrade cycle? Now, the Indian IT companies have gone through a rough patch over the last 2 quarters, particularly in Q4. This is the UBS table, and you will see earnings estimates were brought down as much as 15% for companies like Infosys and even for Wipro. So if estimates have been adequately cut over the last 2 quarters, is there more room for downgrades, or are we at the end of the earnings downgrade cycle? Now let's get to this quarter's expectation. Well, this quarter we're expecting a pickup in growth rates led by 3 factors. 1, seasonal strength. 2, ramp up of large deals, and 3, reducing intensity of cuts in discretionary programs. So this is what the CNBC-TV18 poll throws up. Infosys is likely to lead with a 2.5% revenue growth, followed by TCS, Wipro flat, but HCL Tech is likely to report a revenue decline. Now, the reason why Infy is going to report the highest growth amongst the Tier 1 IT companies is due to the ramp-up of previously won deals. For TCS, it will be the ramp-up of the BSNL deal, and Wipro, where the street has turned incrementally more bullish with the new CEO, Srinivas Pallia, coming on board. After 5 quarters of a revenue decline, this time the street is expecting flat growth. But for HCL Tech, revenues are going to get compressed because of a large project which was offshored, and the company had guided about this in the prior quarter, so a decline of about 2%. Now, FY25 guidance is likely to be retained. So, Infi top line growth 1 to 3%, margins maintained, HCL Tech at 3 to 5%. Top line growth. CLSA believes a stable guidance is a positive. For Wipro, the next quarter's guidance is seen at 0 to 2%. For Wipro, remember, it's a next quarter's guidance and not an annual guidance. Now, brokerages have been fairly mixed on IT. Nomura recently turned positive on the sector. There was a double upgrade by CLSA on Wipro, which lifted the stock. But CLSA is cautiously optimistic on the IT sector. They say that we still largely remain in an earnings downgrade cycle, though we are getting into a more stable positive narrative, which is why they're cautiously optimistic. Jefferies, UBS prefer to be selective because of rich valuations. Now, what are the risks? One, the run-up in stocks. The Nifty IT index itself is up close to about 10% in the last 1 month, with individual names rallying about 15% plus. Two, no immediate demand recovery. There are sectors like BFSI, retail, telecom, which still continue to remain stressed. Growth expectations have been pushed forward. And finally, premium valuation. CLSA says the Nifty IT is trading at a 30% premium versus an average of 20%, implying limited room for multiples to re-rate sharply from here on.
Rima, thanks a lot for that. Let's pose all of these questions to Kumar Rakesh of BNP Paribas, who's joining in. Rakesh, good morning. Thank you for joining in. Which side of the camp are you in? There is always almost consensus that growth will still take a while to recover. But do you see that this downgrade cycle that has been on is finally coming to an end, or do you see some further downticks before a floor is hit eventually?
Hi, good morning. So from the camp perspective, for the last 1.5 years, we have been quite counter-consensus positive stance on the IT sector. Late 2022 is when we turned quite optimistic on the sector, and there were multiple reasons at different stages. The reasons have been different. But we, as Rima was talking about, and you also noted, we don't think we have reached the stage where we could start calling out there is an earnings upgrade to start happening for the sector. And we think the first leg of the stock performance will actually be driven by valuation. And within valuation, it will largely be driven by the sector weight across investors moving up. If you look at the holding of IT sector, both by foreign institutional investors and domestic, it's in multi-year, possibly more than a decade low that we are looking at. Among FIs, it has fallen to about 8.5% of their holding. Long-term average has been about 12.5%. Similar is the case with the domestic institutional investors as well. It's close to about 8.5% for them as well. So there is a significant bearishness for the sector, which is built into the sector positioning across both sides of investors. And that, as the incremental confidence starts building in that the outlook is incrementally improving and not necessarily further deteriorating, this weight will start moving up. Because if you look at the weight, what exactly it is telling you, it's telling that the outlook is going to further deteriorate, and that's why there's a significant underweight positioning in the sector. And hence, even a neutral or normal outlook would be good enough for the sector weight to start moving up. And that would be the first driver for the sector stocks to start moving up. The second leg, which we think will start playing out possibly later this year, early next calendar year, is when the Fed starts cutting rate and the sentiment among enterprises starts changing. And that is when we would expect that the earnings upgrade cycle will start playing out, and that will be much more sustainable. And going into next year, we would start seeing the earnings upgrade driving the sector performance.
Just a quick word on the annual guidance. Do you also expect this quarter guidance should be maintained? And do you think at least at some point, maybe in the second half of the year, there is scope for an earnings, for an annual upgrade to, say 1 to 3% for Infosys, or, 3 to 5% by HCL Tech? Can the full year guidance be upgraded?
Good morning, Rima. So for the quarter, we don't think there has materially changed from last quarter to this quarter for companies to start changing their full year guidance as yet. But as you pointed out, there is definitely a potential that some of the companies could raise their guidance as we move through this year. And what could be the catalyst for that? If you look at the CEO confidence surveys in the US, there's something remarkable which is showing up in those surveys. The overall confidence of CEOs over the last couple of quarters has been consistently going up. both on the overall business as well as their own revenue and sales outlook. So they are generally turning more positive about how their business is going to do in the next 6 to 9 months. But the same survey, when looked at from the capex spending perspective, has largely been flattish or maybe coming down. So there is a gap which is building up in the CEO's outlook about what their business could be and what their spending could be. And why is that happening? Possibly because Fed has not started cutting the rate. They are not confident on starting their capex cycle at the peak of the rate cycle, and hence possibly waiting for the indication from the Fed. And that's why we think once Fed starts cutting rate, there could be a catch up on the capex side, and hence there potentially could be a buildup of the pent-up demand into the system, which may start coming out towards the end of this year or possibly early calendar year. And once those conversations starts happening, there could be a potential of revision of these guidance as well upward.
You said a few companies might raise their guidance. Which ones and which are your bets, preferred picks in the IT sector?
So our preferred pick is Infosys. The guidance what currently is given anyways does not include the acquisition. So once that gets built into, anyways the guidance will have to go up on an overall basis. But more importantly, the expectation is set quite low, 1 to 3% with multiple mega deals ramping up. From that perspective itself, there is a potential for Infosys to raise guidance. It's not something which we are building or we are expecting right now. But if one have to identify a company where there is more potential upside risk, it would definitely be Infosys. And that's also our top pick.
Right, Rakesh, thanks a lot for joining in and sharing with us your views on how the IT sector is likely to perform in the first quarter of FY25. Remember, earnings season begins on Thursday with TCS followed by HCL Tech on Friday. But time for a wrap on this edition of Trading Hour. From Reema, me and the team that put this show together, thank you so much for watching. Halftime report up next.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
After 34 years, maybe this is the 100th product launch of my career at Bajaj Auto. And there is one person that I have never ever missed on a product launch occasion, but I felt that today I feel the absence of this person. This is a person who, brick by brick, built this wonderful company that we are all part of, called Bajaj Auto. This is a person who, on his broad shoulders for 50 years, carried the entire Bajaj group, not just Bajaj Auto. This is a person, I think you will all agree, who pledged his razor mind, his iron will, his very large patriotic heart to the cause of building Indian industry. On the side, he also served as chairman of Indian Airlines in the 80s, if I remember right. He was also for a long time a member of Parliament of the Rajya Sabha. And since he was my father, I saw him from very close quarters. And if I may say so, throughout his entire period of doing all of this, he is a person who slept very well at night, because he always said, I sleep on the pillow of courage and I sleep under the blanket of integrity. That is how I remember him. His unapologetic Bharat Bhakti, and I would like to remember
Stocks trade ranged as valuation concerns scare off with expectations of an investor-friendly budget. FMCG and capital goods notch up gains, while consumer durables and realty drag.
Titan slips after reporting a below-par performance in Q1 on the back of weak demand. Analysts also fret over pressure on its margins.
FMCG stocks gain after Marico reports an uptick in volume growth and Dabur cites improved demand in rural India. IMD's forecast of better than normal July rainfall also aids sentiment.
It is the end of pre-budget consultations at North Block as the finance minister readies to present the union budget on July 23rd, and adherence to fiscal discipline, continued capex push and boost to rural and urban consumption are among the key expectations.
Hello and welcome. You're watching us here on Halftime Report on CNBC-TV18. I'm Mangalam Malu. Joining me today is Ekta Batra. Comes back after a break, Ekta. And what have you brought back with you? Markets in the red. All of last week, we were seeing good gains coming by. And maybe it's the good gains which actually have, led to some bit of profit taking, some bit of consolidation, pretty much par for the course. And ahead of the big events, we have the IT results, we have the budget, all of that. So maybe before that, consolidation not particularly bad.
Hi, Mangalam. Yes, absolutely. I think, we need to get a little bit of a reality check sometimes. And too much of a good thing is probably not a good thing. So, yes, profit taking is what we are seeing. The markets have started the week in the red. And in fact, just to put it into perspective, the markets have gained for the 5th straight week. It's the longest winning streak that we've seen since December of 2023. So really, who is complaining at this point in time? Markets, like you mentioned, are going to be focused on the two big events which will be taking place, which is Q1 FY25 earnings. And that's going to be kicked off this week itself with TCS as well as HCL Tech. And then 23rd of July, which is a Tuesday, we do have the budget, which is around 2 weeks from now. So I think the street will be squarely placed in terms of cues coming in from these two big events, which will continue through July. But nonetheless, we have a lot of stocks in focus.
A lot of stocks in focus. So let's start with a lot of these updates, because when we get the Q1 results, before that, it is the result preview season. And that's exactly what is taking place, especially from the BFSI and FMCG space, along with real estate, etc. So let's get in BFSI first. Bank of Baroda lower in trade. AU Small Finance Bank lower in trade. Both of them down by about 3 to 4%. Abhishek joins in with the updates of that one. Abhishek, how do they look?
Well, to begin with Bank of Baroda, on a sequential basis, if you take a look, deposit and advances growth are the weakest in last 12 quarters. And they have lost market share as well because their YOY numbers are below the industry level growth. So take a look at the deposit momentum. It's up 8.8% YOY and a decline of 1.6% sequentially. Industry-wide, deposit growth in June was around 12% level. Domestic deposit is further weak. It's grown by only 5.3% YOY and down by 2% sequentially. The advances growth are about 8% YOY when compared to industry growth of 15-16% on a YOY basis as of Q1 that the banking sector has seen, and it's declined by 1.7% sequentially. In this, the domestic growth is about 8.5% YOY and down by 1.8% sequentially. In the domestic loan book, the retail portfolio grew really strong at 20.9% YOY and about 3.5% sequentially. So overall, the CD ratio has declined both YOY and quarter-on-quarter, and the domestic CD ratio, however, has improved YOY and quarter-on-quarter due to the decline in deposits. AU Small Finance Bank, now deposit growth is weak over here. Deposits have declined on a sequential basis. However, cost of funds have improved for them for the first time in many quarters. So deposits are down 0.5% quarter-on-quarter. We cannot compare the YOY numbers because there is a merger that's based into effect with respect to AU Small Finance Bank in this quarter. Cost of funds have declined by 7 basis points sequentially to 7.03% when compared to 7.1% in the previous quarter. Overall, AUM growth is at 3.5%, while the advances growth is a strong 5% growth. So if you take a look, calculate the CD ratio, that's on the higher side at 93% plus, so which leaves analysts with the worry that there will be further hike or growth for deposits, which can put pressure on the net interest margin. CASA is up 2.7% quarter-on-quarter, and CASA ratio has improved to 33% versus 32% in the previous quarter. Back to you.
Okay, all right, Abhishek, thanks very much for that. So both those stocks are down and out in today's trading session post those Q1 updates. But DOMS Industry is in focus after Axis Securities has initiated coverage on the stock with a buy rating, Upasana is following the story. She joins in with more details on what Axis likes about DOMS.
Thanks so much for that. Axis Securities has initiated coverage on DOMS Industries. It says that Indian stationery and art material market has seen continued growth over the years, and it is expected to grow at a 13% CAGR over FY23 to FY28. DOMS Industries has emerged as a leading player in the Indian stationery market, holding an overall market share of 12% in FY23. It expects companies' EBITDA margin to be in the range of 17 to 18% for FY25 to FY27, driven by various factors such as increased capacity utilization, improved product mix, stable raw material prices, and improving on-ground execution. In terms of ROC, the brokerage says that it is likely to improve from 22% in FY24 to 25% in FY27. It also expects a robust revenue CAGR of 25%, EBITDA CAGR of 26%, and PAT CAGR of 28% over FY24 to FY27. It also says that with improved visibility in earnings growth and a strong return profile, the stock appears attractive in the mid-cap space. Hence, the brokerage initiates coverage on this stock with a target price of 2,670 per share.
All right, Upasana, thanks a lot for that. That's about DOMS up around 1%, but has been a big mover ever since its listing. But power utility stocks are in focus as well, on the back of notes coming in from brokers. And today we have one coming in from Investec. Vivek joins in with the details of that note. Vivek.
Well, that's right. So today Investec has come out with a very interesting note on the entire power utility space, especially the renewable side of the power sector, and also power EPC players. They believe that they too will stand to benefit on India's increased focus as far as increasing power capacity is concerned. So what is it that Investec says? They're saying that they expect power demand to remain strong. They see demand growth at a CAGR of 6.2% between FY24 to FY32. What is growth driven by? Rising urbanization, increased usage of AC amongst rising temperatures across India, and also enhanced manufacturing as well as economic activity. Now, what is India planning to do? India is planning to increase its total capacity to 727 gigawatts. So that indicates that India will be adding close to 286 gigawatt of new capacity by FY30. This includes both thermal as well as renewable. So what are the stocks that they have initiated coverage on, given the fact that India plans to go ahead and increase its renewable capacity a lot higher? The first stock on the radar is NHPC. They believe that the company's capacity addition is on track to go ahead and reach 14.2 gigawatt by FY27. They see consolidated regulated equity rising to 32,810 crore in FY27 versus just around 15,000 crore in FY24. The second stock on the radar is from the wind energy space, that's Inox Wind. So they have a positive rating there as well. They see that the company is well positioned to benefit from the revival across the wind sector. They see 10 to 12 gigawatts per annum of wind bidding that could happen, and Inox Wind is well poised to gain from that particular phenomenon as well. The third stock is from the EPC space. So Kalpataru Power Transmission, they believe that the company is well placed given the fact that it's a prominent EPC player with strong presence in both domestic as well as international market. They're expecting EBITDA as well as PAT to grow at 23 and 33% CAGR respectively over FY24 to FY27. KEC International, similar line of business, but having a lot of presence in the power T&D. What they're saying is that they expect revenue growth of 13% CAGR between FY24 to FY27, and the bid pipeline over here is quite strong. Lastly, JSW Energy, they're quite positive on the company's prospects, especially going forward in terms of capacity addition, but at the current market price, they believe the valuation captures most of the upside.
Okay, interesting view there. Thanks, Vivek, for that. Well, we need to take a short break, but a lot more lined up. In fact, we will be talking to the management of Mayur Uniquoters to discuss their business outlook, their FY25 guidance as well. Stay tuned for that.
We are launching the world's first something. His unapologetic Bharat Bhakti, via the so-called, at that time some of you may have heard, Bombay Club, which was much derided in the 80s and the 90s. Today, sir, it finds expression. It finds voice through expressions such as Make in India, Atmanirbhar Bharat, Vocal for Local. So that makes me feel that perhaps Being misunderstood is the cross that the forthright must sometimes bear for being ahead of time. Freedom from the paradoxically unsustainable subsidies that government sometimes employs to promote sustainable technologies. How sustainable technology can be promoted by unsustainable subsidies, not only in India, the world over. Our friends from the media, I am sure they are aware of the chaos which is there across the world as far as subsidies for electric vehicles, etc. are concerned. And I say to customers who may be listening in right now, that we all assure you, we are with you through the life cycle of this product, through all the use cases of this product, through all the allied considerations of this product. Sir, शायद इसको हमारा बजाज की गारंटी ऐसा कह सकते हैं. We want you to witness today our interpretation of the avatar of
Welcome back. Well, a bit sluggish for the markets at this point. So we have the mid-cap index, which is down around 0.5%. We have the bank Nifty, which is down around 0.5%. It's a lot about the Q1 earnings which have come through, earning estimates or, the previews really from the management. And one such space is the FMCG space. Titan is in focus on account of that, but so is Marico. Marico is largely in line in terms of the update that they released, Mangla.
Yes, it was largely in line, but the good part was that they are indicating improvement in their terrain going forward. And that's exactly why the stock is higher in today's trading session. So if you look at both Dabur and Marico, the nature of the commentary was similar. Gradual uptick in rural demand and, high to mid-single digit sort of growth. But the reason why Marico was moving 5% versus Dabur just about 3.5–4% is because over the last 1 month or so, Marico as a stock hasn't moved. So that comparison chart, including today's move, tells you that, over the last 1 month, Dabur is up 2.5%, while Marico, despite the 5% up move that it's seeing today, is down about 1%. So as a result of which, maybe there is some bit of catch-up playing up with Marico too. They said that the domestic business posted modest uptick in underlying volume growth, and that's a positive largely because the company was showing positive uptick, but it wasn't reflecting in the revenues. This time around, there would be revenue growth, which would be in high single digit. Remember, it was in the fourth quarter where the revenue turned positive, growth turned positive for the first time, with the management looking at positive revenue growth in this year itself. Parachute coconut oil posted low single digit volume growth. Saffola oils delivered mid-single digit volume growth, so that's a turnaround for that one as well. Value-added hair oils continues to be under pressure, but here the company believes they will turn into positive terrain for the volumes in the next quarter itself. They expect improving trajectory in both domestic volume growth and higher realizations, which means that revenues will only improve in the remainder of this year, with operating profit expecting to grow higher than the revenue, which implies margin improvement as well. So things are improving, margins are improving, as well as the outlook is positive. Club that with the underperformance of the stock, that means there is a bit of an uptick that we're seeing on Marico.
Okay, all right, Manglam, thanks very much for that. So that stock is up around 5%. But let's shift focus to one particular company, Mayur Uniquoters, which in fact works in the technical textile industry, manufactures artificial synthetic leather for a wide variety of applications as well. The stock in fact has gained around 16% in 2024, and the company expects top line growth of 20 to 25% in FY25. Suresh Kumar Podar, who's the CMD and CEO of Mayur Uniquoters, joins in now to discuss the FY25 guidance with us. Mr. Podar, welcome to the show. Well, just wanted to ask you about your 20 to 25% growth guidance that you have for FY25. What makes you so optimistic, considering that you did not manage to meet your FY24 guidance, which I think was around 12 to 15%, whereas you eventually reported, I think, around a 4% growth?
Yeah, actually, in 23-24, there was a big problem in footwear industries. You must be knowing that India government is going for BIS specification for all the imports from all over the world in certain areas. Whereas in our footwear and footwear products, they put up BIS. So that's why the footwear sales is very, very down this year, last year, 23-24, especially second half. It was just down by 50% because nobody is able to keep the stock. Because if they keep a stock and they can't meet BIS, then their stock will be out of date. So now the government has increased the 6 months timeline, and we have got a big discussion with government's different department. And I hope this year it should be better. The last year downfall was main reason was the footwear.
All right. So this year, what is your outlook? Because I remember, sir, the last time you joined us, you did say that footwear was close to around 60% of your revenues, fell down to around 30-35%. That's because one, footwear industry wasn't doing well. Secondly, OEM exports had increased. So where do you expect the footwear industry to be this year as a proportion of your sales? And OEM exports, what's the kind of revenue growth prognosis that you have?
You see, so far as export OEM, automotive, there is a good scope. We will grow at least 30% this year and will continue next 3 years. And that I'm telling with the orders in our hand. You know, every model is decided 2 years before. So from now to 2 years, we have been allotted the orders for different models. So export OEM, I am very much confident. Even BMW also we have started. And this year I expect BMW and Mercedes sales 50,000 meters in this year per month, which was, there was only Mercedes-Benz, which was 25 to 30%. Further, our export.
Go ahead, sir.
Go ahead, sir.
Export general is also doing good. We expect at least 12% to 15% growth in export general, which we are selling different product to different countries. Only thing which is, worrying us is the footwear industries, which way it will go. But we expect that this year should be better than last year, because we are seriously, all the automotive industry, footwear industry and footwear component industry is meeting regularly to the government department to clarify this BIS. So except footwear, I have full faith that all the others will increase. OEM domestic automotive will also grow between 10 to 12% this year. Although we have seen in the news that automotive industry is going down, but we are okay.
All right.
So this year,
can you quantify sir, can you quantify the order from BMW and Mercedes? How much do you think you'll probably make in terms of revenue from both these companies in the next 2 years? And is there a possibility of repeat orders? How long does the contract go on? Can you give us more color on these two specific company orders?
You see, these two specific companies, this is from their South Africa production. And there we have got an order for BMW, and both of them, including Mercedes and BMW, it will be 50,000 meters per month. So this is BMW and Mercedes. I'm talking about South Africa units, both. So in that, until unless we go for another Ford also, we are trying in South Africa, but we don't know when we will be able to get the orders. But from South Africa, BMW, Mercedes will be the same.
Right. You were giving us the targets for this year when it came to revenue and profit growth. Could you tell us that?
See, revenue growth, what I see, you see, always we give our revenue growth according to the market, what is going on in which segment, because we are not limited to one segment. We are working in footwear, we are working in automotive, we are working in garments, we are working in, you see, this furnishing. So sometimes something disrupt, then things become little bit different. This year, on the whole, I expect more than 15%. If footwear is good, then it may be 18%. That's what I see from today's situation.
Okay.
And margins?
Yeah.
Margin should increase little bit because export OEM, there is good margin comparatively compared to Indian products. So margin may increase little bit because overall difference cannot be too much, maybe 1% or something like that.
Okay.
Overall.
All right. I just wanted to understand, when you talk about margins, there's not too much of an upside that you're expecting. You finished FY24 with 19.4%. What is the range that we can probably expect in FY25? You said you can't better it too much, but you go up to around 20, 21%?
Yeah, I hope so. I hope so.
What are the biggest headwinds to that?
But what I'm saying, because of we are having good order from export OEM, and there we have a better margin. So it must increase. But now if something like footwear is, big question mark, how it is going to move. Of course, it should move better, but you can say 1.5% you can expect.
But said that footwear is about 30-35% of your sales. Sir, if you could, once again, for the benefit of our viewers, decode what sector contributes how much to your overall revenue?
You see, now at the moment, automotive is doing about more than 50%, 50 to 60%. And footwear has gone down to 30%. And the rest is 10%. And automotive is gradually increasing, and general export is also increasing good.
All right. Just finally, before we let you go, one of the triggers was the increased utilization of your PU plant. And you've been saying that, for the last couple of years, there has been dumping coming in from China and other countries, etc. as well. In light of all of this, what is the kind of utilization expectation that you have for the PU plant in this year and the next year?
See,
all right.
Okay. All right, Mr. Podar, we're going to touch base with you again whenever we can, but that was a whole host of questions answered by the management of Mayur Uniquoters, which seems primary concern is footwear, but is extremely bullish on the OEM market. So let's see how that pans out for them. The stock absolutely flat in today's trading session. We'll take a break on that note, but up next we'll be talking to Sudeep Shah of SBI Securities with his trading ideas for today. Stay tuned.
And I'm sure you will like it, sir, because it offers freedom from petrol imports, freedom from petrol emissions, freedom from petrol prices, freedom from range anxiety and charging concerns, because it's not only the world's first CNG motorcycle, it's the world's first hybrid CNG motorcycle technology.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will...
Welcome back. You're watching us here on Halftime Report. Let's talk about the market setup at midday, especially from an F&O standpoint. If you look at the key indices, you know, the Nifty is down about 50 points, around that 24,300 mark, just below that. The Nifty Bank is under pressure, down about 0.2%, down 300 points. And as the market has moved lower, the volatility has increased. So the India VIX is up by about 7.5%, and that's ahead of the big events as well. IT earnings starting this week, and then all the other earnings updates which are keeping the markets moving. And then you have the run up to the budget. So all of these factors work towards increasing the VIX itself. The sector of the day definitely has to be FMCG, with Marico, Dabur up around 3.5 to 4%. Godrej Consumer and HUL also in focus. Godrej Consumer hasn't come out with its update yet, but ahead of that itself, given the others, has seen a bit of a pre-buying. So that's one thing which is on our radar. But the big accident of today has been Titan, the top Nifty loser with a cut of almost 4%. It's trading below the 20, 50, 100 and 200-day moving average, and at the same time has corrected about 20% of its all-time high. Now the stock is around 31.39. It's the 3100 put which is most active for a premium of 30 odd rupees. So around 30.50 to 30.70 is where the street expects some support coming in for Titan, which would also coincide with a 20% cut that we've seen from the highs itself. So that's one stock we're keeping an eye out on. For the Nifty itself, 24,300 is a bit of a fulcrum. 24,300 put has a premium of almost 117. 24,300 call has a similar premium, close to around 100 rupees. So the broad range that the street is working with is close to 24,100 to 24,500, between 24,150 to 24,450 itself, which was similar to the high and low that we saw on Friday itself. Just one stock that I'm watching out for today is Chambal Fertilizers, likely to enter F&O ban, as JNFC did on Friday, and a couple of stocks on Thursday as well. So those are a bunch of cues coming in from the F&O space.
Okay, Mangalam, thanks very much for that. Sudeep Shah, who is the head technicals and derivatives research at SBI Securities, joins in on the show now. Sudeep, hi, welcome to the show. Well, a little bit of red on the screen and an underperformance from the mid-caps as well as the banks. Do you think that would be an opportunity to accumulate at these levels?
Yeah, good afternoon, Ekta and Mangalam. Yeah, see, last few days, from Bank Nifty standpoint, we have seen the Bank Nifty consolidating between 51,900 and 53,000 on the upside. Last 8-9 sessions to be particular. But what we are seeing is a lot of sectoral rotation now. Oil and gas, IT, FMCG, PSU, all these spaces have become more vibrant, and that is what is supporting Nifty at lower levels. And hence, we are expecting that within this overall uptrend, Nifty could at the best consolidate between 24,100 and 24,500 and closer to 24,100, 24,150, where the 10-day exponential moving average is there. I guess buying support is there, and buying should be done at those lower levels. And we expect 24,500, 24,600 to be achieved in Nifty in the next few sessions.
Okay. All right. And stocks, what would you choose today?
So there are a couple of stocks, one from the FMCG name, which is Godrej Consumer Products. Now, the stock was in a steady uptrend, and in the last 10 to 12 sessions, it was consolidating between 1350 and 1415, 1420. Today, we are seeing a downward sloping trendline breakout, as well as the stock has sustained above its 10 and 20-day exponential moving average since last 8 to 10 sessions. So what we are seeing is, with this overall momentum back in FMCG, Godrej Consumer Products stands to gain, and it's outperforming its own index also. So this can be bought with 1390 as a stop loss on the downside and 1460 as a target. The second stock that I like is oil and gas, ONGC. So within the oil and gas space, this stock has outperformed, and it has given a 6-month consolidation breakout today. So within an overall uptrend, post a consolidation, a strong breakout backed with volumes, the stock could do 305, 310 in the next few sessions. And this could be bought with a stop loss at 287 on the downside.
Okay, all right. I just wanted your opinion on a couple of stocks today, which is seeing some good amount of volume and price action. So Paytm would be one of them. That stock is up around 7-odd%. IFCI, IRFC, all of these stocks are managing to buck the trend. Obviously, IFCI and IRFC are building on the gains that we've seen on a year-to-date basis. But technically, any kind of approach towards these stocks along with Paytm?
Yeah, so starting with Paytm, Paytm has been in a consolidation range right from February after that big fall from 950 to almost closer to 325. Post that, in the last 6 months, the stock was in a range between 440 and 350 on the downside. And today we've seen a consolidation breakout on the upside. So although it's overall, the stock is in an overall downtrend, but there could be a rebound from these current levels, and till 440 holds, this rebound could continue up to 520, 540 kind of zone. So yes, from a short-term perspective, this is a buy, but from a medium-term perspective, closer to 550, closer to 600 levels, one should consider exiting this stock as the overall trend is on the downside. The second stock which you mentioned was IRFC. Now, IRFC also similarly with all the railway stocks, the kind of momentum that was built in the last few sessions. Today, we have seen post Friday's move, we have seen a buildup of momentum there also. And overall, if we see the stock is doing good, and I guess from the current levels also, this can hold out until 194 holds. IRFC can continue its positive momentum up to 210, 215 levels in the coming few sessions.
All right, take that point. Thank you so much for joining in and giving us your views, Sudeep. With that, we'll slip into a short break. But before we do that, let's keep an eye on a couple of stocks. Kaya is one of them. Kaya has been on a big upper circuit sort of spree for the longest time. And ever since it's announced its deal with Marico collaboration, the stock has consistently been hitting upper circuits itself. Today opened lower, but that too was bought into. And we've seen a 10% up move on Kaya. So if you pull up this month's chart itself, Kaya would be up close to around 36%. And this year itself so far, which is 2024, the stock is up 80%. Take a short break, come back, get you more on the markets and more particularly the FMCG space. Anuj Sethi, who's the Senior Director at CRISIL, joins in to discuss the trend of the sector of the day, which is FMCG.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Award.
Welcome back. Reliance has moved to the high point of trade. Remember, on Friday as well, Reliance was the one that led the recovery of the market. So let's see whether this can keep up and continue to take the Nifty off lows as well. So right now, just keep an eye out on this heavyweight, even as the Nifty Bank is down 300 points. The FMCG sector is definitely the sector of the day, with a big up move coming by on the back of updates coming in from Dabur as well as Marico, and indicating gradual recovery in this year itself, particularly from the rural end of things. That coincides with a bunch of brokerage reports that we've gotten as well, analyst estimates too. One of them is actually CRISIL, which sees a revenue growth of 7 to 9% for the FMCG sector in FY25, led by volumes and mildly some realizations as well. Of course, underlying the revival in rural demand and steady urban demand as well. We do have with us Anuj Sethi, the Senior Director at CRISIL Ratings, joining in now to give us a detailed outlook on what they expect from the FMCG sector this year. Thanks a lot, Anuj, for joining in. The first quarter updates are in. There are signs of recovery, but if you had to put a number to that recovery, 7 to 9% is the revenue growth that you are targeting this year for the sector. Could you break that up in terms of volumes and price, and what sectors or what categories are likely to outperform?
Sure. Good afternoon, Mangalam and Ekta. We expect, similar to last fiscal, this fiscal also, the growth in the FMCG sector will be largely driven by volumes. To break it up, almost 6 to 8% of the growth will come from volumes and about 1 to 2% from realizations. And in realizations also, it will be driven largely by minor price hikes taken in certain categories to pass on, the price of milk, wheat, sugar, which has gone up, and also higher marketing and ad spends, and also the premiumization game, which is being played in some of the segments.
Okay. Can you break up the growth, the segments in terms of growth? For example, F&B, personal care as well as home care segment. What are you expecting in terms of growth within each of these segments? Where do you expect an outperformance and an underperformance, and why?
Sure. See, if I had to break it up, the home care and the personal care, these two together account for about 75%. Of course, home care would be almost 50%. And the last segment would be the personal care, which would be around the balance 25%. We expect both home care and food and beverages will grow at about 8 to 9%. The reasons could be different. The home care would be largely led by urban demand. And this is a segment which has been outpacing all segments in the recent past. The food and beverage segment will also be driven by a revival in urban demand. The rural demand. We saw that already since the last quarter of fiscal 2024, where actually rural demand outpaced urban demand. And that was true of the food and beverage segment as well, which is the largest segment, almost accounting for 50% of the revenues. We don't see any segments per se underperforming. Even the personal care segment, which is expected to grow at about 6 to 7%, is slightly slower than the food and beverages as well as the home care segment. But one must realize that even this segment is almost doubling its growth rate compared to last year. The personal care segment is highly penetrated, and there is also downtrading happening in certain segments, which started during the period of high inflation. But even that segment we expect to grow at about 6 to 7% this year.
For the sector at large, what's the kind of margin growth that you are anticipating? And in that, what do you think are the categories that will see the highest margin expansion? Because you are also penciling in margins being limited by the increase in ad spends, etc., which we've seen all of last year. This year, what's the kind of spend increase that you foresee?
Yeah. See, if you look at the ad spends per se, as a percentage of sales, they went up by almost 100 bips last year. We are anticipating another 25 to 30 bips increase on the increase of last year, which will, constrain significant margin expansion. And why this is being done is because there is intense competition, plus a bit of downtrading, which is also happening. Having said that, we see the home care segment where the margin expansion will be the largest, because that is largely driven by the urban demand. This will be followed by the food and beverage segment, and lastly, the personal care segment.
Okay. Anuj, I know you can't talk stocks, but just wanted to get a sense from you in terms of, what happened with Titan, where the standalone sales growth was at around 9%. It was below estimates of around 11%. The jewelry sales also missed estimates. The street is worried about demand as well as the high gold prices probably impacting the segment. Do you think that's a temporary blip, or is that something that you think would probably be something that you would monitor for the rest of the fiscal as well?
We'll talk about the retail sector in general. What we saw clearly, especially in some of the discretionary-led spend, was that there was some postponement because of high prices. For example, in jewelry segment, gold prices peaked at their all-time high in the quarter. Of course, they've also come down, but that did put off some of the purchases are postponed. Secondly, if you look at it vis-a-vis last year, the first quarter of last year, this year, in the first quarter, there were only 5 or 6, auspicious wedding dates, which means that the wedding season also is getting pushed a bit to the next and the third quarter. So this is also one of the reasons why the retail sector got a bit impacted, in the first quarter. And this is true also for some of the wedding-led apparel and not just jewelry.
And finally, before we let you go, I wanted you to tell us about, large players versus emerging players, the competition that you're speaking about. Because typically what happens is during inflationary times, the larger players gain market share. As inflation abates, the smaller players start to undercut the larger players and then, try to claw back their market share as well. So in light of that, this year, how do you fare the larger players will do versus the smaller players, unorganized sector, and some of the mid-tier companies as against the larger companies?
I think what has happened in the FMCG space, especially, is that in 22 and 23, when inflation was a bit high than what it is now, we did see a bit of downtrading happening and consumers shifting to more the mid-sized and certain state-focused FMCG players. That is now changing since last year because inflation has moderated a bit, and we are seeing the strategies adopted by the larger players so playing fruit. Clearly, I mentioned the 100 bips expansion in ad spends being one of them. So we will expect that there will be a better growth seen by FMCG players overall, and large players should continue to consolidate their position in a lot of categories. Of course, food and beverage will remain the most competitive, and here is where the mid-size and the state-focused players also have emerged pretty strong. But other two categories, the home care and personal care, is where we see the larger players gaining more share this year.
Okay, all right, Anuj, we're going to leave it on that note. Thanks very much for joining in and giving us your perspective on the FMCG space, which seems to be the flavor of today's trade in terms of news at least. Just a quick check on the markets, quite unchanged you'd have to say at this point. So we have the Nifty, which is at around 24,278, down around 44 odd points. Bank Nifty, which is a little bit of an underperformer today, is down around 0.6%, so showing a cut of around 300 odd points. Take a short break, but we'll focus on Shilpa Medicare next, which has been in focus on account of news. It's trading in the green post its conference call that it held at 11 a.m. today on the back of a CDMO opportunity. We'll be back with that.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year. with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes...
The one sector which doesn't seem to stop rallying is the rail space, because we're seeing a big move in names like RVNL and the others, all of them spiking, and the other one is the shipping space as well. All of last week we saw gains of almost 20 to 30% in names like Mazagon Dock, GE Shipping. Well, start off Monday with a big gain on GE Shipping as well, up close to around 7%, taking this month's gains up to around 11-12% itself. Mazagon seeing some bit of profit taking, but remember, was up around 30% all of last week. Shilpa Medicare is the other stock on our radar. The company held an analyst call with an update coming in on their CDMO arrangement. Ekta, you heard into that call. What were the key takeaways?
Well, it's specifically on one particular NCE, which they are new chemical entity, which they've signed with a company. Now they are expecting, and this happened last week, but they held the call today to apprise investors and answer a lot of the questions that a lot of people had. So they expect orders for 5 million tablets for this particular CDMO opportunity before June 2025 and an additional 15 million tablets before December 2025. This particular molecule in question is used to treat increased phosphate levels in kidney patients. Now, in this particular molecule, which is OLC-NCE, NCE stands for new chemical entity, one has to take only 2 tablets a day. And currently, other phosphate binders which do the same thing, a person has to take 8 tablets a day. So that's the kind of opportunity from this particular drug. The pricing decision will eventually be decided by the pharmaceutical company itself, and they will be filing for the drug in the US initially. So that's the only market that they'll be focusing on, and then eventually global markets. The phosphate binders market size in the US is around $1 billion. Now for Shilpa, they will be getting a signing, approval and launch milestone. $10 million is the cumulative milestone fee that they will be getting. Supply should begin from Q1 FY26. The current agreement is exclusive and is for 4 years. They will have an opportunity to renew it, but that will come with certain riders. They expect margins of 50% and above from this molecule. So whatever sales they make, they're expecting 50% plus margins on those sales. So that's the kind of opportunity that we're talking about. Let's see whether that comes through or whether there are any kind of roadblocks. They expect substantial revenue from this, and the capex is going to be funded by the pharmaceutical company in question, and that will be around $6.5 million. It should be up in a year. Till then, they will be supplying from their existing facilities.
All right, take that point. Thank you so much for that, Ekta. That's about Shilpa Medicare. But Tata Motors, among the top Nifty gainers today on the back of their JLR business update coming in. Sonia joins in with all the details. Sonia, looks good.
It does look good actually. So it's a decent set of numbers coming in from Tata Motors. Single-digit growth for JLR overall. But if you look at the retail sales data, X of the China JV, it's in double-digit growth, and overall retail sales is up almost about 9%. Now Tata Motors' stock has also been performing quite well. So if you look at what brokerages are saying, right, across the board, whether it's JP Morgan, whether it's Macquarie, brokerages continue to be very positive. JP Morgan has an overweight. They have a target price of 1115 on Tata Motors. While if you look at Macquarie, they say that the product mix for Tata Motors has improved substantially, and hence they too have a positive rating. Macquarie has an outperform with a target price of 1171 on the stock. Back to you.
All right, thanks a lot for that. And as we speak, there are some more updates coming in from Tata Motors as well. This is about global wholesales, but we'll take a short break, come back on the other side. Manisha Gupta, as always, joins in with all things commodities. Today, she has with her Surendra Mehta, who's the secretary at India Bullion and Jewelers Association.
starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back, and joining us on the show now is Surendra Mehta. He's Secretary at India Bullion and Jewellers Association. Mr. Mehta, hi, thank you so much for joining us. And, we know the results for many jewelry companies are out now, and we do know that the numbers are not so strong for the previous quarter. Now, this quarter is when we see the wedding and the festival season come in. The other festival clearly is going to be the budget as well, and the expectations that you could look at some cut in duty is keeping some of the buyers sidelined. How high do you see it as a probability of a duty cut coming in for gold, silver, platinum, diamonds, all of that sector?
See, as far as gold and silver is concerned, let me inform you that there are multiple duty structure in our country, and this leads to distortion in the market. There is different duty when you import gold and silver from UAE under SEPA Act, where there is different duty when you import gold from least developed country. There is different duty for refiners. There is different duty when you import LBMA gold or LBMA silver. So what we want is basically there has to be a structure wherein it is duty is clearly decided. Let me give an example. In case of silver, the duty under the SEPA agreement is only 8%, but duty under the when we import from the LBMA is 15%. So what we want is basically this big difference between the duty needs to be plugged. And so we are hoping that if the duty is reduced by 2 to 3%, or maybe 5% in silver, and similar case applies to the gold also, then I think the jewelry company will also start doing a better business, and it will bring the level playing field amongst all the jewelers and all the bullion dealers. And it will also lead to price discovery in the India International Bullion Exchange, which we are looking at.
Mr. Mehta, I understand you have a long list of budget expectations this time around, but as you were mentioning, that bullion has various things to ask for, and then there are jewelry councils and diamond and various associations and councils as well, and everybody has a list of their own to put forth to Finance Minister. The only thing that I see, and I have some 5-6 of these lists, the only thing that I see common amongst all is the import duty cut. So we understand your point on that yes, it's not an even playing field, and that is something that everybody perhaps is vying for. The other really is about the taxes within India as well. We do understand that whether it comes to the gold monetization scheme or sovereign gold bonds, we do understand that there are some taxes around that as well. And the other thing that the street is getting scared about is that until now, you have to show a PAN card if you buy jewelry worth 2 lakh and beyond. There are various reports that this amount could also be brought down.
Well, I'm sure that government will not look at bringing down that amount, at least that we are expecting. But as far as the taxation is concerned, what we expect is that the income tax on interest on sovereign gold bond must be cut, because that is not a big cost to the government. The interest given on sovereign gold bond is hardly 2.5%. So even if the tax is removed, it will encourage the senior citizen to invest in sovereign gold bond. And also, we want capital gain tax on sale of gold and jewelry to be removed, because we have 25-30,000 tons of household gold, which we are not able to utilize because of fear of paying taxes and many other inquiries. And we keep on importing 900-800 tons of gold every year. So if in case this capital gain tax is removed, probably the government will lose in INR, but will save a lot of money in the foreign exchange, as our import will go down and we'll be able to utilize the household gold.
Mr. Mehta, IBX has been a great, establishment there. But, there are various regulators when it comes to bullion, gold, jewelry, etc. How do you at all see that changing? Because in the last few years, we've seen hallmarking and various hygiene measures being taken when it comes to this sector. But when it comes to Gift City and IBX and various regulators, do you see gold perhaps could be looking at a more comprehensive policy going forward?
Well, there are many regulators, as you rightly said: Reserve Bank of India, Commerce Ministry, Finance Ministry, DGFT, IFSCA, Consumer Affairs Ministry, SEBI. We have to deal with all of them, to bring in the policy which the industry is looking, which the consumer is looking. So in case only one regulator is kept, maybe IFSCA, which has been doing a wonderful job, that is India International Financial Service Center Authority. They have been doing phenomenal job. And if they are made the sole regulator for the gold industry in India, I think that would really help the industry.
Okay, all right, Manisha. Thanks very much for joining in and taking us through that conversation in the commodity space, talking about precious metals there. Well, we need to take a short break with the news that we have the market still in the red, the advanced decline ratio, which is favoring the declines at this point in time. We'll take a break, but up next will be Business Lunch. Stay tuned. Comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
After 34 years, maybe this is the 100th product launch of my career at Bajaj Auto. And there is one person that I have never ever missed on a product launch occasion, but I felt that today I feel the absence of this person. This is a person who, brick by brick, built this wonderful company that we are all part of, called Bajaj Auto. This is a person who, on his broad shoulders for 50 years, carried the entire Bajaj group, not just Bajaj Auto. This is a person, I think you will all agree, who pledged his razor mind, his iron will, his very large patriotic heart to the cause of building Indian industry. On the side, he also served as chairman of Indian Airlines in the 80s, if I remember right. He was also for a long time a member of Parliament of the Rajya Sabha. And since he was my father, I saw him from very close quarters. And if I may say so, throughout his entire period of doing all of this, he is a person who slept very well at night, because he always said, I sleep on the pillow of courage and I sleep under the blanket of integrity. That is how I remember him. His unapologetic Bharat Bhakti And I would like to remember that today when we are launching the world's first something. His unapologetic Bharat Bhakti, via the so-called, at that time some of you may have heard, Bombay Club, which was much derided in the 80s and the 90s. Today, sir, it finds expression. It finds voice through expressions such as Make in India, Atmanirbhar Bharat, Vocal for Local.
Stocks trade range as valuation concerns square off with expectations of an investor-friendly budget. FMCG and capital goods notch up gains, while consumer durables as well as realty drag today.
And Titan slips after reporting a below-par performance in Q1 on the back of weak demand. Analysts also fret over pressures on its margins. FMCG stocks gain after Marico reports an uptick in volume growth and Dabur cites improved demand in rural India. IMD's forecast of better than normal July rainfall also aids sentiment.
It is the end of pre-budget consultation at North Block as the Finance Minister ready is to present the Union budget on 23rd of July. And adherence to fiscal discipline, continued capex push and a boost to rural and urban consumption are among the key expectations. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar and with me as always is Sonia Shenoy. So Sonia, it's red on the screen. It started flattish, but at the moment, again, it's the same consolidation and many factors at play really.
Absolutely. Many factors at play, Nisha. And also, if you look at it, it's just about consolidating the gains that we've seen in the last, couple of weeks, right? There are big things that the market is awaiting this month. There is, of course, the earnings season that kickstarts at the end of this week with both TCS and HCL Tech reporting their numbers. Post that, there is the big budget, union budget on the 23rd of July. So all eyes will be on that. And because of all of this, the market is sort of just consolidating its gains, not doing too much at the moment. There's also the monsoon progress. By the way, there's been, large-scale flooding across various parts of Mumbai post the monsoon, the rains that we saw overnight. And that has once again given a lot of rise to talk about urban flooding and metros, etc., what the solutions could be. But the monsoons picking up is definitely positive for the economy on the whole. So let's do one thing. Let us kickstart the show with some analysis on individual stocks. Bank of Baroda and AU Small Finance Bank posted their Q1 business updates. Abhishek is here to give us the details. Abhishek, over to you.
Well, to begin with Bank of Baroda, on a sequential basis, if you take a look, deposit and advances growth are the weakest in last 12 quarters. And they have lost market share as well because their YOY numbers are below the industry level growth. So take a look at the deposit momentum. It's up 8.8% YOY and a decline of 1.6% sequentially. Industry-wide, deposit growth in June was around 12% level. Domestic deposit is further weak. It's grown by only 5.3% YOY and down by 2% sequentially. The advances growth are about 8% YOY when compared to industry growth of 15-16% on a YOY basis as of Q1 that the banking sector has seen, and it's declined by 1.7% sequentially. In this, the domestic growth is about 8.5% YOY and down by 1.8% sequentially. In the domestic loan book, the retail portfolio grew really strong at 20.9% YOY and about 3.5% sequentially. So overall, the CD ratio has declined both YOY and quarter-on-quarter, and the domestic CD ratio, however, has improved YOY and quarter-on-quarter due to the decline in deposits. AU Small Finance Bank, now deposit growth is weak over here. Deposits have declined on a sequential basis. However, cost of funds have improved for them for the first time in many quarters. So deposits are down 0.5% quarter-on-quarter. We cannot compare the YOY numbers because there is a merger that's based into effect with respect to AU Small Finance Bank in this quarter. Cost of funds have declined by 7 basis points sequentially to 7.03% when compared to 7.1% in the previous quarter. Overall, AUM growth is at 3.5%, while the advances growth is a strong 5% growth. So if you take a look, calculate the CD ratio, that's on the higher side at 93% plus, so which leaves analysts with the worry that there will be further hike or growth for deposits, which can put pressure on the net interest margin. CASA is up 2.7% quarter on quarter, and CASA ratio has improved to 33% versus 32% in the previous quarter. Back to you.
All right, thanks so much, Abhishek, for getting us the business update coming in from the banking space. But let's put the spotlight on another stock which is impacted because of the business update ahead of, remember, the earnings season coming in. We're talking about Titan, and that stock is the top Nifty loser today, almost 4% down in trade at the moment after an underwhelming first quarter business report or update by the company. Mangalam Malu is right here to tell us what all are the factors and what is it that the market is not liking, Mangalam.
Well, the fact that the company has grown slower than what the street was anticipating, and that they've grown slower than even some of their competitors, including the likes of Kalyan Jewelers. So that's something that the street has not liked. Titan for this quarter, overall revenue growth has been around 9%, but the India jewelry business has grown about 8%, and this despite Akshaya Tritiya sales seeing double-digit growth. So it was lower consumer sentiment, higher gold prices, as well as lower number of wedding dates that impacted business this time around. And that's not all. An important metric that the company tracks, which is, the number of new buyers, that also slowed down this time around to low single digits itself. And that's something that the street is not very happy about. Studded growth, which, is actually a big margin driver for the company, was moderately lower in comparison. So gold jewelry sold more. So with lower than expected revenue growth, margins may also come into pressure. And that's something that has led the stock to decline in today's trading session. The other factor is that there are other businesses, which are, the likes of Carrot Lane, emerging business, eye care, all of them were expected to lead growth, but they too have shown some muted sentiment this time around, with eye care and emerging businesses growing just 3 to 4%, with Carrot Lane too growing at nearly half of its historical CAGR. And the brokerages, as a result of which, are not very happy. We've seen 5 to 7% sort of EPS cuts as well. Remember, earlier itself, the company had said to us that they don't see margins for jewelry business cross that 12% mark in the very near future. And now it seems like maybe margins would be lower than 11% that brokerages were anticipating as well.
Okay, Mangalam, stay on. The FMCG sector is also buzzing on the back of some business updates. Tell us more about that.
Good updates coming in from staples players like Dabur as well as Marico, and that's keeping these two stocks afloat in today's trading session. But add to that, the improvement in sentiment is what all the other FMCG stocks have also taken note of from these two updates, along with the fact that there would be better than expected rains this time around. Commentary coming in from IMD. All of this ahead of the budget, where better SOPs are expected, are working for this space too. So QOQ improvement in rural demand and consumer sentiment is what Dabur and Marico have both said. For Dabur, the revenue growth would be in mid to high single digit, led by mid single digit volume growth for India. And there too, home and personal care along with beauty has done a lot better for Dabur and healthcare. The businesses which haven't done well for them were the ones which were more outdoor facing because of the big heat wave that was there in the first quarter for the country. Alongside, the revenue growth, the company believes that margins will actually improve this time around because operating profits will grow slightly ahead of revenues. That's the case for Marico as well, where, there has been sequential improvement in the demand sentiment. Along with that, they will see, mid to high single digit consolidated revenue growth. Margins will improve on account of increased operating profits. And the businesses which are not doing for Marico, which include the likes of value-added hair oils, will improve in the next quarter. So where businesses aren't doing well in the first quarter, the companies believe that maybe there could be recovery in the second half. And at the same time, for Marico as well, they say that the next couple of quarters would see increased volume growth and increased realization. So things are improving. Wherever things aren't improving will look even better going forward. Add to that, margins will expand, and the triggers are in place for all these FMCG companies, and that explains why this sector is the sector of the day.
All right. Thanks so much, Mangalam, for getting us a lot of business updates coming in from the FMCG sector. Remember, this particular sector also gives a very good sense of the inflationary and consumption trends, very critical for the economic indicators as well. So keep an eye out on those earnings. But L&T, that has also announced it has won a mega order to build solar plants in the Middle East. And Vivek Iyer, our colleague, is right here with all these details. Vivek, tell us.
Well, that's right. So this is very interesting. Remember, all throughout the Q3 and Q4 of FY24, the company was saying that it's looking to diversify its order book in the Middle East or in West Asia, largely from only hydrocarbon to also the renewable energy. And there was quite a lot of capex lined up by, Saudi majors in terms of actually going ahead and setting up renewable energy facilities. Now, it appears as though, L&T has received one large order, in this particular space itself. This is in the solar power project space. So what is it that the company is saying? The company actually brackets its orders into multiple categories. This particular category, the company has bracketed it under the mega order pipeline. So the range of this particular order win that the company has received is in the range of 10 to 15,000 crore. So company will be building solar plants in the Middle East, and this is from a leading developer, and the company is going to build 2 gigawatt scale project solar photovoltaic plant. Now, the scope of the order also includes grid interconnections encompassing cooling substations as well as the overhead transmission line. So the scope of the order is quite large as far as L&T is concerned. Plants will have a cumulative capacity of close to 3.5 gigawatt. At this point of time, L&T's renewable portfolio is poised to reach almost 22 gigawatt. And this is something that, the bodes quite well for L&T going forward. Analysts had anticipated that every time, there is inflow of orders as far as the non-hydrocarbon segment is concerned, it should be viewed quite positively.
Okay, thanks a lot, Vivek, for that. Well, moving on, Bajaj Auto has launched the world's first CNG bike called Freedom 125. The starting price will be 95,000 rupees. Rajiv Bajaj says that they are looking to break even with the motorcycle within this fiscal year.
If CNG catches on the way we are hoping it will, it would be not beyond this financial year that we would be able to hit our capacity, which by that time could well be 40,000 motorcycles a month. And I would certainly expect that at that level, it should be as profitable as any other motorcycle we make. We are starting, as Rakesh mentioned, with 10,000, very quickly hopefully move to 20, eventually to 40, by which time we would hopefully be in some of our overseas markets as well. I can say that for this capacity, it would certainly be a figure that is more likely to be in double digits in terms of hundreds of crores. So in double digits rather than in triple digits. With the electric vehicle, for example, just to contrast, it's a very long road. We've come a long way since when we started 5 years back, and now we have some line of sight to profitability. I would still say it may be a year or two away till we have reasonable, acceptable profitability with electric vehicles. As opposed to that, where we are still bleeding, and I mean the scooter. The three-wheeler is very, very profitable, the electric three-wheeler. The scooter is not yet. With the Freedom, there is no bleed at all. So we start off on a very good wicket. With the electric Chetak, with every vehicle, we are putting some money on the vehicle and giving it away. Here it is not the case.
All right, Rajiv Bajaj's important commentary really coming in on CNG bike that they launched and also on electric vehicle space. And Sonia, the competition is intense in the two-wheeler segment, and especially his comments at a time when two EV players could be lining up for a pure play EV IPO. So I would say that two-wheeler segment is going to see a lot of competition in different formats.
Absolutely.
Coming in, right?
Well, the overarching theme also is the rise of CNG vehicles, right?
Yes.
In India, I mean, if you look at passenger vehicles, the CNG demand has gone up substantially. Maruti, which is one of the largest player in the CNG space, says that in FY25, CNG demand for their vehicles will rise by 30%.
Right.
And already in FY24, it's been a big gain. So, yes, I completely agree. There's this whole battle in the two-wheeler space. But overall, just because of how how much cheaper CNG
Yes.
is compared to petrol and diesel,
Yes.
CNG vehicle demand has gone up.
That's right. And CNG has its own benefits, and of course, electric vehicle because of the sustainability push. But then their battery is something to be watched out for as well. Let's slip into a short break, quick one on Business Lunch. On the other side, remember, Prime Minister Narendra Modi flies to Russia to meet President Putin. We'll get you his agenda and all the details after this short break. Stay tuned.
So that makes me feel that perhaps being misunderstood is the cross that the fourth right must sometimes bear for being ahead of time. Freedom from the paradoxically unsustainable subsidies that government sometimes employs to promote sustainable technologies. How sustainable technology can be promoted by unsustainable subsidies, not only in India, the world over. Our friends from the media, I am sure they are aware of the chaos which is there across the world as far as subsidies for electric vehicles, etc. are concerned. And I say to customers who may be listening in right now, that we all assure you, we are with you through the life cycle of this product, through all the use cases of this product, through all the allied considerations of this product. Sir, शायद इसको हमारा बजाज की गारंटी ऐसा कह सकते हैं. We want you to witness today our interpretation of the avatar of freedom. And I am sure you will like it, sir, because it offers freedom from petrol imports, freedom from petrol emissions, freedom from petrol prices, freedom from range anxiety and charging concerns, because it's not only the world's first CNG motorcycle, it's the world's first hybrid CNG motorcycle technology.
Welcome back. You're watching Business Lunch on CNBC TV18. Well, heavy rains lashed Mumbai this morning and several parts of the city are reeling under severe waterlogging. The BMC has declared a holiday for all government and private schools in the city. My colleague Santhia joins us with the details. Santhia, over to you.
Heavy rainfall in Mumbai, which started last night, has led to waterlogging and traffic jam situation in multiple areas of the city. This is the CST road in Santa Cruz area, and you can see the traffic jam. The traffic is moving but very slowly. There is waterlogging in areas like Science Circle, Gandhi Market, Govandi, Mankhurd, Chuna Bhatti, Andheri, especially the subways, Andheri subway, Malad subway, Milan subways. Now BMC is claiming that water pumps have been installed to take care of the waterlogging, but situation in multiple parts, especially Bhandop, Nahur, Gandhi Market and Science Circle, also Govandi and Mankhurd, the situation still remains extremely worrisome. BMC has declared a holiday for all the schools and colleges for today. IMC's nowcast warning shows an orange alert for the next couple of hours. The traffic and waterlogging situation in the city continues to be a problem for the commuters. As far as the train services are concerned, the Central Railway's fast trains were suspended on 2 occasions. The current status is that the services are restored, but the trains are running at a restricted speed. Once again, for Central Railway, the slow local train services are running 30 to 40 minutes behind the schedule. For Western Railway, the services are running 10 to 15 minutes behind the schedule, and Harbour Line trains were also suspended on multiple occasions. The heavy rainfall continues to trouble the people of the city.
Thanks, Anthea, for getting us that update from ground zero. And yes, on Monday morning, the heavy rains have really affected the normal working in the city of Mumbai. Let's, on that note, slip into a short breather, and more news and updates on the other side. Don't go anywhere.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, you know, toothbrushes.
Welcome back. You're watching Business Lunch. Now, Prime Minister Narendra Modi has taken off on a visit to Russia to attend the 22nd India-Russia Annual Summit and is set to meet the Russian President Vladimir Putin to discuss a number of issues, including defense, trade, investment, as well as energy cooperation. Our colleague Parikshit Luthra is right here to tell us all about the agenda and the important updates expected from these meetings. Parikshit.
Well, the Prime Minister Narendra Modi is visiting Russia for a two-day visit. Now, this is his first visit to the country in 5 years. There have been meetings and phone conversations between him and President Putin over the last few years. The last meeting between the two leaders in person was in 2022 on the sidelines of the SCO summit in Samarkand, Uzbekistan. They also met in 2021 when the India-Russia summit took place in New Delhi. Now, since then, a war has been raging between Russia and Ukraine, and that is likely to figure in the conversations. And the Prime Minister will once again emphasize that dialogue and diplomacy is the way forward. Now, one item will be very critical and pressing on the Prime Minister's agenda, and that is urging Russia to stop the recruitment of Indian nationals who are being misled and being recruited into the Russian army. There were at least 10 or 15 such Indian citizens who had expressed concern, and they have been brought back to India. There could be at least 30 to 40 or even 50 such Indian citizens who are still serving the Russian army in different positions, and we would like them to be returned as soon as possible because we consider this recruitment to be absolutely illegal. Now, at the same time, there will be deep conversations on defense, trade, investment. We would like Russia to correct the trade imbalance. For example, the trade between India and Russia is right now $65 billion, and we actually import close to $60 billion. So there is a huge trade imbalance, which we would like Russia to correct. Importantly, there would be an alternative payment mechanism which would be discussed to settle payments, because the SWIFT payment system, which is the global payment system, that is barred for Russia because of the sanctions as a result of the war. So we will discuss an alternate payment mechanism as well. There would be discussions on having cooperation in defense spares and defense components as well. So lots on the table, connectivity there too, and the Prime Minister heads to Austria after that.
Okay, thanks a lot, Parikshit, for that. So that's Prime Minister Modi's Russia visit. France's left-wing group, the New Popular Front, achieved a shock victory in the second round of the French elections, thwarting the far-right National Rally, which is currently seen winning about 143 seats compared to the pre-poll expectations of over 200 seats. The leader of the left-wing New Popular Front also urged President Macron to appoint a prime minister from his party. CNBC's Charlotte Reid reports.
Well, look, it was just 4 weeks ago we were standing here after President Macron called this snap election after the far right made these huge gains in the European election. And he said, look, we need a moment of clarification in the country. And that's why he dissolved the National Assembly where we're just standing. And look, we had this clarification. France voted in waves against the far right once again. Of course, that took a lot of maneuver, a lot of tactical voting. And as we talked a lot about last week, a lot of candidates dropping out of the race in all these three referendums to kind of consolidate the vote against the far right. But certainly the result was still a surprise last night, because not only the far right was beaten, but they came in third position, and none of the polls had predicted that the left-wing bloc would come in the lead as well. But everybody is very, very far from the all magic number of 289 seats, which is the absolute majority. The biggest bloc, the left-wing bloc, the Nouveau Front Populaire, will have about 180 seats. President Macron's bloc, which actually held better than expected, they did lose about 70 seats, but they held up better than expected, will stand at around 170 seats, and then the far right will stand at 140 seats. So there's a lot of questions there. What happens next? It's very unclear who will be able to form a government. Now, the left-wing bloc, as we were saying a little bit earlier, Karen, say they want to have the chance of naming the prime minister and form a government, but we don't know who would be the prime minister for the left-wing bloc. They booked this coalition together very, very quick. That was a big surprise that they managed to do that, but they still have some tensions within that bloc, and it's unclear which candidate they would be able to put forward as potential prime minister. We know that the figure of Jean-Luc Mélenchon is a no-no because it's too much of a polarizing figure. So now there will be talks. Some people are talking about, could we see a coalition? Absolutely not in the French political tradition, but could they go down that road? We'll have to wait and see. The parties will talk and will wait. What we know is Gabriel Attal, the prime minister, said he will put his resignation today to the president, but that he will stay in the job until a new government comes in place. Of course, there are some key challenges for the country, like the Olympics that will be held in less than 3 weeks. So he will remain in place for as long as necessary. But here again, opening a window of uncertainty, because it is a hung parliament, but it's very unclear what path can be taken to give a majority to any bloc going forward.
So that was Charlotte talking about the French election dilemma, whether there'll be hung parliament or a coalition government. Completely out of time on Business Lunch. Thanks so much for tuning in.
Other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It is a red-looking screen for our own markets today. The midcap's not doing so well, 257 points lower, as you can see at the top of your screen as well. Across the board, there's a tinge of red.
Tinge of red across the screen, on par for the course, given the fact that the kind of rally that we've seen has been quite good. Last week, mid-caps and small caps outperformed quite significantly, but quite a lot lined up on this show today. So let's start off with the top headlines. Stocks trade ranged as valuation concerns square off with expectations of an investor-friendly budget. FMCG, along with oil and gas, notched up gains, while consumer durables and PSU banks dragged. Mid-caps under pressure.
FMCG stocks gain after Marico reports an uptick in volume growth and Dabur cites improved demand in rural India. IMD's forecast of better than normal July rainfall also aids sentiments. Stocks gain between 4 to 5%.
Bank of Baroda corrects nearly 3.5% in trade after registering its weakest deposit and loan growth in 12 quarters. The bank has also lost market share in the first quarter.
DOM surges in trade after Axis Securities initiate coverage with a buy rating and target of 2,670 rupees. Says company has emerged as the leading player in the stationery market, and the brokerage expects return on capital employed to improve to 25% in FY27 from 22% in FY24.
Shilpa Medicare in focus after the company bets big on the new CDMO opportunity. The company says that the cumulative milestone fee that they will get is $10 million, and the supply should begin from Q1 FY26.
Okay, all right. Those are the top headlines. A couple of them we'll discuss in greater details through the course of the show as well. For the markets, as we've been pointing out, it's a down day. The Nifty is down 50 points. We have the mid-caps, which are underperforming. The Nifty did recover from the lows a little bit, the low that we touched around 12. But from those levels, again, it is seeing some fall back. The mid-caps too down 0.4%. Bank Nifty is the big drag today, 0.6%. So the weakness continues there. Remember, HDFC Bank was the big loser in the later part of the week last week. And today, again, if you look at HDFC Bank, it continues its down move. We have the FMCG space, which is doing well. So a lot of commentary coming in from managements, the rural sentiment, and that continues to keep that particular sector buzzed. But more or less, it's not many gainers today, Vivek. It's a lot of losers that we are talking about.
That's right. You know, the advanced decline ratio skewed in favor of the declines. Like you mentioned, so what's actually happened is that, the BFSI operational updates haven't been up to what the street was anticipating. IndusInd Bank was below expectations. Bank of Baroda, like we mentioned earlier, was quite weak. But this is our special segment, Mid-Cap Movers, where there will be a lot more stocks on the radar. Hormaz is at the wall. Hormaz, take it away.
People stuck in rain, people stuck in traffic, they'd still want to know market mein kya chal raha hai. So we'll tell you all of that. Start off with the gainers in the broader markets. Then Paytm is the one that is leading the charge today, bucking the trend in an otherwise skewed market towards the declines. Up 9% is Paytm, now 15% in the last 2 trading sessions. Remember, the stock was up 6% on Friday as well. GE Shipping is off the highs of the day, but still trading with gains of around 6.5%. GMDC and JBM Auto also seeing a good day in today's session, gains of up to 6%. The railway PSUs are back in action. It's been a while since we spoke of them, and now they are buzzing. And how? 15% higher for RVNL, 6% for Ircon. IRFC made a new record high in today's session, 7% there as well. And Railtel also seeing gains of up to 4%. There were plenty of initiations in coverage in today's trading session. Plenty of broader market names there. DOMS is off the highs of the day. At one point was up 5%. Is now 1.5% now. Hudco is up around 3%, and Stylum Industries also seeing good traction in today's session. Stocks doing well on the back of volumes, and within those are Metro Brands was also up 10%. So there is a bit of cool off in most of these broader market names. Electra Greentech now up 5%. HBL Power just signed an MOU. The news came in recently, is up 5%, and Marico on the back of a strong business update up 4%. And some other reactions to business updates, because there were plenty of them. AU Small Finance Bank, JNK Bank down 5%. Ajmera Realty saw that spike after the business update came in, but has cooled off since then. And Dabur too doing well for itself in today's session. Back to you.
Okay, all right. Thank you so much, Verma. So that's an interesting list of big buzzers in the broader markets. It's a good time to welcome Jay Thakkar, Head of Derivative and Quant Research at ICICI Securities, for a technical check on the markets. Jay, good afternoon. Thank you so much for joining us. Tell us, what are some of the levels you will be watching out for? 24,272 on the Nifty right now. What is the support, and what would be the next important level to watch?
Hi, good afternoon to you, Sonal and Vivek. Well, as far as the Nifty is concerned, I would say, Sonal, that on the upside, 24,400 to 500 range is a very clear resistance for this week. And for this weekly expiry, I believe that it's unlikely to take off those levels. And if it managed to take off those levels, then definitely, it would be inching towards 25,000 soon. Else, it might just consolidate within a range of, say, 24,500 to 24,000 on the downside. So unless those levels are not broken, this 500 points consolidation may continue for this week. And as far as Bank Nifty is concerned, so now we can see its consolidation to continue within the range of 52,000 to 53,000 levels. So in this sideways momentum for this week, stock-specific momentum is likely to be going ahead, and I think the breadth may weaken, but then those stocks which are much likely to benefit out of the budget may also perform quite well. A few of them are in the band period as well. But the stocks which recommendation which I have for today, those are 2 buy recommendation. The first one is REC. REC and PFC, both of them are continuously forming high tops, high bottom. We are seeing good long additions out there. The momentum is back into the favor of the bulls. The stock is trading around the levels of 612, 613 range. So I think, on the downside now, 598 will act as a very crucial support for REC. Until it doesn't close below those levels, we can see it inching towards 635 to 650, which will be 2 short-term targets. The second buy recommendation, Sonal, is from the pharma pack. I think that selective pharma names are likely to do good from here on as well. And Alchem, which is trading around the levels of 5181 right now, it has got a good support around the levels of 5100 in the very near term. I think with that as a stop loss, one can buy this. It's likely to inch towards the upper end of the range, which comes to 5400 and thereafter 5500. These are his 2 short-term targets.
Thank you so much, Jay. So REC and Alchem Labs, those are our top picks for the day. Let's now slip into a short break. We'll get you more on the markets and put focus on Anant Raj, which is buzzing in the session today. This will be part of the Mid-Cap Spotlight segment. Stay tuned.
Of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform?
it takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back to Midcap Radar. As you can see on the bottom of your screen, the monthly life insurance data is out. 3 stocks in focus that we are looking at. Of course, there will be LIC, there will be HDFC Life, there will be Max Financial and ICICI Prudential Life. In fact, ICICI Prudential Life has seen a sharp recovery after a quick dip that it took just around 10 minutes back. But let's now focus on Shilpa Medicare. The company today held an analyst call with an update on the CDMO arrangement. Ekta tells us more on that particular development. Ekta, over to you.
Well, yes, it is for a particular NCE or new chemical entity which they have tied up with a company called Unisciv, and it is basically for a drug which is going to treat kidney problems. Now, they expect an order for 5 million tablets before June 2025. They expect an order for 15 million tablets before December 2025. This particular NCE, to put it into perspective, a patient has to take around 2 tablets a day of this particular drug, OLC, as compared to other phosphate binders which kidney patients need to take, which is generally 8 tablets a day. So the effectiveness or the number of tablets that you need to take would come down with this particular new chemical entity. The pricing decision will be decided by the pharma company in question. They will be filing for the drug in the US initially and then other markets. The phosphate binders market size in the US is more than $1 billion currently. So that's the kind of opportunity that Shilpa Medicare spoke about. Shilpa Medicare will be getting signing approval launch milestones. $10 million is the cumulative milestone fee. Supply should begin from Q1 of FY26. The current agreement is for an exclusive 4 years. They will have a renewal option based on certain riders. They expect margins of 50% and above from the molecule. They expect it to be a substantial revenue opportunity. The capex, according to them, will be set up by the pharma company itself, which will be one dedicated API block. And Shilpa Medicare won't be investing in that. The pharma company will be, which is worth around $6.5 million.
Thank you so much for that, Ekta, for putting and giving us more details as far as this particular opportunity for Shilpa Medicare is concerned. Remember, the stock was a sharp mover on Friday. Today continues to hold on in the green. The next stock on the radar is Anantraj. In fact, the stock has surged more than 80% in 2024. In our special segment, Midcap Spotlight, Sonal, you're focusing on Anantraj today.
Oh yes, so the stock has done really well. It's at a fresh 52-week high today. The stock is up 84% this year itself. And I just was looking at some of the factors that could have contributed the kind of surge that we've seen in the stock so far. First up, about the company, it is a real estate player in the NCR region and has a substantial land bank of around 312 acres. The company is also venturing into the data center segment, and that could possibly be the reason why we are seeing that big spike, because the street is thinking of that as an opportunity as well. So what is working? The data center foray. Now, we have heard from a lot of companies, be it Cummins, be it ABB, all of them talking about data centers being a big opportunity, a big market as well. The company has total proposed capacity of 307 megawatt, after which they've already operationalized 3 megawatt. In Q1 FY25, another 3 megawatt, and in Q4 of FY25, they will be operationalizing around 22 megawatts. This is coming in from the annual report. Additionally, their core business, the residential business, is also doing well. Their pre-sales, there was a big surge, 2,800 crore rupees versus 700 crore rupees. This is as on FY24. The company says they have ongoing and upcoming project pipeline of 9.1 million square feet as well. And there was a recent note by DAM Capital where they have given some of the parts for these different businesses. And here the data center SOTP is much higher than commercial for sure, and higher than the residential business. That is the core business also. It's at around 299 rupees a share. The land bank is huge, so they are ascribing around 74 rupees per share to that particular asset as well. Now, let's talk about the shareholding pattern. The promoters hold around 60% stake. There are some life insurers as well, like Kotak Mahindra Insurance Company, 1.2% stake there. Tata Indian Opportunities Fund holds 1.28% stake here. The Elm Park Fund holds 1.4% stake here. So there are certain triggers that the street is watching out for, data center being one of them, and the huge land bank as well, that street was always bullish on. What they do with it is something that they'll be watching out for. But yes, that excitement continues, and a new high for the stock today.
You're absolutely right, and a couple of initiating coverage notes, like you just mentioned. Of course, there's been quite a lot of interest as far as the entire Delhi NCR region is concerned. But as the union budget nears, a whole host of railway stocks are buzzing in trade. So I've done a little bit of analysis on what exactly is happening with these stocks. You can't ignore them simply because of the fact that you're actually seeing the monthly moves. It's been really spectacular. So first up, we've taken 3 stocks. Which are the 3 stocks? We've taken the 3 railway PSU EPC stocks. So RVNL, IRCON and RITES. In the last 1 month, these stocks, RVNL is up 46%, IRCON is up 28%, RITES up 18%. Let's look at how they've done over the past year. Last year, RVNL, just in the last 1 year, it's up 4.5 times. IRCON up almost 4x, and RITES up 2x. So, been significant rewarding in terms of shareholders, who've actually held on to the stock for a year and a half. Now, in terms of the valuation, first thing to note is that there's not too much sell-side brokerage coverage as far as these names are concerned. In fact, only one brokerage covers this, and that's IDBI Capital. IDBI Capital for FY26, their EPS estimate for RVNL is 9 times. So at the current market price, RVNL trades at 61 times FY26 earnings estimate. IRCON, for the same period, that's FY26, trades at 32 times, and RITES trades at 34 times. Now, coming to the order book, remember, order book for these names are quite large, but also important to note that these companies typically work on very low EBITDA margins. So RVNL has an order book of 85,000 crore, order book targeted for FY25. The guidance that the company has given is close to 1 lakh crore. Order inflows for this particular year seen in the range of 20 to 25,000. Revenue growth for FY25 seen at 5% over FY24 levels. That's close to 22,000 crore that the company did in FY24. PAT growth seen at 10 to 15% over FY24 levels. The PAT for FY24 was in the range of 1,600 crore. Now let's move on to IRCON. IRCON, has an order book currently of 27,200 crore. What is the guidance that the management has given? Largely flat. Last year they ended in the range of 12,330 crore. Order inflows seen in the range of 10 to 15,000 crore. Revenue growth of 10%, the company says they could see in FY26 if order inflows materialize. EBITDA margins expected to be in the same range, so just around 7%. PAT margins expected in the range of 7 to 7.5%. And lastly, coming to RITES at the end of FY24 didn't really give a top-line guidance, but they give more of an EBITDA margin guidance. EBITDA margin seen largely in the range of 25 to 27%. Historically, too, it's typically been in this particular range, 26% in FY24. PAT margins too is expected to be in the range of 20%. So what you're actually looking at this point of time, after the move, these stocks are trading at pretty expensive valuation, even at FY26 basis.
No doubt about it. Expensive valuations, and look at the moves that we have seen. RVNL was up 20% on Friday. It's up 15% yet again.
Oh.
No fresh triggers, of course. It's like the next defense story, right? These stocks are just surging. And while we are talking about budget, we have to talk about earnings as well. Shalby, by the way, has reported its Q1 earnings. Net profits are down 20%. Revenues, though, have increased by 18%. So the EBITDA margin number will be important to track. The stock, though, is down 5.5%. There's been a sharp fall from the highs as well. So the EBITDA margin number will be important to calculate on that one. So far, going by the net profit, there's a sharp decline from the highs on the stock price right now. We'll get you more details and analysis on Shalby for sure. Let's slip into a break. When we come back, we'll get you more on the markets and put focus on Stylum Industries. That stock is buzzing in trade. Stay tuned for that. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
After 34 years, maybe this is the 100th product launch of my career at Bajaj Auto. And there is one person that I have never ever missed on a product launch occasion, but I felt that today I feel the absence of this person. This is a person who, brick by brick, built this wonderful company that we are all part of, called Bajaj Auto. This is a person who, on his broad shoulders for 50 years, carried the entire Bajaj group, not just Bajaj Auto. This is a person, I think you will all agree, who pledged his razor mind, his iron will, his very large patriotic heart to the cause of building Indian industry. On the side, he also served as chairman of Indian Airlines in the 80s, if I remember right. He was also for a long time a member of Parliament of the Rajya Sabha. And since he was my father, I saw him from very close quarters. And if I may say so,
Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's talk about Stylum Industries. The stock is surging in trade after Equirus has initiated coverage on the stock with a buy rating. Manglam is here with the details. Manglam, a lot of initiating coverages on the stock.
A lot of initiating coverages indeed. In fact, a couple of weeks ago, we had a coverage coming in from Investec, and now there is Equirus, which has written. And while the overall broad thesis is similar to that, their target price is closer to 2,500 rupees, and they have initiated coverage with a buy rating or a long call, as they call it in their terminology. The thesis is pretty simple. Over the last couple of years, the company has been among the top 4 manufacturers of laminates with a market share of almost 8%. The second largest laminate exporter, where the exports market share is close to around 19% itself, and exports contributes about 2/3 of its revenues. So almost 97% of the company's revenues comes in from laminates, and also has presence in acrylic, solid surfaces and pre-laminated MDF. So increased capacity and increased exports could be important triggers for the company going ahead. Over the last 10 years, they've grown faster than the industry. So, on a revenue CAGR basis, the company's revenues have compounded at around 17%, EBITDA at around 25%, and as a result of which, the bottom line at around 34% over the last 10 years. So with that, they believe that this runway could continue with the company's strong export focus, rising share of value-added products, which could be margin accretive. They've added capacity in laminates business, so that would be important as well. And from a balance sheet standpoint, they are debt-free, so that would be positive too. Equirus has built in a revenue CAGR of 18% over the next few years, EBITDA at 15% and net profit at 13%. Quite a difference from what the company has been doing over the last 10 years. But even if you account for these numbers, they have valued the company at 25 times 1 year forward earnings, and hence they come at a target price of just under 2,500 rupees.
Thank you so much for that, Mangalam, for putting the spotlight as far as Thailand Industries is concerned. Let's now focus on Dhanlaxmi Bank. The company registered weak loan growth in the first quarter while also losing some market share. The gold business, however, showed strong growth. Earlier today, we spoke to Ajit Kumar KK, the MD and CEO of the company, and discussed the company's growth outlook going forward. Listen in to what he had to say.
Our expectation is that it is definitely going to be somewhere around 3. It will be less than 3% for the current year, and the net NPA also will be less than 1%. That's what we look at for the current year. Since the last 2 years, every year we had seen a 1% decrease in GNPA. This year also we expect a more than 1% decrease in GNPA, as well as the net NPA coming down to less than 1%. Maybe after a very, very long time. The expectation is that from the current level of around 3.2, I think we expect it to go up by another 20 basis points, maybe somewhere around close to 3.4. That's what we look at.
Okay, all right. That's the word coming in from Dhanlaxmi Bank. DOMS Industries, that is the stock on our radar, gained after Axis Securities initiated coverage on the stock. A lot of brokerage notes which are moving stocks. Upasna is here with all those details. Upasna.
Thanks so much for that. Axis Securities has initiated coverage on DOMS Industries. It says that Indian stationery and art material market has seen continued growth over the years, and it is expected to grow at a 13% CAGR over FY23 to FY28. DOMS Industries has emerged as a leading player in the Indian stationery market, holding an overall market share of 12% in FY23. It expects company's EBITDA margin to be in the range of 17 to 18% for FY25 to FY27, driven by various factors such as increased capacity utilization, improved product mix, stable raw material prices, and improving on-ground execution. In terms of ROC, the brokerage says that it is likely to improve from 22% in FY24 to 25% in FY27. It also expects a robust revenue CAGR of 25%, EBITDA CAGR of 26%, and PAT CAGR of 28% over FY24 to FY27. It also says that with improved visibility in earnings growth and a strong return profile, the stock appears attractive in the mid-cap space. Hence, the brokerage initiates coverage on this stock with a target price of 2,670 per share.
Thank you so much for that, Upasna. The next stock on the radar, the next company on our radar is Man Industries. The stock fires up in trade after it won an 1,850 crore order. This is for line pipes supply. Earlier today, we caught up with R.C. Mansukani, the chairman of the company. He tells CNBC-TV18 that he expects 20 to 30% revenue growth in FY25. Listen in.
Revenue, we have changed from last year 3,200, and it should be roughly 20 to 30% growth expected current year. And the next year, because of our other companies also going to start some projects, we are coming up in Jammu and some in abroad. So all will come in the 25, 26, which we are expecting 100% growth. Approximately, we are trying to achieve 100% growth in next 2 years. Blended number will be 25, 11 to 12%, and 25, 26. We will try to maintain more than 12. Average out should be 12% plus.
All right, that's the word coming in from Man Industries. The stock up 6% in trade today. With that, we'll take your leave on this edition of Midcap Radar. Your stocks when we return.
Entire period of doing all of this, he is a person who slept very well at night, because he always said, I sleep on the pillow of courage and I sleep under the blanket of integrity. That is how I remember it. His unapologetic Bharat Bhakti, and I would like to remember that today when we are launching the world's first something. His unapologetic Bharat Bhakti, via the so-called, at that time some of you may have heard, Bombay Club, which was much derided in the 80s and the 90s. Today, sir, it finds expression It finds voice through expressions such as Make in India, Atmanirbhar Bharat, Vocal for Local. So that makes me feel that perhaps being misunderstood is the cross that the forthright must sometimes bear for being ahead of time. Freedom from the paradoxically unsustainable subsidies that government sometimes employs to promote sustainable technologies. How sustainable technology can be promoted by unsustainable subsidies, not only in India, the world over. Our friends from the media, I am sure they are aware of the chaos which is there across the world as far as subsidies for electric vehicles, etc. are concerned. And I say to customers who may be listening in right now, that we all assure you, we are with you through the life cycle of this product, through all the use cases of this product, through all the allied considerations of this product. Sir, शायद इसको हमारा बजाज की गारंटी ऐसा कह सकते हैं. We want you to witness today our interpretation of the avatar of freedom. And I am sure you will like it, sir, because
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of red on the screen, but no accelerated losses is what we are seeing. So it is a day of range-bound trade with a negative bias. We have the Nifty, which is down around 30 odd points, the mid-cap index, which is down around 250 odd points. But the Bank Nifty has recovered from the day's low. So the Bank Nifty is down just about 200 odd points. Remember, at one point in time, it was an over 300 point cut that the Bank Nifty was showcasing. Advanced decline ratio, maybe that should come up for you. There's a slight bit of an improvement which has taken place in the advanced decline ratio. So it currently is on the declining side, but there's a little bit of a narrowing between the red and the green lines, as you can see. But joining us today, we have Astha Jain, research analyst at HEM Securities, Ashish Kyal of Wave Strategy Advisors, to answer all of your stock queries. Ashish as well as Astha, welcome to the show. Well, Ashish, let's kick off the show with you. Technically, how would you approach the market today?
See, if you look at the markets, it looks to be in a broad range. On the downside, there is 24,160 as an important support, and on the upside, 24,400 as the hurdle. So it looks like forming a triangle pattern. But I'm looking at it like a continuation pattern. I'm optimistic if it manages to break above the day's high, which is around 24,360, we could head towards 24,500 eventually. So the overall tone is buy on dips, and we should be heading towards 24,500, 24,700 levels on the upside.
Okay, all right. Any specific stocks that you're liking today?
From the stock specific perspective, if you look at something like Jindal Saw, we can clearly see a very strong run up in the stock in today's session, nearly around 4% up, and it is giving a good breakout, bouncing back from its important support levels. So looks like we can see the levels of 600 on the upside in the stock. So Jindal Saw is once a stock on the radar, and which is looking positive. If you look at from the large cap names, the stock something like over here, we can clearly see Adani Port is another stock which can do better eventually. So we can expect it to again reverse back on the upside towards 1500 levels. We are seeing some selling pressure in today's session, but should be reversing back on the upside, aiming for the levels of 1550. So these are the two stocks on the radar as of now.
Okay, all right. Well, we have Sivaraj, who writes to us from Pondicherry, holds 18,000 shares of BEL, which is bought at an average price of 312 odd rupees. So he's sitting on a profit there. He's a short-term investor, wants to know what to do, whether to hold or sell. Well, as a short-term investor there, but I'm anyway going to ask you for a fundamental call on BEL. Then I'm going to toss it over to Ashish for a technical check. But fundamentally, what's your approach towards it?
Hi, good afternoon to both of you. So talking about BEL, yes, we are positive on the counter and recommending a hold on this counter with a price target of 355 to 360 at the initial level. Talking about this counter, the way this company is improving its share in the defense and capex space, because presently their share is almost around 12%, which was only 8 to 9% few years back. So they are continuously improving their share in the defense capex space. So that is really positive for the company. In fact, going ahead also, we are believing that margins to remain stable and the industry tailwind is high. So the combination of all these factors suggests that there is more upwards left for the stock, and hence we are positive, giving a whole recommendation to this stock with a price target of 355 to 360.
Okay, all right. And technically, how would you approach it, Ashish?
From technical perspective, I think 325 was the resistance that BEL has now decisively broken, and this breakout has also happened along with the volume. So that shows that it's going to be sustaining there. The overall MACD is also giving a buy signal. So I think the stock is bullish. We can head towards the level of 360, which is in sync with the fundamental analysis also. So 360 is the target for BEL. We can look forward over near term. And on the downside, the support or the stop loss can be maintained at around 320 levels.
Okay, support and stop loss at 320 levels for BEL. Let's get in the other query now. We have Kaushik Bhatt, who writes to us from New Delhi, holds 200 shares of Zen Technology, which he's bought at a price of around 412. So he's sitting on a good profit of close to 2 lakhs there. And 70 shares of Adani Ports, which he's bought at a price of around 663. So he's sitting on a profit there as well of around 57,000 odd rupees. He's asking, he's a medium to short-term investor, wants to know what to do, whether to hold or sell these particular counters. Well, sitting on a good profit there, but do you expect any further upside from these levels? And what would your recommendation be, Ashish?
See, if you look at Zen Technologies, we can clearly see the stock has managed to give a very strong move on the upside. And we can clearly see the mid-cap IT has started buzzing just now. So it's not very since long that we are in an uptrend in the IT space. But Zen Technology has shown a very good move from around 1,000 levels to now 1,393. So I would continue to recommend a hold over here. We can expect a target of 1,600 on the upside in this stock with a very important support around 1,265. So as long as 1,265 is intact, 1,600 is what we can aim for on Zentech. And Adani Port also, as we spoke just some time back, the overall stock looks to be bullish. We do have investment in Adani Port, so I'm anyways bullish on that stock. We can expect over near term, the stock can reach towards the level of 1,600 and eventually higher. On the downside, the support for the stock is going to be around 1,440 levels as of now. But if we can hold on, I think buy on dips is the strategy for 1,600, aiming for 1,600 levels.
Okay. All right, well, we do have Sagar, who writes to us from Bangalore now. He holds 131 shares of Persistent Systems at around 3,584 and 254 shares of Motilal Oswal, which he's bought at 650. He wants to know what to do, whether to hold or to sell these particular stocks. So both of them, I'm going to toss it over to you, Astha. What would you recommend?
So first of all, talking about Persistent System, we are recommending hold on this counter. So one can stay invested in this counter with the ultimate price target of 5,100. Management pedigree is very strong for this company. In fact, going ahead also, we think that the order pipeline will definitely get improved. So this is what we are expecting from all the IT counters, but especially for the Persistent System. We really like the product which the company is into, and hence we are positive on this counter. I think one can remain invested in the counter and closely watch the results also, because now the result season is about to start. Recommending a hold with a price target of 5,100. Talking about Motilal Oswal Financial Services, we are positive on this counter also, because we know as the retail participation is increasing, definitely this firm has shown a strong improvement in their all business verticals, whether it is, if we talk about their AUMs also, and the broking business vertical. Every vertical is right now working in the favor of the company, and they have a strong RM additions also, so which in turn indicate that going forward also we can see strong growth in their AUM going ahead. So talking about Motilal Oswal Financial Services also, we believe that this counter is still in an upward trajectory, and we are positive on this counter, recommending a hold on this counter also, because we really want to see for both the counters. Hence we are not recommending buy, but recommending a hold with a price target of 610.
Okay, all right. Ashish, any view?
See, as far as Persistent System is concerned, I think the stock has done extremely well. It has managed to break above that 4,435 levels also, which was the previous peak. So the overall tone remains bullish. We can see some profit booking over short term, but that should be the opportunity to buy more. Since the impulsive rise started, I think we can see the third wave going on, and the stock can head towards the level of 5,500 on the upside. As far as Motilal Oswal Financial Services, we can see some selling pressure from 700 levels. The stock has now come down to 550. So that remains little concerning. But having said that, one can maintain a stop loss in the stock around 515. As long as 515 is intact, we can start seeing some kind of a reversal sign. And if you can get the stock again back towards that 670, possibly get out of the stock at around 670, 680 levels.
Okay, all right. Well, Sagar now writes to us from Bangalore, holds 131 shares of Persistent Systems, which is bought at 3,584 odd rupees. And oh, sorry, we've already covered this one. So it's Moti, that was on Persistent and Motilal. We have Sukamaram, who writes to us from Kerala, holds 400 shares of Indian Hotels, which he's bought at around 635. He's a short-term investor, wants to know what to do, whether to hold or sell this particular stock, sitting on a bit of a loss at this point in time. 400 shares is what he's bought. So short-term investor, Ashish, that's right down your alley. What would you recommend? What would your stop loss be for Indian Hotels? What would your target be? And do you expect, recommend an exit?
See, for Indian Hotels, just a disclaimer, we do have a holding in Indian Hotels. The overall stock, I'm going to be bullish over here because the stock has managed to show a very strong rise. Over short term, yes, there is some kind of profit booking that we are seeing. But if on the downside, the support for the stock is going to be around 580 odd levels. My recommendation would be that if you can extend the time horizon, keep it for around 6 months to 1 year, we can expect the stock to cross about 700, maybe see even 800 levels. So the stock is bullish from medium to long-term perspective. The short-term dip should be used as an opportunity and try to extend the time horizon towards 6 months to 1 year. And I think he should be able to recover back his losses.
Okay, all right. But fundamentally, Astha?
So fundamentally, we are positive on this counter. There is no need to book the losses because we are expecting strong revenue as well as EBITDA growth going ahead also. Although in FY24, the company has shown the revenue as well as EBITDA growth of around 19.5 to 19.5 on the revenue front and 16.5 on the EBITDA front. So I think we are expecting this counter to continue to show strong momentum because there are two major positives which we are feeling that will be working in the favor of the company. First of all, strong room addition. So the company is working on the room addition of around 12,953 rooms over next few years versus they have operational keys of 24,000 presently. So I think that will really going to add in the financial performance. And that's why we are very much positive on this counter. Stay invested in the counter. Initial price target can be kept at around 660 odd levels.
Okay, all right. Well, we have Prem Garg, who now writes to us from Thane, holds 200 shares of Keynes Technology. He wants to know the prospects of his investment. Again, a good buy, good upside that we've seen in terms of the stock performance. Sitting on a profit there. Prem Garg is sitting on a profit of 1.7 lakhs there. What would you recommend, Astha, on this one?
So Keynes Technology, first of all, a disclaimer, we might have the stock in our PMS also, and we might have recommended it to our client also because we were positive on this counter when the IPO came. So since then, what a move it has shown, and still we are positive on this counter. First of all, want to give the price target, which can be set at around 4,700 odd levels. So talking about this counter, their business verticals are really working very strong, and we have seen some sort of muted financial performance in the last few quarters, but going ahead also we are expecting the company to perform strongly because the demand environment is very robust right now. So we are positive on this counter, recommending a hold because buy can be a recommendation which can be given after seeing the results. So right now only we are restricted ourselves to hold recommendation with a price target of 4,700.
Okay, all right. And the stock has done very well, even, technically. So, Ashish, what would your recommendation be on Keynes Technology? Do you see further upside?
Yes, absolutely. Because the stock managed to break that hurdle of around 3,550 and shown a very strong rise. Some profit booking in today's session, but I think the overall tone remains bullish. We can expect the stock to reach towards the level of 4,800 on the upside. So continue to hold here. And as I said, the overall space is also buzzing around. So 4,800 should be the target. On the downside, one can maintain a stop loss of 4,000 so that you can lock in some kind of a profit just in case there is a dip here.
Okay, all right. Well, on that note, we need to take a short break, but we have a lot more queries lined up. The markets seem to be stable, not showing too much of a deceleration from these current levels. The mid-caps as well as the Bank Nifty underperforming at this point in time, but otherwise the Nifty and the Sensex just about trading with a negative bias. Take a break, more answers on the other side. Stay tuned.
Freedom from petrol imports, freedom from petrol emissions, freedom from petrol prices, freedom from range anxiety and charging concerns, because it's not only the world's first CNG motorcycle, it's the world's first hybrid CNG motorcycle technology.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes...
Welcome back. Well, you're still tuned into Your Stocks. We have with us Astha Jain as well as Ashish Kyal to answer all of your stock queries. Well, let's get in another question now. We have Anvesh who writes to us from Mumbai, who's 1,935 shares of Sakuma Exports in the price range of around 35.63. So that's his buy price. He's sitting on a loss at this point. Short-term investor wants to know what to do, whether to hold or sell this particular counter. Well, what would you recommend in such a case, Ashish, you know, sitting on a loss at this point in time, but do you see further upside technically?
See, if you look at the stock, I think the movement is a little erratic. We can see a surge in the volumes over past few days, but there is not much of a movement in terms of price. So I would rather be out on in a stock like something like this, because there is not much of an expectation over here. We can see it is not able to break that 38 levels on the upside, and on the downside, the support for the stock is somewhere around 28.50. So it's better to be out from stocks like this. Not much positive here, but I think overall IT sector can do better. Something like Infosys or TCS can be a good bet. Diversify from here and invest into those kind of stocks.
Okay, all right. Well, we do have KS Rao now, who writes to us from Andhra Pradesh. He holds 200 shares of Arvind, which is bought at around 200 rupees per share. He's a long-term investor, wants to know what he can do and whether he can hold these shares for a further period of around 2 years. Well, interesting query there. You know, he's sitting on a profit now. He's willing to hold on for another 2 years. Fundamentally, what would your view be, Astha?
So yes, we are recommending hold on this counter, and there are several reasons behind it. First of all, as it is a global supplier of the fabric, we know about this company. So now they have a strong capex, or I think till FY27, and in fact for FY25 they have a capex plan of around 400 to 450 crores. So first of all, a strong capex plan, and they are really want to expand their two division, which is AMD as well as garmenting. So Arvind Advanced Material Division is one of the division where they are wanting to expand, and apart from garmenting division. So I think all these, whatever companies taking efforts to show their financial performance strength in going ahead, I think that will definitely going to reap benefits, and that's why we are positive on this counter, recommending a hold on this counter with the initial price target of 440.
Okay, with an initial price target of around 440 odd rupees. But would you be as confident on the technicals, Ashish, on Arvind?
Yes, of course. And first, I would like to congratulate him, because not many players sit from 200 to 400, nearly 100% return there. And he's still holding on and keeping the horizon of 2 years. That's a good sign. And the overall stock looks to be bullish. I'm optimistic that the stock will reach towards the level of around 450, 460 on the upside. At the current level, there can be some minor profit booking possible, but eventually the stock should move up, and the support for the stock is around 360 levels. So as long as 360 is intact, we are optimistic we should see 450 levels on the upside.
Okay, all right. You could see 450 levels on the upside. That stock, as you can see, has rallied around 50 odd % just in the past 6 odd months. So good going for Arvind. The stock is just about trading at around 393 odd rupees. But Puneet Saxena now writes to us from Ghaziabad, holds 106 shares of Allied Blenders and Distillers at around 281, which was the IPO price. He wants to know what to do, whether to hold or sell this particular counter. Any view, Astha, on this?
Yes, we had a coverage on this counter. We had recommended subscribe, but for the limited listing gain. And I think now we are just sticking on that view that please book the profit on this counter, because the price they have bought this IPO was quite overstretched. At 281 issue price, the issue was valued at more than 100 times of price to earning multiple. In fact, we have done some forward projections also, and whatever working we had done, we still find the issue to be costly at those levels. Although we all know that it is one of the largest Indian-owned IMFL, India-made foreign liquor, and third largest IMFL in the country, and their officers, that is brand, is really gaining momentum, because it is a mass premium brand, and they have hold a strong market share of around 11% in the Indian whiskey segment. But all these factors seem to be faded when we look after the valuation. So just due to the valuation perspective, we are recommending booking profit at the current price.
Okay, all right. That's the view on Allied Blenders. Well, for the markets, just want to point out that, we have the Nifty, which is down around 33 odd points. We have the Sensex, which is down around 111 odd points. If you're talking about specific stocks which are managing to, however, buck the trend, is ONGC, which is your top gain on the Nifty. That stock has rallied around 47% on a year-to-date basis and is up around 4.7% today as well. And a lot of the FMCG insurance stocks are doing well. So ITC, HUL, both those counters are up around 1%, 1.5%. We have good traction coming in a couple of these IT counters. So Wipro, for example, is up around 1%. And even Tata Motors not doing too badly. So that's the entire picture on the gaining side. On the downside is Divi's Labs. That stock is down around 3.8% today. Maybe there is that anticipation on export data which is keeping the stock a bit subdued. We have Titan post the Q1 update, which is sulking. So that stock is down around 3.8%. And BPCL, JSW Steel are a couple of other losers in today's trade. But would you have a view, Astha, on Titan?
So looking after the updates right now, what we are thinking that maybe the stock may show some sort of downside momentum at present moment of a time, but really we want to see the results. So at presently we are recommending hold, but no fresh buying is recommended from our side, looking after their updates. But yes, a hold can be maintained and then a position can be reviewed once again after the results get.
Okay, all right. And technically, any view on this counter, Ashish?
Yes, if you look at Titan, the overall stock, we can clearly see some strong selling pressure here. And interestingly, the stock has not done much over, if you see past few months also, when the index is touching the lifetime high levels, the stock is making lower high, lower low. So there is definitely pressure over the short term. And unless we can see the gap of today is filled and the stock moves back about that 3,290, I think it's better to be on the sidelines. Once it manages to break back about 3290, we can expect the up move to continue towards 3600 levels. And on the support, as far as support is concerned, the low which was formed on 4th of June for the stock was around 3055. So that remains a very important support at 3055 level.
Okay. All right, so that's on Titan. Well, for the markets, just just reflecting a little bit on the broader markets, we have IRFC, IFCI, which are really showing a lot of volume and price action today. So both the stocks are up anywhere between 6 to 6.5%. Remember, IRFC has already gained 100% this year, and IFCI is up around 122%. So building on those kind of gains. In fact, add BEML into that list as well from the defense space. That stock is up around 3.5% and has rallied a cool 85% on a year-to-date basis. So that stock doing extremely well. BEML Land, giving it company, is up 2.5%, rallied around 55% this year. But that's all the time that we have on the show. But do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.
So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
This
discounting is high there, but then the Nikkei is lower right now as we speak. The Taiwanese index up 1%.
Expectations from the upcoming budget, which is scheduled for July 23, and budget session will be starting on July 22.
Big data point which markets were awaiting was the US jobs data, and that had the potential to move markets. Well, it did.
I think this quarter is seasonally weak quarter, right? As we have seen in past as well.
The first rates are going to come up. It's a flattish start, absolutely flattish start.
I think one thing that we have seen consistently play out over the last 2 years has been a big re-rating in the market across the board.
I think now we are in a quite comfortable situation as far as the rainfall is concerned across the country.
The markets per se are very, very quiet. Thanda, you know, as you call it, after last week.
For the markets, as we've been pointing out, it's a down day. The Nifty is down 50 points. We have the mid-caps which are underperforming.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, it's quiet out there, very, very quiet out there. 20 points lower is what the Nifty is trading down by. This is a Monday afternoon. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell, last hour coming up. I'm Prashant, with me, my colleagues Rima and Nigel. Guys, good afternoon.
Hi, afternoon. You know, the Nifty's moved in less than a 0.5% range.
Yeah.
And this was even the trading session on Friday. Very, very quiet, ranged, and another one.
Well, that's right. And in fact, I think HDFC Bank still is under some pressure and Reliance Industries is high. So I think both of them on the opposite ends of the spectrum, both those two heavyweights.
Yeah, cancelling each other out.
Yeah.
Because, it's not as if one is overpowering the effects of the other. And it's not very much to show for it as you sort of approach the last hour of trade. So the Nifty is at about 24,300 and it's lackluster for most parts. So flat to slightly low, not just the Nifty, you look at the Nifty Bank, you look at the mid-cap index, small-cap indices. Actually, broader market breadth has been negative since the morning, and it's almost about 2:1 in favor of declines, and it's been that way. Now, FMCG and PSU stocks, but not the banks, PSUs, but not the banks, mostly railway and the infrastructure PSU names, those are higher, FMCG is higher, some business updates, etc. coming through. PSU banks are in a marked way lower. Metals are under some pressure. And I think you've got pharmaceuticals, which have done well recently, which are taking a little bit of pressure off. I think for the Nifty, as long as you hold the 24,300 mark, I think one can think about higher levels. Otherwise, you've got to start to look at some trailing stops. Maybe start with the 20 hourly averages, which the Nifty gets to before we see any further moves. So, but for now, we're holding above the 24,300 mark. Let's see how the session progresses. Rima.
Well, the small cap index is flat, though the mid cap index is down 0.4% after 3 days of gains. Last 3 trading sessions, the mid cap index was higher, so today it's retreated a bit. In PSUs, ONGC is having a fantastic session. Today, ONGC is the top gainer, a 4.5% up move. It rallied even on Friday. On Friday, we said, well, crude prices have gone up, but today crude prices have come down, and ONGC continues to be the top gainer on the Nifty. That's the 2-day chart on ONGC. Big move seen over there. And Wipro is seeing buying. While the rest of the IT stocks have started consolidating after last week's big gains, Wipro continues to see buying interest, and in the last 1 month, Wipro has seen a gain of close to about 12.5%. So that's a big mover. Reliance Industries is doing well. And in the FMCG basket, pulling up the big winners, ITC, HUL, Nestle, all these 3 stocks are up more than 1%.
All right. Well, let's get straight to the action then and find out how do you trade the final hour of trade today. Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. Good to see you in. How would you trade the Nifty? Nifty is down close to around 15 points. And also tell us about the crucial level on HDFC Bank, because that stock is down 7% in a matter of 3 sessions.
So, Nigel, I think, I've been advocating this, that avoid trading the index. In fact, my view is that we might go sideways and consolidate. But as long as 24,120, 24,100 holds, I think we're not in danger of a big decline. So I think it will be a market which might just do some kind of consolidation because we've had a good rally. Last few days, the market has continuously made higher highs. And since I think Friday, we have kind of gone into a sideways mode. So I think that mode might continue. On HDFC Bank per se, I think, the stock is now at support levels. I think today's low is a very important area, 1620 actually, but 1627 is today's low. So as long as it holds 1620, I think good chance that we'll see a bounce back to about levels of 1680, 1700. I'm not sure of a move beyond that because the fall was very steep and a vertical fall. So it will need a lot of sideways action. So if somebody's stuck, I think, try to exit around 1700, 1680 zone or keep a stop below 1620. On the stock side, FMCG continues to be my favorite. So I have a buy on Colgate with a stop at 2920 and look for a target of 3020. And Divi's Lab is, I think, after a long time showing signs of a negative breakdown. So sell with a stop at 4,505 and a target of 4,350.
Thanks for that, Mitesh. We'll come to you for more. But life insurance companies are also in focus. They've reported their business updates for the month of June. Yash is here with details. Yash, take it away. What looks strong? What looks weak?
Well, Prashant, as far as the industry is concerned, the numbers have been very consistent for the last 1.5 years. And I'm saying this after a very, very long time. The start of the month for the month of June happens to be HDFC Life Insurance. Strong premium growth, strong APE, annualized premium equivalent growth. And that too over a very strong base of June 2023. So June premium up 8%. The base here is a growth of 33%. First quarter premium up 9%. Total APE has grown at 27%. The base growth was 28%. Retail APE growing at 34% over a base growth of 28%. This is followed by ICICI Prudential Life Insurance. Good growth over a strong base. June premium growing at 14%. Base is a growth of 23%. First quarter premium growing at 24%. Total APE growing at 13% over a base of 41%. Retail APE growing at 28%. Base of growth of 12%. Max Life Insurance, it's a moderate growth for the company in the month of June over a strong base. June premium is down 6% over a base growth of 45%. First quarter premium up 12%. Total APE growth of 18%. Retail APE growth of 22%. SBI Life Insurance, after some time of a good run-up, it's a weak month for that company over a weak base. So again, double whammy for SBI Life Insurance. June premium growing at 28%. The base growth was a fall of about 13%. First quarter growth of 13%. Total APE growing at 17%. Retail APE growing at 18%. Finally, LIC, June premium growing at 14%. First quarter up 28%. Total APE up 21%. Retail APE up 13%. So in the order, HDFC Life followed by ICICI Prudential Life are the two strongest companies for the month of June.
Okay, all right. Thanks a lot for that, Yash. Well, that's clearly the big stock that we're looking at. HDFC Life explains why. Once that quarterly update did come out, we saw the stock move from around that 600 to around 620 rupees. Deepan Mehta of Alexa Equities is with us. Hi, Deepan. Good afternoon and good to see you in. What do you make of this one? Yash clearly is indicating that, in fact, these numbers look much, much better. The growth on all fronts at around 620. Your view?
Yeah, good afternoon, Nigel, and thank you for having me on your show. I think spectacular numbers coming in from all the life insurance companies, especially HDFC. And these are great long-term businesses. I think good defensive businesses also. So if you are getting a bit skeptical about the market and expect a correction, then you may be overweight life insurance companies. But I saw the full show, the full report on insurance companies. And what caught my eye was LIC, that even on such a large base, they managed to grow 21%. And mind you, valuation-wise, it is very, very cheap. At the same time, it would have made stupendous gains in the stock market over the last year or so, all of which will get captured in the enterprise value. So as a measure of disclosure, of course, we and our clients are invested. But I think that's really a good opportunity for investors on a trading as well as long-term investment point of view. And in any case, PSUs have been the flavor of the market and are still so. So if you're looking for a good, solid PSU stock with good growth prospects on the trading side and investment side, then I would go with LIC. Although I think HDFC Life also is a great company and it's created a lot of wealth for investors and very well run. But I think the risk return favors LIC more than HDFC Life.
Got it. Let's talk about the railway stocks, because as the union budget nears, all the railway stocks are buzzing and seeing some very large price and volume action. Vivek joins in with more details. Vivek.
Well, that's right. The sole focus and the sole reason why we are looking at the railway stocks today has been the kind of stock price movements that we've seen, especially in the last month. And in fact, for the last year and a half, they have been in flavor. First, let's have a look at the 1 month moves. The three stocks that we are focusing on today are the railway, PSU, EPC companies. So that's RVNL, IRCON and RITES. RVNL in the last month has given returns of close to 46%, IRCON close to 28% and RITES close to 20%. In the last year, RVNL is up 4.5 times. IRCON is up almost 4 times and RITES is up 2 times, and this we are talking just in the last 12 months. So looking at the valuation, so what we've done is there aren't too many sell-side brokerages that actually cover this particular space. So the three stocks that we are looking at, that's RVNL, IRCON and RITES, all three of them have been covered by IDBI Cap. IDBI Cap, FY26 estimates, when you're looking at the EPS estimates over there, RVNL trades at 61 times FY26, price to earnings. IRCON trades at 32 times FY26 price to earnings, and RITES trades at 34 times FY26 price to earnings. So 2 years forward too, these stocks appear to be quite expensive. Let's have a look at the order books and the pure fundamentals of the company and what is the guidance that they've given as far as FY25 is concerned. RVNL currently sitting pretty at an order book of close to 85,000 crore. Company says that at the end of FY25, they should be at an order book of close to 1 lakh crore. However, remember, they largely work on low margin businesses. So what is RVNL saying? Order inflows for FY25 seen in the range of 20 to 25,000 crore. Revenue growth seen at just over 5% over FY25. PAT growth seen at 10 to 15% over FY24 levels of around 1,550 crore. IRCON sitting at an order book of 27,200 crore. Revenue growth seen flat for FY25. Order inflows of close to 10 to 15,000 crore. If that fructifies, FY26 revenue growth seems much better of close to 10%. EBITDA margins seen maintained at the FY24 levels of 7%, and PAT margins, again in the range of 7 to 7.5%. And lastly, coming to RITE, the company doesn't really give a top line guidance given the fact that they're largely focused on the bottom line. That's what the company says. Order book at 5,700 crore. Top line guidance, they haven't given. EBITDA guidance, what the company says is that 25 to 27% is what they will continue to maintain. PAT margin guidance of close to 20%. Remember, FY24 PAT was close to 495 crores. So that's what they attempt to maintain as far as FY25 is concerned.
Okay, thank you very much for that comprehensive link. Dipan, any railway stock in your portfolio that you hold right now, or you did and now you've gotten out because of the run-up?
No, Rima, missed that one completely. It's all because of experience and baggage. These companies never really over the past 25, 30 years delivered any kind of decent returns. So generally avoided them. But, surprise, surprise, these stocks have really turned out to be great multi-baggers. And I don't think we have any of these stocks which we had. So from an investor's perspective, if you're holding these stocks, then great. You can take a pat on the back and remain invested. There is a solid bull market taking place in all these companies and defense PSUs as well. Where it will take them, who knows? So remain invested, but these are moving trains. They're extremely expensive. And unless you're a trader who can get in, get out easily, you can trade in these stocks. But I'm not sure from a long-term investment perspective, 3 to 5 year horizon, these companies can repeat this kind of performance or even outperform the broader market indices. But that's my judgment. And I stand to be corrected if the performance is exceptionally good going forward.
Dipan, there is 10 days to go for the budget, right? From where we are now. Anything which you think we can see some asymmetrical moves? So there was, for example, on Friday, the NDA ally Chandrababu Naidu met the Prime Minister, met other ministers, etc. And reports say that he's basically demanded a package of about close to 1 lakh crores, largely towards building, the new capital of Amravati. It's been sort of, I think it's taken as a given that a package is coming for Andhra Pradesh, not just Andhra Pradesh, but for Bihar as well. Nitish Kumar, during that swearing in, before the swearing in, actually stood there at the dais with everybody around, said, well, this should be done now, a special package for Bihar. Not Bihar, but the Amravati project, and maybe if that gets kick-started, anything that comes to mind from a stock market perspective?
No, Prashant, I mean, I don't remember last year's budget. I don't know whether you remember. Even the interim budget, we don't really remember. It's all about, capital expenditure and higher allocation towards all the various schemes. So it'll be business as usual in this budget as well. It's more of a mission statement than actually a budget. But yes, I think if you're going to see enhanced construction activity in Andhra Pradesh and Bihar, then certainly the engineering construction companies, companies engaged in road construction, airports, railways, infrastructure projects, especially south-based companies may benefit in terms of higher order flows once the funds actually flow to the state government. And also, I think real estate companies, especially south-based real estate companies, they may also benefit because of higher better opportunities and higher prices in around that region. But these are micro plays. And specifically on the budget, I think there's really nothing that investors should bet on and invest from a point of view of that this particular company will get a benefit from this budget. I don't think so per se. Last few budgets haven't really brought out any significant winners, which you could have predicted prior to the budget or because of the budget. So just need to keep that in mind, that it may turn out to be a non-event. A lot of positive statements will come through, but I don't think it's going to be very specifically causing a further buying trigger for the stock market as a whole or any specific stocks.
Well, the only sector I can think of. But there may be specific things, right? PLI announcement for newer sectors, but who knows? Housing perhaps is a theme which did well immediately after the election result. I mean, housing did quite well, and then it all tapered off a little bit. I don't know and of course, I mean, valuations there are not very expensive. So that's the starting point. Any thoughts?
No, I think that housing finance companies, there's an opportunity over there, especially low-cost housing and especially south-based companies. One which comes to mind is Repco Home Finance and some of the other companies over there. But real estate companies, I think, are fairly valued. No doubt, I think, their actual net asset value, enterprise value keeps on growing every quarter because of new projects which they are doing and increased momentum and higher sale value per square feet. So a lot of positive trends going for real estate companies, but look, these stocks also have generated superlative returns. There are a few multi-baggers over there as well. Again, a moving train. If you're invested, remain invested. But from a fresh investment perspective, I think wait for a 25-30% type of a correction.
What about Bajaj Finance? I know you've liked it in the past, and I think you own it in your portfolio, and you entered in at much, much lower levels. But after the strong Q1 updates, we saw the stock split, and the stock is still not back to its 52-week highs that it hit in October of last year. I think that was close to about 81, 8,200, and now the stock is down to about, I think it's close to, I think, about 7,000 thereabout. What's ailing Bajaj Finance other than the valuations, and what is it that the street didn't like in the Q1 updates?
Well, that I don't know what the street didn't like, but I'll tell you one thing, that a lot of investors have shifted away from Bajaj Finance to Jio Financial, and they feel that Jio Finance has got a far better growth trajectory, and they will eventually take market share from Bajaj Finance and some of the other NBFCs. They're competing in several financial products. They're competing head to head, and investors perceive that Reliance perhaps may have an edge because of its resources, because of its execution and its brand. I do not completely agree with that particular thesis. I do feel that Bajaj Finance is in a league of its own, and it will continue to grow at that 20% thereabout for next several years. And even if PEs don't get re-rated upwards, this is one company which can give a compound 15-17% type of growth rate at the bottom line, and similar returns can be expected in the stock price as well. So we remain fully invested and committed to Bajaj Finance. As you said, yes, it's a company in which we and our clients are invested. It's amongst the part of our core holdings. And it's just a matter of time before the new highs are created over here. It is a bit of an overearned stock also. That also, acts as a bit of a dampener. But let the numbers come through for this quarter and the next few quarters, and you will find the stock price to start moving in line with earnings growth.
Okay, all right. Dipan, I wanted to ask you about IREDA, IREDA. Just, I think, around 7 days ago, the stock was at around 200 rupees. We had the management, and they were talking about bright prospects. They also said there could be a follow-through issue in the second half of this fiscal. The stock in 7 days is up 25%. At 200 rupees, it wasn't cheap. but it's still at around 245 rupees. What's your view on this one? You know, there is that hope that in the budget, it'll get included under that section, which will give some kind of tax relief for all those that are investing in the bonds, both for HUDCO as well as IRDA. And the management seemed very, very confident as well. What would you do with both these two names? You've seen a big, big run in the last 10 days.
So I think one should remain invested. Both these companies, the shareholding pattern is extremely, I would say, tight and low floating stock. And even if existing investors, especially institutional investors, look to add even a little bit in their portfolio because of fresh inflows, these stocks tend to do well. But within the entire PSU NBFC space, I still prefer PFC and REC. I think from a valuation perspective, they are still attractive and there is scope for Ps to get re-rated upwards. Look, these companies haven't really done well in the past 5-10 years in terms of growth rates, but next few years could be completely different and you could expect 15-17% type of top line, bottom line growth rate. And NPAs have never been a problem for these companies because typically they lend to the PSUs or the government departments where there's a kind of a sovereign guarantee. So from that point of view, rather than IRDA or IRFC, I'd like to go with PFC and REC. I think risk return profile is certainly better over there.
We had Ashish Gupta this morning, who kind of echoed that same view. He was, of course, in his earlier avatar, a financials analyst, and he said, well, didn't name names, but essentially likes those names much more. I mean, the RECs and the PFCs of the world, not very expensive as compared to some of the others in that space, which of course are more pricier. Just a few sort of stocks here, but the 1600 stocks, 1600 stocks are lower, and you got about 950 stocks which are higher at this point in time. So market breadth is clearly skewed on the downside. And you got lots of names on the downside. Exicom is down 6. If you can just pull some of these names up, apart from, of course, the business updates, AU Bank, etc., which have been down. Elecon Engineering is down 7%. Huge volumes. Paras Defense is down 5%. ITD Cementation, we discussed this on Friday. It's done another 7 after Friday's 15% odd sell-off. Exicom is down 6%. Shakti Pump, which had a one-way rally, is down 5%. Basically, it's gone up every day, clockwork 5% on the way up. Today it's on the other side. Radico is down about 4%, 1643 or so on Radico. What else? Sharda, Motor, and a few others here. But then volumes start to thin out. You know, if you look at if you attach volume as a weight to which way the market is going, it is still with gainers because maximum lots and lots of volume on what is going up really. Midhani, which is Mishra Dhatu, is up 5.5%. That's essentially a specialized alloy maker and they supply to defense companies. There's a PSU that's up 5 1/3. Some of these REC PFCs we mentioned. Paytm has been jumping 8-9% today, 472. I mentioned HBL Power in the morning. Metro Brands has come off a little bit from the highs, but still 6% higher. There is Eveready Industries, which is up 13-14%. Anantraj is another one which is looking up. Small name, BL Kashyap, contractor based out of Delhi, 10% higher, 103 on BL Kashyap. Huge volumes. Alembic Limited is up about 8% and so on and so forth. And I'm barely scratching the surface here with what's going on. Deepan, any thoughts? Paytm, with the move that we're seeing right now. There was an interview, Money Control conducted an interview with the Vijay Shekhar Sharma. He said, I mean, of course, he essentially said that I'd like to turn this into a $100 billion company, kind of acknowledging the challenges which he's faced with the regulator, etc., etc. But that's the last I saw something newsy on Paytm, the latest rather. Your thoughts?
No, Prashant, I think the stock is getting interesting and it's gone through a lot of upheaval last 2-3 years or so, rather since listing. And whatever could go wrong has gone wrong. And now I think the strategy shifted more and more towards distribution of financial products. And that I think is very positive because the margins over there are exceptionally good. It's a low risk business. And it clearly rides the key strength of Paytm, which is having so many merchants and so many consumers on their platform. And I think the worst is over in terms of whatever subscribers they had lost, that is over and done with. And now they're getting back into in rising subscribers and increased users as well. I don't think the Paytm brand has taken as much of a damage because of the regulatory action as well. So from many angles, it looks interesting. It's a very aggressive management. And I think what they have in terms of actual users is quite phenomenal. So long as they can rein in their ambition and just stick to knitting, which is financial distribution of financial products and loan products and provide payment gateway, I think they are fine. They'll continue to grow quarter after quarter, year after year, and at some point of time may come solidly into the black, and that would take the stock price higher and higher. So don't write off this company. Keep tracking it, keep looking at its quarterly updates, and at some point of time, it will be in a sweet spot where there'll be good earning visibility, and that's time to take the plunge.
Okay, thank you very much for that. By the way, GAIL is moving up quite smartly. Pull up that intraday chart of GAIL. GAIL is up close to about 3% odd. And in the PSU basket, you also have RCF moving up and EIL. These are some stocks which are spiking up. Get into a break. Thank you very much, Dipan, for joining in. We'll connect with Amit Jeswani from Stallion Asset on the other side.
After 34 years, maybe this is the 100th product launch of my career at Bajaj Auto. And there is one person that I have never ever missed on a product launch occasion, but I felt that today I feel the absence of this person. This is a person who, brick by brick, built this wonderful company that we are all part of, called Bajaj Auto. This is a person who, on his broad shoulders for 50 years, carried the entire Bajaj group, not just Bajaj Auto. This is a person, I think you will all agree, who pledged his razor mind, his iron will, his very large patriotic heart to the cause of building Indian industry. On the side, he also served as chairman of Indian Airlines in the 80s, if I remember right. He was also for a long time a member of Parliament of the Rajya Sabha. And since he was my father, I saw him from very close quarters. And if I may say so, throughout his entire period of doing all of this, he is a person who slept very well at night, because he always said, I sleep on the pillow of courage and I sleep under the blanket of integrity.
Okay, welcome back. 30 points lower on the Nifty. We're at 24,292 at this stage, and looking pretty flattish all over. Broader markets also sulking. But as I read out that long list of volume-led gainers, just bubbling under the surface. The surface is a bit quiet. That's pretty much it. We have Amit Jeswani who is joining us now. He's founder and chief investment officer at Stallion Asset. Amit, welcome back on the program. Thank you very much for your time. Prashant this side. Before we go into sort of your view on the market, etc., with the budget around the corner, I want to just attack one sector. This is data centers. A lot of excitement around it, and people are thinking about what is the best way to get exposure. So last week, there was Castrol, which saw a very large move. And we were thinking about whether, it's higher lubricant sales. And someone said, well, it's data centers. Because, these data centers need coolant. And BP, Castrol's parent, makes coolants. And they're going to sort of get that product here, etc. We're trying to reach the management of Castrol. We'll have them and we'll put these questions to them. But fair bit of excitement. I saw a report around this. I remember you telling us that you have exposure to one company in that space called NetWeb Technologies. So if you want to just talk us through how your thoughts on this opportunity have evolved, and what do you make of it, and whether you found other ways to play this.
Good afternoon, Prashant. Thank you so much for having me on your show. So whatever I speak about, these are not stock ideas. These are just for education purposes. I'm a PM, like Stalin Asset. Is a PMS company. We keep buying, selling stocks all the time. We keep trading in, trading out. We do a lot of up and down. So these are not recommendations at all. But coming to your point, Prashant, yes, we do have exposure towards data center. And but see, Prashant, the thing is that stocks have moved up 50-70% in a quarter. So you might want to just so this is a theme which is getting hot by every passing day. If you see, this happened because of Nvidia. So whenever there's a global trend and stocks in the global market, like today, the largest company in the world is probably Microsoft or Nvidia. You know, they just keep going up and down. But there is a large bet that investors have made towards AI, data centers, and anything which requires a lot of calculations. And there are ways to play it. And there is Anant Raj, who's building these data centers. There is NetWeb, who's a software plus hardware provider. And then there are newer themes like Astral that you said that are coming. So investors, so nobody knows what these businesses will look like a few years from today. People typically in these high growth businesses, you take things six months, you take a view of every 5-6 months. And then you think that what the next 6 months or 8 months, you cannot have a 10-year view in these kind of stocks because nobody knows. There cannot be a 10-year-old AI company because AI was not there 10 years ago. So these will be new company in all these spaces. They will have explosive growth. And till the time they have explosive growth, typically the markets will keep bidding them higher. But yes, you have to just control your weights because the valuations are extremely high. So make sure that you're controlling your weights. Like if your weight is 3% and the stock has run up 50%, you may want to cut it down again to 3%. This is what we do. I'm just telling you what we at Stallion do for how we play hyperscalers because the growth is just too high in these kind of companies.
I remember, Amit, you're telling us that you generally take your large positions during the earnings season to spot those companies where you are seeing explosive growth. But tell us, this to the data center question, you own Anantraj and NetWeb in your portfolio as the companies with exposure.
We don't have Anantraj in our portfolio.
Okay. Got it. So just now going back to that point, right? Earnings season is when you assess companies where you are seeing growth momentum and what the companies have to say in the conference call. So in Q4, which were the companies where you've taken positions in stocks? Do you want to tell us a little bit about that?
So I had already told this, and these stocks would have already run up 50%. So we're taking old, I'm telling you, these are now 1 quarter old. 1 quarter looks like a long time these days because stocks melt up. So we're taking position in that one data center play. We had taken one mobile monopoly, like manufacturing monopoly, which is getting created. Sorry, today I'm not taking stock names because my compliance team has not allowed me to take today's stock names. So one mobile manufacturing, we had taken one AC manufacturing company. That has also gone up 50%. So it's been a super quarter for us, to be honest. There is nothing to complain. The AC manufacturing company, the summer kept getting better, and AC manufacturing. Just let's wait for the earnings season. There are conference calls where large cap companies like the Pepsi maker of India has said that they are running at full capacity utilization. The summer has been a rocking summer, but overall, if you ask me, Rimaji, the earning updates which have come till now in Q4, they've been of Q1, they've been horrible. Nothing short of horrible. I have not seen HDFC negative growth of advances. Titan doing 8%, 9%. I'm just telling you data. These are not opinions. I'm just telling you facts. But Titan doing 8% growth. It is looks like a very poor start to update season. This is not earnings season, but update season is extremely poor as of now, and I'm getting scared. And this is probably the reason why automatically, so we at Stallion, we are mostly 100% invested, but we might have come to near 10% cash holdings. And it has happened automatically. For us, cash is not a position, it's an outcome. If we are not getting newer ideas and our old ideas, we are not getting the same risk reward that we need, we automatically increase our cash positions. And as of today, we have cash positions of around 10% in the fund. And this is high for us.
All right, Amit, since you briefly mentioned about the quarterly updates coming in from Titan as well as HDFC Bank, well, let's get in Mangalam. He'll just give us a quick read-through on how Titan did. I think we have okay, right. We'll go to him in just a bit. Amit, the last time you joined us, you had mentioned a couple of sectors where you had a good amount of exposure. One was, I think, the capital markets place, which, if I remember correctly, it's around 10% of your total mix. Now, the street believes there are restrictions coming and there are some moves in that direction. Are you trimming your positions over there? That's the first part. And Polycab, I don't know how we could term it, the largest cable and wires player, so your compliance team is fairly comfortable. You all had 9.5 to 10% out there. The promoter entity came and sold a little bit. So on both these two, have you skimmed down on the positions?
On wires and cables, yes, we've trimmed our position size. So we got a decent, we sold it at better prices than what the promoters did. So, but we've trimmed, we still have a large position. We still have a decent size position, which is there. See, in building materials, the numbers which have come out till now, the largest structural steel player has grown at 9%. In the AGM of the largest plastic molding manufacturing company in the country, has said that they have said in the AGM that they've grown at 21% this quarter. So growth is going to be a very scarce element this quarter. I can tell you, Nigel, we keep finding growth. We are all day, we just keep thinking that what is that, and export data. We look at everything which is there, but we are not finding very many free hits or full tosses that because we have so much data. We have access to export data, website views. We just track everything which is possible. And I can tell you that even the largest beauty player which came with numbers yesterday, they just did a large investor large investor conference a few weeks before today. The numbers were like 22% growth is for us extremely weak because 22 is not to our standards. So we're finding it tougher to get high growth of 30-35%. The summer players will do very well this quarter. Capital market, to your second question, we have the largest commodity exchange in the country and we have one wealth management player. If you look at the largest, sorry, I'm not taking names, but the largest wealth management player, that is at 45p. The middle one is at 80p, and the player that we hold is at 25p multiple. And it's an MNC, the one that we hold. So hopefully we will get better multiples. We are just praying, to be honest, right now. But stocks have not made my capital market stocks. See, one way of me assessing that I'm wrong or right is both the capital market stocks that I have have not making new highs after Modi ji has come in. So both of them are lacking the market after 4 June. If you look at a stock exchange company, which is listed, the only stock exchange, that has fallen 30%. So on the 23rd of July, when the budget comes and something is not horribly wrong in the budget, then there will be light. But wealth management companies will not get impacted regardless. It's only on option trading. Yeah, and that too, that 1 hour weekly option, which the commodity company doesn't do any which ways. And the most important part is that public data of exchanges, which is there, shows that there is a 60-65% growth, which can happen in revenues of the largest commodity exchange this quarter. So 60-65% revenue, it's very tough to get growth. So that is why we are not selling the largest commodity exchange company that we have.
Okay, MCX. And you held Novama, I remember, Amit. Is that what you were talking about?
Yeah, we have that in our portfolio. But that has grown 51% last quarter also. And this quarter, if you compare Novama to all the peers, the valuations are half of the other players in the market.
You said there's an MNC wealth management player in your portfolio, or did we get that wrong?
Novama is owned by PAG. So
so you okay, all right. Got it.
So it's
got it.
Not owned by Indian promoters anymore. Indian promoters, there's a rumor in the market that they might exit. So I don't know the rumors.
Okay. Okay. Now, what about Angel, which you owned? You still own it?
No, we sold 2 quarters back. I told you.
Okay, that's your yeah.
We cannot take such large drawdowns, Prashant. Our ability to take drawdowns is we are like very poor with our drawdowns management, but we sold Angel out of our portfolio, I think 1-2 quarters ago. When, yeah. But
so if you're not finding, you're saying, you know, you are tracking everything and you're finding it hard, right, to find ideas now. I mean, that's a challenge, right? So how does one deal with it? I mean, because money is coming in. So what do you do?
Liquidity तुझे गिरने नहीं देगी, earning तुझे बढ़ने नहीं देगी. That is the state of market right now. Because we are also getting decent liquidity. But I need alpha. See, my alpha expectations is not like most people dream of 2, 3, 4% alphas. At least we dream very large of our alpha. So when I say I'm not getting full tosses, that means I might still get 20-25% CAGR opportunities, and I might say that no, I want more. Because see, we are going through a hyper greed stage, and my greeds have also changed. Right now, if someone tells me 20% a year, my analyst comes and pitches me a 25% returns, I may not like it as much because my habits have not been like the 20-25% CAGR for last 1-2 years. So that is probably the reason why I'm like, it can be an, you know, and this will be for all fund managers, not just me, that our return expectations have now moved to 50% in 1 year. Like I'm just telling you, and this is only bull market euphoria, I'm telling you, which is there in my mind also, that you want higher return expectations. And if the market stops giving us return, our return expectations will also come down and we'll be happy again with 20% CAGR. But right now, the stage of the markets that we are in, you want full tosses. And what I'm saying is we are not getting full tosses. When I say full tosses, means you're getting 50, 70, 80%. See, in bull market, you have to change your net worth. And if bull markets, your alphas are 2% or 1% or 3%, then you will very tough for you to get rich. But you also need downside protection. So you want highest returns, but also the lowest kind of risk. But if you don't change your net worth in bull markets, and these seasons don't come. See, if you look at all great investors, they have made all their fortunes in bull market. It's only one bull market that changes your entire lifestyle. What Warren Buffett said, you have to get rich only once. So that is what bull market does. And we are also trying to be greedy, but also have like risk at the back of our head. But right now, I want higher CAGR returns, which we'll do as good as market if we don't get this this like new alphas this quarter. But the whole idea is in this earnings season, that is where we do the largest churn, right? And that is where we get liquidity also. So let's see if this earnings season goes well. I'll be back to 10% alpha quarter.
You know, as they say, market ने हम सबकी आदतें बिगाड़ दी हैं, right? But when your analyst next time comes and pitches a 25 CAGR idea, please send him to us. if you didn't take him or her up on the idea. But good conversation as always, Amit, and I think makes sense. You know, to think about it slightly, you know, in a philosophical way as well. That in boom periods, and we certainly are in a boom period, you got to think slightly bigger. But of course, also, you know, in a risk-adjusted way as well. So you don't want to really blow up if things start to go sour, which at this stage doesn't look like that is the case. Thank you very much, Amit, for joining us with that perspective. Well, let's focus on consumer companies, and let's focus on Titan, which actually is lower. Amit was talking about that 8% growth and why he wasn't impressed. Let's get into the details. There was also details from the FMCG space, Dabur and Marico. Mangalam is here with all of that. Mangalam.
Well, you know, for Titan, the thing was that it's an 8% growth that the company reported. And as we speak, we're also getting the update on Senco, where the retail sales grew by about 11%, same-store sales growth coming in a lot higher, whereas they did Akshaya Tritiya growth of almost 21%. Importantly, if you compare this with Kalyan Jewellers, which showed a 29% growth, that one stands head and shoulders above everyone else. And as a result of which, people are looking at that versus, say, something like a Titan. Senco as well, at a much lower base, grew faster than Titan. And as a result of which, Kalyan Jewellers has spiked slightly higher as against Titan, which is currently lower in today's trading session. So, you know, it was high gold prices, lower wedding days and weak sentiment that impacted demand for Titan. The buyer growth was also in low single digits. Studded growth was moderately lower in comparison. That impacts their margins as well. As a result of which, there were a couple of downgrades. JP Morgan, for instance, downgraded the stock to neutral, lowered their EPS estimates by 5 to 7%. ICICI Securities as well lowered their EPS estimates by 5 to 7%, cut the target price from 3,400 to 3,200 as well. And Goldman Sachs as well as Morgan Stanley, both of them expressing concern about this quarter. So, Titan was not growing well on a high base on account of weak macros, but at a time when competitors who are priced much lower in terms of valuations growing much faster, the street saw maybe a case for a bit of a shift.
Mangalam, very quickly, if you could tell us, Dabur and Marico, they are rejoicing in trade though. A couple of quick points, why they're doing well?
Well, why they're doing well is because both of them saw sequential improvement in volume growth, and they see further improvement down the road as well. So those are factors which are doing well for them. Additionally, even as there has been some green shoots of recovery in rural and volume growth has come by, there hasn't been much let down in terms of input prices as well. Both the companies have seen their operating profits improve higher than revenue, which implies that margins would improve for both of them as well. And that explains why Dabur is higher in today's trading session alongside Marico. Marico slightly higher because over the last 1 month, Marico has actually underperformed Dabur.
All right, Mangalam, thank you very much for that. So that is consumer slash FMCG in focus, Titan down, the others doing well. We'll take a break. We are back with some short-term trading ideas with the technical experts on the other side. Stay tuned.
That is how I remember it. His unapologetic Bharat Bhakti, and I would like to remember that today when we are launching the world's first something. His unapologetic Bharat Bhakti, via the so-called, at that time some of you may have heard, Bombay Club, which was much derided in the 80s and the 90s. Today, sir, it finds expression, it finds voice through expressions such as Make in India, Atmanirbhar Bharat, Vocal for Local. So that makes me feel that perhaps being misunderstood is the cross that the forthright must sometimes bear for being ahead of time. Freedom from the paradoxically unsustainable subsidies that government sometimes employs to promote sustainable technologies. How sustainable technology can be promoted by unsustainable subsidies, not only in India, the world over. Our friends from the media, I am sure they are aware of the chaos which is there across the world as far as subsidies for electric vehicles, etc. are concerned. And I say to customers who may be listening in right now, that we all assure you, we are with you through the life cycle of this product, through all the use cases of this product, through all the allied considerations of this product. Sir, शायद इसको हमारा बजाज की गारंटी ऐसा कह सकते हैं. We want you to witness today our interpretation of the avatar of freedom. And I am sure you will like it, sir, because it offers freedom from petrol imports, freedom from petrol emissions, freedom from petrol prices, freedom from range.
Well, SpiceJet is a stock in focus as they've not deposited Provident Fund contribution towards its employees for over 2.5 years. We have Madhya who is joining in to fill us in with further details on that front. Madhya, take it away.
Well, Nigel, not depositing mandatory statutory dues is a clear sign that the airline is struggling with cash. We have been reporting on how the airline has been defaulting on various payments. CNBC-TV18 had also sought a response from SpiceJet on 28th May on the delay in PF deposits, and the airline in its reply had said that it is regularly clearing the dues with a lag of few months. But now, according to the Employees Provident Fund Organization's reply to CNBC-TV18's RTI query, SpiceJet has not deposited non-deposited dues since January 2022. EPFO said the last deposition period of PF contribution by the establishment is for the wage period January 2022 in respect of 11,581 employees. The Provident Fund body also said that it has sent notices along with summons under Section 7A of the EPF Act and MP Act 1952 against the establishment regarding non-deposition of PF contribution. Now, in March this year, the EPFO had warned companies of damages if there is non-compliance in PF deposits. The employer will have to pay an interest of 25% for a default of more than 6 months. Now, remember, on the 7th of June, CNBC-TV18, upon receiving a confirmation from the Airport Authority of India, had reported that SpiceJet is operating on cash and carry mode at all its airports in India. The airline is also facing various litigations regarding non-payment to lessors in different courts. So, yes, signs of severe liquidity crunch in the airline. CNBC-TV18 has sent a query to SpiceJet regarding the EPFO payments. The airline is yet to respond to our query.
Okay, thank you very much for that. Mitesh is now with us for a few BTST calls. Mitesh, what has caught your attention in the last 30 minutes and what will the calls be?
Yeah. So I have, in fact, one buy and one sell. I think Gas Authority is closing with full strength. So GAIL can be a BTST with a stop at 227.5 and look for a target of roughly around 235 here. While on the selling side is the two-wheeler name, I think, I got it wrong. Just give me a minute. This got stuck. Yeah. Sorry. We'll take a BTST on GMR Infra with a stop at 97.90 and a target of 102.
Okay, all right. BTST on GMR. Yeah, all right. That's the one that's moving at large volumes at the high point of the day. Thanks a lot for that, Mitesh. For the time being, we'll slip into a short break, come back. More market talk lined up on the other side.
Concerns, because it's not only the world's first CNG motorcycle, it's the world's first hybrid CNG motorcycle technology.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem?
Welcome back. The Nifty's climbed above 24,300. HCL Tech has started moving in the IT pack. Through the course of the day, it was only Wipro, but now HCL Tech too has a gain of 1%. And in the private sector banking names, Kotak Mahindra Bank has come in for some buying interest. Let's get you some market opinion. We're just counting down to the close of today's day. Axis Mutual Fund CIO Ashish Gupta shared his view on the market trends. He believes that market multiples are elevated. Listen in to an excerpt from that conversation.
One thing that we have seen consistently play out over the last 2 years has been a big re-rating in the market across the board. I think from here on, our focus is primarily on earnings. We believe stock performance will actually track more closely the earnings and the earnings delivery that come through, because the valuation gaps in the market have narrowed down. It is kind of very important to be in companies, in sectors where one can be confident about earnings, both in the short term as well as medium terms. Because really the market multiples today are more elevated than most times in history. Broader consumption still has not picked up, and expectation is as government spending picks up, you will see a broader revival in the economy. Very few pockets of value that is left in the market. I think the financial sector is one of them. It is one of the few sectors that is trading at multiples lower than historic trading multiples. Most other sectors today are trading 1 to 2 standard deviations higher than historic trading multiples. So I think financial is one sector. I think what has been weighing on the sector, and particularly banks, is that earnings growth is expected to slow down this year. And deposit growth in particular has been soft.
Just take a look at the markets. We've moved into the green, so we've recovered this 30-point loss that we saw. HCL Tech is one of the big movers, but that doesn't have a very large weight on the index. ITC, that's come back, and that's come back strongly. It explains why the index has seen a good recovery, currently at around 445 rupees. Anand Tandon joins us on the show. Hi, Anand. Good afternoon. What about ITC? You know, the street was bracing by for that corporate announcement. After that, we saw the stock just consolidate in that range, 420 to 440. It appears last few sessions there has been delivery-based buying and it's been moving up. Your view at 445?
Remains among the cheapest stocks around. And after the split, I guess you will get a cleaner or more easily analyzable or attributable numbers coming through various of the companies that will form. I would expect that, you know, it's not going to be something which will set the house on fire, but at the same time, it's a good defensive play, and the irrespective of what happens in the budget, etc., you would expect to see that the margins, especially in the cigarette business, will continue to do reasonably well. So I don't see any reason why one should be having any fears about ITC in general.
Anand, afternoon. Thank you for joining in. So what catches your fancy? Because you've always been wary of stocks with premium valuations where expectations have run up too much. So currently, where are you comfortable? Any stocks, sectors, themes that you'd like to highlight?
Nothing that is new. The same old themes continue to do reasonably well in terms of valuations, which means that they haven't performed that well in terms of the market, which is essentially the financials. I think among the large sectors, that's the one sector that continues to remain relatively cheap. There are issues, no doubt, around the fact that deposit growths have been slow. Credit growth has been high. Most of the frontline companies, or many of the frontline companies, have credit deposit ratios which are beyond regulatory pleasure, and therefore there is some pressure on reducing the book size. But with all of that, the fact of the matter is that, you know, that is probably one of the sectors that is still able to show some growth without necessarily getting into a territory in terms of valuations which are mind-blowing.
Anand, from your where you stay, there was news on Friday, and I was asking this to someone earlier that Mr. Chandrababu Naidu is asking for a big package, which most likely he will get to build that capital. Any not ideas to play? I mean, markets smart. From the time that this new government came to power, a lot of stocks have run up, etc. But any thoughts around this, if this were really to become a reality? Because, people are factoring it, and it'll come, not just for Andhra, but for Bihar as well. A package.
Prashant, I think the package will not come in the way that most people think. First of all, there is a difference between Telangana and Andhra. Where I stay in Hyderabad is now Telangana. And to my view, Telangana is now fairly in a fairly tight spot as far as their own financials are concerned. So it's been a state which has done exceedingly well in terms of growth for the last several years, because after the split, they got all the revenues and half the cost, and consequently were able to spend a lot of money in terms of various projects. That is now over, and now it's a very heavily leveraged balance sheet. So Telangana is not doing much. As far as Andhra is concerned, there is without doubt money that will come from the center. But I think the way it will come is typically in the form of some infrastructure projects, which the center will take up instead of the state. There is the chances that you will get something like a special package is very unlikely, for the simple reason that that will create a problem for all other states, which will also go out in demand. And two, the amounts are not very meaningful. If you take Telangana as an example, the total amount of central government-sponsored project, the amount of money that the state gets is 6,000 crores. And if it goes from being special status, it will go up to 9,000 crores. That means 3,000 crores additional. That's not going to fill anybody's stomach. So, you will, on the other hand, one, greater outer ring road, for example, is going to cost you 14,000 crores, which the center is willing to do. So I think that's the kind of thing. So the best way to play it would be to have infrastructure. After all, Amravati, all it needs is a few, some road around that place for the valuation of Amravati land to go through the roof.
Anand, thank you very much for joining in. Just about 2 minutes left for markets to close. The Nifty is closing in the green above 24,300. So managing to eke out a little bit of a gain, up about 13 points after being down nearly 80 points at the session lows. The mid-cap index, though, ends in the red. The advanced decline ratio negative, 2:3 in terms of a ratio between the stocks gaining versus the stocks losing. Sectorally, on the way up, FMCG did well, 1.5% on the back of positive updates from Dabur Marico calling out a rural recovery, pickup in demand quarter on quarter. CPSC index, the Nifty CPSC index up 1.3%. Names like ONGC, railway stocks higher in trade, but not the PSU banking index. The Nifty PSU banking index down 1.5% as we got disappointing updates from Bank of Baroda, Union Bank and others. And IT too managed to close up in the green, and some buying emerged in names like HCL Tech, Wipro towards the end. And Reliance Industries was also a big contributor.
Well, railway-related names, Rima, as you mentioned it well, RVNL, IRCON, Texmaco Rail, all of them up between 5 to 15%. And fertilizer-related plays as well did do well. RCF, NFL, both of them up more than 10%. We had highlighted at around 155 rupees a month or so ago that RCF was seeing a fair amount of delivery-based buying. IRDA continues in one direction, which is northward. That stock was up close to around 8%. On the flip side, you had stocks like Patel Engineering that were down close to around 10% because of the untimely death of its promoter, Mr. Rupin Patel. So that's why that stock was down 10%. You had, quarterly updates that came in from Bank of Baroda. So that stock was down close to around 4%. And Vodafone Idea went all the way to around 18, but it's quickly pulled back to around 16.5. So some kind of profit taking from the top is what we're seeing on that one as well. For the time being, though, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.
Dr. Saneen, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume.
It's a range-bound start to the week on Dalal Street. The Sensex and the Nifty end absolutely flat. Mid-caps relatively underperform. Banking stocks end weak while FMCG is at pack gains.
Titan among the top Nifty losers after reporting a below-par performance in Q1 on the back of weak demand, whereas FMCG stocks gain after Marico reports an uptick in volume growth. Dabur sees improved demand in rural India. IMD's forecast of better-than-expected July rainfall aids sentiment.
Banking stocks react to weak first quarter FY25 business updates. Bank of Baroda corrects after registering its weakest deposit and loan growth in 12 quarters. AU Small Finance Bank falls almost 5% after deposits decline in the first quarter. Hello and welcome to a fresh new edition of Markets Forward. It's been a flattish kind of a day, but only if you want to look at the indices, which you should not do. We'll talk more about that. This is your go-to program where we aim to get you everything you need to know as you prepare for the next trading session. I'm Prashant. With me, my colleague Rima Chandul. Hi.
Hi, second day of consolidation for our markets, but we'll talk more about it in the next 20 minutes. We've got all the big news, the key developments in Dalal Street, top corporate voices, the events to track ahead. But first, the day's market action. Very quiet. The Nifty's moved in a 100-point range. That's about it.
Yeah, so indices were flat, Rima. But I think, it was bubbling under the hood, under the surface, because, again, it's all about mid-caps and small caps and micro caps, and the story continues. In the morning, I was highlighting how over the last 1 month, from the close of the election results day, that is the 4th of June, mid and small caps and micro caps have done between 20 and 25%, the indices. And that is where the real action continues today as well. So not very much at all on the Nifty, or the small cap index, or the mid cap index was down slightly, and so was the Nifty Bank, but more flat than anything else, but lots of action. PSU names, especially in the railway pack, and we'll talk more about that in just a bit, in fertilizers, infrastructure. That was a pack where there was a lot of action and activity. Now, PSU banks were under pressure, and of course, maybe thanks to some of these business updates. Metals as a pack was under pressure. Real estate was under pressure, and pharmaceuticals. But these are, when we talk about these sectoral indices, they're made up of sort of larger names. And what I'm trying to say is that the action really is if you have to go down the market cap curve, and that's where, the real sort of play was going on, and big volume-led gains in a long list of names once again today. Rima.
Well, even in the large cap space, there were quite a few interesting stocks moving up. So ONGC went home as the top Nifty gainer. FMCG, of course, we'll talk more about it. The Nifty FMCG index was the best performing sectoral index. And there you had names like ITC, HUL, Tata Consumer, Nestle. IT2 saw some buying. Remember, earnings kickstarts on Thursday post-market hours with TCS. So in the beginning of the trading session, it was Wipro, and then HCL Tech also joined in towards the end. The PSU banking, though, was under pressure. The Nifty PSU banking index was down close to about 1.5%, with names like Bank of Baroda, Union Bank under pressure. But let's also tell you what we have for you on our show today. We start with the top movers and shakers of the day. Vivek is there. Lots of business updates came in from FMCG stocks like Marico and Dabur. We'll get you the key reasons behind their up move. We also delve into the key market events to watch out for tomorrow. But first, to the big movers. Vivek, it's over to you now.
Well, thank you so much for that. As you mentioned, today was the day where you actually saw quite a lot of the FMCG names do very well in the session. So the entire FMCG pack, most of them that came out with the operational updates as far as Q1 was concerned, and even some of the names, that are yet to disclose their Q1 quarterly performance. So have a look at names like Dabur, Marico amongst the top gainers today. ITC, HUL also did quite well, and Adani Wilmar, very strong update coming in there. Stock cooled off from the highs, but still ended over 2% higher. The second stock on the radar was one from the life insurance pack, HDFC Life. Very strong operational update coming in as far as the month of June was concerned. Stock ended near the high point of the day. The other set of stocks that we were talking about is the entire railway PSU pack. All of the stocks continued their move higher. In fact, we also went ahead and did an analysis about how all of these stocks currently are trading at significantly higher PE multiples compared to where they were even just a couple of months ago. The next stock on the radar was Kalpataru Power. A very interesting note coming from Investec today on the entire power as well as the power utility space. Stock cooled off towards the end of the session, but a buy rating coming in over there as well. On the other hand, some of the stocks that saw some weakness in the session today. First on the list was Bank of Baroda, almost 4% lower, ending near the low point of the day. A weak operational update, especially when you're comparing it to the other banking peers. AU Small Finance Bank, while the loan growth over there was not very weak, the street is concerned about the loan to deposit ratio at almost 93%, much higher compared to its peers. The stock lost almost 4.5% in the session. The third stock on the radar, one among the top Nifty laggards, was Titan. JP Morgan downgraded after the weak Q1 upgrade. A lot of analysts have gone ahead and given EPS cuts as far as Titan was concerned, especially the underperformance compared to Kalyan Jewellers. And lastly, the entire pharma pack today, all of them saw about a profit booking. Divi's Labs almost 4% lower, Mankind, Natco, Cipla Granules, all of them ended lower in the session today.
Okay, thank you very much for that. Anand Tandon and Shilpa Raut of Prabhudas Leeladhar are with us on the show. Anand, Shilpa, thank you very much for joining in. Anand, particularly want to talk about these railway companies. They've been a big beneficiary of the infrastructure spending, the expansion of our railway network. The order books have been swelling, but so are the valuations. Now, it's great if you already own them, but if you don't, is there any railway stock which still is okay, even if you have a long-term horizon, you're willing to hold on for 5 years? Would you bet on any railway stock?
Short answer is I would not. We are in a melt-up market. The market will give you an opportunity to make lots of money. Most of them are already priced to perfection and then some. You cannot expect that anything which is related to the government will continue to grow at 40% year on year for the next till perpetuity, which is what many of these companies are now pricing. So I would be very cautious of them at this level. However, as you mentioned, if you own them, stay on with some kind of trailing stop loss. At least they are not companies which are going to vanish overnight.
Shilpa, same question to you. Technically, any railway stock looks attractive, promising just over the near term?
Yes, Rima, I think IRCTC from the F&O pack is still looking very attractive. It can do 1100 to 1120 zones. As long as it is holding above 1020, I believe the stock is very well placed for that higher targets.
Okay, all right. Coming to you guys with more questions in a bit. But the stock of the day was, one of the stocks of the day was Titan. It ended with cuts of over 3% after reporting a sort of subpar performance for the first quarter. And Mangalam is here to tell us, some of the highlights here. Mangalam, take it away.
Well, if you look at the jewelry companies that have reported their first quarter update so far, Senco showed a growth of around 11% that came in today. Kalyan Jewellers grew about 29% in their India business that came in on Friday. And Titan over the weekend came in and said that their domestic jewelry operations grew at about 8% itself. And as a result of which the street thought that maybe, Titan's valuations, which are higher than the peers, and growth which is lower than the peers, could make it perfect for some profit booking as well. Titan stock is down 20% from the highs already, but still trades at a significant premium to the other listed entities. High gold prices, lower wedding days, as well as weak sentiment is something that Titan attributed the weak performance to, or weaker than expected performance to this time around. And brokerages believe that this will have a bearing on their margins as well. So JP Morgan has actually lowered their target price by about 5 to 6%, or EPS estimates by 5 to 6%. They've downgraded the stock. ICICI Securities too has cut their APS estimates by 5 to 7%. They've cut the target price from 3,400 to 3,200 as well. And Goldman Sachs says that key competitors have done much better in the first quarter, which is a cause for concern. And Morgan Stanley says their margins are likely to be lower by about 11, by their expectations of around 11% as well. And this, even as the management told us that they don't see the margin growing beyond 12% in the medium term.
Well, 5 straight days of losses now for Titan, and in that period, the stock is down nearly about 8-9%. But Mangalam, talking about the FMCG pack, Marico surged 4.5%, Dabur was up nearly 3%. What were the key highlights from what the companies had to say?
Well, for both Marico and Dabur, 2 things really stood out. The first one was that demand has improved quarter on quarter, more so from the rural side of things, and as a result of which the consolidated revenue growth for both of these companies has been mid to high single digits as well, closer to mid single digits sort of volume growth coming in for both of them as well. For Dabur, what did well was their home care as well as healthcare verticals, and for Marico as well, we saw Parachute coconut oil as well as Saffola do well. The weakness that we saw for Dabur in some of their portfolios and for Marico in their value-added hair oil portfolio, they believe that will improve going forward, largely because they were seasonal in nature, or maybe the turnaround is around the offing. What also stood out for both of them was that the operating profit, despite increase in ad spends, actually grew marginally higher than the revenue, which implies margin improvement for both of them. So you would then say that why is it that the Dabur stock grew just about 2.8% in today's trading session with nearly 5% up move on Marico? That's largely because over the last 1 month, Marico as a stock had underperformed Dabur. So maybe some of that underperformance was getting undone in today's trading session. Their commentary bodes well for the entire consumer sector, and that's what showed in all the other FMCG stocks that did well today too.
Okay, thank you very much for that. Anand, the improvement in the rainfall in the month of July is also aiding sentiment. I think the IMD said that finally now we have a surplus. So it's just 1%, but at least the deficit appears to have been covered. Anything in the FMCG pack? Because, folks are betting on consumption as a key theme in the budget.
No, that's right. I mean, obviously, among the various sectors, FMCG is one which will perhaps to some extent directly benefit from uptick in the rural economy. And the one thing that you can be sure of is that there will be a focus on trying to uplift the rural economy given the election results. In that context, therefore, companies like Dabur actually are natural winners because, you are looking at a presence which is a little more dependent on the wider market rather than just urban India. So far, most of the FMCG and consumer goods have been focused only on the upper end of the income segment. And that has done exceedingly well because that was a lot more resilient. I expect to see that getting broad-based. So to that extent, the various FMCG companies will generally benefit. That is not to say that there is too much upside that you should be factoring it in the near term, given their valuation. But relatively, they are now looking somewhat more affordable.
Relatively looking a lot more affordable. Well, let's talk about banking updates, right? And this is again first quarter updates which came through from Bank of Baroda. We also had numbers coming through from AU Small Finance Bank. Both stocks were down sharply, 3-4%. Abhishek is here to tell us some of the finer details. Abhishek, take it away.
Well, to begin with Bank of Baroda, on a sequential basis, if you take a look, deposit and advances growth are the weakest in last 12 quarters. And they have lost market share as well because their YOY numbers are below the industry level growth. So take a look at the deposit momentum. It's up 8.8% YOY and a decline of 1.6% sequentially. Industry-wide, deposit growth in June was around 12% level. Domestic deposit is further weak. It's grown by only 5.3% YOY and down by 2% sequentially. The advances growth are about 8% YOY when compared to industry growth of 15-16% on a YOY basis as of Q1 that the banking sector has seen, and it's declined by 1.7% sequentially. In this, the domestic growth is about 8.5% YOY and down by 1.8% sequentially. In the domestic loan book, the retail portfolio grew really strong at 20.9% YOY and about 3.5% sequentially. So overall, the CD ratio has declined both YOY and quarter-on-quarter, and the domestic CD ratio, however, has improved YOY and quarter-on-quarter due to the decline in deposits. AU Small Finance Bank, now deposit growth is weak over here. Deposits have declined on a sequential basis. However, cost of funds have improved for them for the first time in many quarters. So deposits are down 0.5% quarter-on-quarter. We cannot compare the YOY numbers because there is a merger that's based into effect with respect to AU Small Finance Bank in this quarter. Cost of funds have declined by 7 basis points sequentially to 7.03% when compared to 7.1% in the previous quarter. Overall, AUM growth is at 3.5%, while the advances growth is a strong 5% growth. So if you take a look, calculate the CD ratio, that's on the higher side at 93% plus, so which leaves analysts with the worry that there will be further hike or growth for deposits, which can put pressure on the net interest margin. CASA is up 2.7% quarter-on-quarter, and CASA ratio has improved to 33% versus 32% in the previous quarter. Back to you.
All right, got that. Shilpa, any of these stocks with specific trades in the banking space?
Prashant, if you look at AU Bank, I believe, AU Bank here should, hold 620 levels. And if it does, then, you can again look for targets of 680 to 700. So my focus would be on AU Bank.
Okay, all right. We'll, more financials is what we're going to focus on, and this time from the life insurance space, because numbers for the month of June have come through, and it looks like HDFC Life has outperformed in the month of June after some time. Yash is here with details. Yash.
Well, Prashant, the numbers for the industry in the month of June have been very, very consistent to the past performance. The important point here in the month of June has been the performance from HDFC Life. It's a strong premium growth, strong APE growth over a very strong base. So June premium grew at 8% on a base of 33% growth. First quarter premium grew by 9%. Total APE grew at 27% on a base of 28% growth. Retail APE grew at 34% on a base of 28% growth. ICICI Prudential followed HDFC Life on the path to this strong performance. June premium growing at 14% on a base of 23% growth. First quarter premium up 24%, total AP growing at 13% on a base of 41% growth. Retail AP growing at 28% on a base of 12% growth. Max Life Insurance, it was a moderate growth for the company on a very strong base. So first June premium, that was down 6% on a base of 45% growth. First quarter FY25 premium up 12%, total AP growing at 18% on a base of 19% growth. Retail AP growing at 22% on a base of 12% growth. SBI Life Insurance, it was a weak growth for the company over a weak base. So of course, both ways it was negative. June premium grew at 22% on a base contraction of 13%. First quarter premium was up 13%. Total AP growing at 17% on a base of just 3% growth. Retail AP growing at 18% on a base growth of just 5%. Finally, LIC, again, weak growth over a weak base. So June premium growing at 14%. Base growth was a contraction of 21%. First quarter premium was up 28%. Total AP growing at 21% on a base growth of just 0.3%. And finally, retail AP, that growing at 13% on a base contraction of about 11%.
Anand, any standout stocks for you in the insurance pack?
Well, you have to actually take a basket of these. I think the sector looks quite interesting even today. Though obviously there has been a certain amount of run-up and the penetration has now become fairly decent. But that said, I think, there are still some different triggers. LIC is not going to show you higher profits because of the fact that they are selling more insurance. They will get higher contribution because they are allowed to charge another 2.5% extra. So you will get an earnings growth coming through that. State Bank has an infinite pool from which they can continue to sell. HDFC has been doing a spectacular job of being able to grow. So I think a basket of life insurance companies would be a good thing to have in the portfolio.
Okay, all right. Shilpa, any of these stand out to you from the insurance pack? Not really high momentum stocks by any yardstick, but is there a trade around here?
Yes, definitely. It is HDFC Life. HDFC Life, we have been recommending at around 600 zones in last week. And the stock has the potential to run more than 100 points from here because it has underperformed quite a bit. And it is just coming out of that consolidation of 610, 612 zones. So I believe a stop loss just below 600 should work fine. And you can easily see the stock moving towards 665 to 680, 700 zones.
Shilpa, also a quick word on any stocks that you would watch interestingly poised for tomorrow?
I would, look at Gujarat Gas. Gujarat Gas has given a good breakout today at the closing, and it should see, levels of 700 in a few sessions from here. So Gujarat Gas should be the focus.
Anand, RVNL, IRFC, IREDA, IRCON, RCF, MIDA. I mean, I'm just looking at some 10 names, all PSUs, right? And not just railways, but outside. Fertilizer was a big sort of mover. And throw in a defense name like a Mishra Dhatu there as well. So really bubbling under the surface, as I said earlier, with lots of momentum, lots of activity.
Well, that's right. I think farm input is something that I had mentioned a few weeks back as something that I think would be an interesting space to look at. Fertilizers hadn't done that well that much till then. Some of them have done better now. Pesticides, I think, is still a place where there is some upside possible. Generally, among the PSUs, these are probably, and besides the energy players, I think, you would expect, at least I'm kind of bullish that towards the second half of the year, you will find energy costs going up again. And many of the other players like, polymers, etc., already the prices are fairly high. And there is a shortage in the country now. So some of these commodity players can also do reasonably well. The more order-driven companies, I would stay away from.
Okay, all right. We'll leave it there. Anand, good speaking with you. Thanks for staying on. Shilpa, appreciate you joining in on the program today. Well, we'll just sort of play out some sound bites from the IMD. We had Mr. K.S. Hosalikar, the Deputy Director General of at the IMD, who says that July will see above normal rainfall. And he essentially said that monsoon rains now the momentum looks good for further advancement in the north and west. And broadly across the country, he's expecting good rainfall through July and then future months as well. Maybe a region or two in the northeast perhaps will be deficient. Otherwise, it should be a good monsoon season. Listen in, we'll take a break and see you on the other side.
We have said that July would be above normal rainfall. As a country as a whole, we have said that the forecast is the rainfall would be above normal. The distribution is also quite good, but within a couple of days, last 4 or 5 days, the monsoon is covered. And I think now we are in a quite comfortable situation as far as the rainfall is concerned across the country. As July, probably the August, September also could be, a lot of rainfall to be expected.
The rural problem would be slightly more because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more able to do what they have to do.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs...
Welcome back. You're watching Markets Forward. It's time now to get you some of the important corporate voices that we heard earlier today. So first up, Bajaj Auto. Rajiv Bajaj, MD of the company, said the company is looking to break even on their new CNG motorcycle within this fiscal year, and once they hit a capacity of 40,000 bikes per month. He also added the company currently has started with a capacity of 10,000 bikes per month. Rajiv Bajaj also went on to say the company's electric three-wheeler business is already profitable.
Well, we had Man Industries, which was also in focus. Stocks, of course, done very, very well. They had a big order win. The company gave CNBC-TV18 FY25 revenue guidance growth guidance of between 20 and 30% on a year-on-year basis. Margins, they're guiding for between 11 and 12%. The company said in FY26, that is 1 year ahead, revenues could be around the 6,000 crore rupee mark with margins at about 12%.
Next on our radar is Dhanalakshmi Bank. The management told CNBC-TV18 they expect their NIMs, net interest margins, to grow by 20 basis points to 3.4% this fiscal year. They expect the net NPAs at 1%, gross NPAs above 3% in FY25. The company also has the approval for a capital raise up to 300 crore rupees via a rights issue.
All right, Shilpa Medicare is the next company. We had a conference call and the management sort of talked about their CDMO customer, which on Friday had come out and said that they believe they've got a positive result from a very important clinical trial for a molecule. And this molecule is this drug, the tablets which are going to be produced are going to essentially be used to treat kidney disease. This customer has placed a binding purchase order with Shilpa Medicare. The cumulative milestone fees, according to the company, is $10 million. They say they will start supplies from the first quarter of FY26. The agreement is for 4 years, and the company plans a renewal for another 4 years, but with certain riders.
And as we wrap, we bring you some of the key market events to watch out for. Mangalam is standing by with the key events. Mangalam?
Well, tomorrow, we will have a couple of results that will come by. So we start with Delta Corp as well as GM Breweries. Delta Corp was one of the big movers in today's trading session. The last couple of weeks, we've also seen GM Breweries move high in today that trading period. So as a result of which, those numbers would be crucial to watch. Also, FMCG stocks were in focus today on account of Dabur and Marico's Q1 updates, and the street is awaiting updates coming in from Godrej Consumer as well. So that is a stock that will be on our radar. And plus, financials will be in focus. It's a Tuesday tomorrow, Nifty Financial Services expiry, and that will play out, especially in light of the weakness that we saw in the Nifty Bank in today's trading session. This would be important. Alongside that, we'll also watch out for a lot of these quick service restaurants and restaurant stocks, because NRAI will launch its India Food Services report in tomorrow at around 12. So any insight from that would be important to track from a QSR restaurant stock perspective. And then back in the US, we will keep an eye out on a bunch of events where Powell will present the monetary policy report to the US Senate Banking Committee. They will testify before the Senate Banking Committee as well. And the Treasury Secretary Yellen too will testify before the House of Financial Services Committee. So those are a couple of events that we'll watch out for from India and abroad.
All right, Mangalam, thanks very much for that. It's a wrap on this edition of Markets Forward. With that, we'll be